will be sending either a video or joining at a later stage. He's very busy in Parliament, as you all know. We have, of course, amongst us uh, Mr. Kunti, Dr. Kuntia, who's going to give us a keynote address and inaugurate this session. And we have uh, Mr. Prabodh Thakkar, Chairman, Global Insurance Brokers Private Limited, Mr. Joydeep Roy, Global Insurance Leader, PwC, Mr. Girish Radhakrishnan, CMD, United India Insurance Company Limited, Mr. Vipin Anand, MD, Life Insurance Corporation of India, and Mr. Nilesh Garg, MD and CEO of Tata AIG General Insurance Company. And from Fintech, I would like to just mention who are coming later on. From Fintech, Dr. Mrs. Arundhati Bhattacharya, Chairperson and CEO, Salesforce, ex-CMD, State Bank of India. Mr. Sajid Sivanandan, MD and Business Head, Google Play, Pay and Next Billion Initiatives, Google. Mr. Vivek Belgavi, Partner, FS Tech and India FinTech Leader, PwC. From Mutual Fund, we have Mr. Nilesh Shah, Group President and MD, Kotak Asset Management Company Limited. Mr. Navneet Munot, CIO, SBI Mutual Fund Limited. Mr. A. Balasubramaniam, CEO, Aditya Birla Sun Life Mutual Fund Limited. Mr. Ashutosh Bishnoi, MD and CEO, Mahindra Manulife Investment Management Private Limited. From MSME Financing, Mr. Binayfar Jahani, Business Head SME Solutions, CRISIL, Mr. Rajiv Anand, ED Wholesale Banking, Axis Bank, Mr. Manish Kotari, President and Business Head Corporate Banking, Kotak Mahindra Bank Limited. I'm very excited to hear these deliberations from all these people, and I wish the entire program great success and great participation from all of you. Wishing you all a fruitful and great day. And before I welcome Mr. Kuntia, I will just give a small introduction, and thereafter we will take others because he needs to leave early. Dr. Subhash Kuntia assumed office as Chairman, Insurance Regulatory Development Authority of India in May 2018. He has had a career in civil services spanning over 36 years. He has been Chief Secretary, Government of Karnataka, and before that he worked as Secretary, School Education and Literacy, Government of India in Ministry of Human Resources Development. He was appointed to the Indian Administrative Service in 1981 and belongs to Karnataka cadre, the Government of Karnataka. He has served in various capacities in departments of finance, revenue, personnel, urban development, rural development, and public works and ports. In Government of India, he served in Ministry of Finance, Ministry of Human Resources Development, and Ministry of Petroleum and Natural Gas. He also served as government nominee director on the boards of Indian Oil Corporation, ONGC, and Hindustan Petroleum Corporation. Dr. Kuntia is an alumnus of IIT Kanpur, from where he did his post-graduation in computer science and physics. He has a PhD in economics and is also a law graduate. What else can we expect from one person? So much of education, Dr. Kuntia. We are so impressed with all your degrees. I mean, every aspect of in Indian governance and government you have already done. Even legal you have done. So I mean, I don't think we can have anybody better than you. Thank you so much, Dr. Kuntia, to address all our members and our attendees.
The National President of Indo-American Chamber of Commerce, Mrs. Rajyalakshmi Rao, Mr. Prabodh Thakkar, Mr. Joydeep Roy, Mr. Kamal, and distinguished guests. I am really happy to be amongst you, and though I requested to be excused, Mrs. Rajyalakshmi Rao and Mr. Joydeep Roy would not allow me to be excused. So, but it is a pleasure to be amongst you. India and America, USA, both are the two largest democracies in the world. and there is a lot in common between USA and India. And I think we are constantly improving on our bilateral economic relations between the two countries. Uh, the this chamber, I am sure, must be acting like a bridge between the Indian industry and American industry, and I think you are all ambassadors in that way to kind of further cement this relationship. Uh, so it's actually a pleasure to be with you. Uh, I just wanted to briefly highlight the strength that Indian industry and Indian economy at the present possesses. Of course, we are all facing the global pandemic of COVID-19 now, and every country in the world has been affected, and we are also affected. But I think this will pass. So this should not be a kind of a deterrent in our looking towards the future. The Indian economy in 2019, our GDP was worth $2.9 trillion in nominal terms, and it ranks fifth in the world in nominal terms. If you take it on purchasing power parity basis, Indian economy is third largest in size in the world. Of course, USA is the largest in the world. And we, of course, Honorable Prime Minister has articulated our ambition that we should be a $5 trillion economy by 2025. And I think this is your theme also for the two-day seminar.
Yes.
So basically, I, before the COVID struck, India, among the large economies, India had the highest growth rate. And I think this temporary glitch will go, but we should revive this growth rate. And if you look at the uh, strength of the Indian economy, it also comes from the kind of Indian demography. So we have now quite a young population as compared to other economies, other nations in the world. Our average age is low, and we have a much larger percentage of population in the working age group, and our dependency ratio is low. So this it is expected that this will remain in India, the working age population remaining larger than the dependent population is likely to continue up to 2060. So there is a long way to go, and I think this is a strength that the country can exploit to its advantage. And that is, and another thing is that the general level of the economic level of the population is such that it is bound to grow further, and so we should see sustained growth for quite a number of years. And this is something that the members of the chamber can exploit. In case of the financial sector, again, the which is part of the services sector. Uh, this also would lead the growth. If you look at the insurance sector, which we regulate, uh, we have been traditionally getting a growth rate of about 12% in the life insurance sector and about 18% in the general insurance sector. In case of standalone health insurance, this growth rate has been as high as between 35 to 40%. During 2019-20, there was a slight kind of downturn because of the pandemic towards the end of the financial year. But despite that, the overall insurance sector grew at 11.7%. And now, up to the end of August this year, our average growth rate has turned positive. It was negative initially in the months of April and May, but now it has turned positive, and it is right now 2% overall. Uh, the general insurance growth rate is a little higher. Health is still higher, and it is reviving. And I am hopeful that we'll have a much better growth rate than this towards the end of the year. Uh, as far as the insurance premium is concerned, about $100 billion is our annual premium, kind of premium that is collected in the country. The asset under management of the insurance sector is worth $600 billion. So this is also, and this asset under management is basically available for the economic development of the country, because these are either in the form of government securities or in form of kind of equity or bonds. So this is also available for the Indian industry to make use of, and this also is going to grow phenomenally in the next few years. I would be expecting that nominal growth rate of life insurance industry for the long term should be about 12 to 15%. For the general insurance, it was about 18 to 20%. So with this kind of a growth rate, I think this sector, insurance sector, is going to expand, and all of you, of course, would be making use of the insurance services, since you have industries or whatever business you have. This provides protection to the general public. We have a protection gap between 80 to 90%, depending upon which segment we are looking at in the insurance. And so there is again ample opportunity for the insurance sector to grow. So I would urge that those of you who have some interest in this sector, kind of you can join, you can invest in the sector. We have some of the global American insurance companies who have collaboration and who are in Indian insurance companies. Last year, for the insurance intermediaries, FDI was raised to 100% from 49%. For the insurance companies, the FDI remains at 49%. But it gives ample opportunity for growth. And this MSMEs that many of you may be having, some small and medium industries, they also need insurance services in a big way. Particularly this COVID pandemic has highlighted the need for insurance. And in our country, only 5% of the total number of MSMEs, they are insured. So of course, all of you must be having insurance. But it is only the kind of those who do not, who are in remote areas, not having access, not aware about the insurance sector. But we are coming out with a standard insurance product for MSMEs, which would be sold by all the insurance companies, and that hopefully would reduce kind of dispute in interpretation of the insurance terms and conditions, and it will be much easier for the kind of establishments to pick up such insurance products. Uh, we also would I would kind of urge you that in the interest of your employees and workers, you should also think of taking group life insurance and group health insurance for them. This is something that I would like to ask all the establishments and industries to do, particularly when people are afraid to come to the workplace. Many of the people have migrated to their native places and all. So this will also help in creating a better work environment, and it will be worker friendly. Uh, and I will be very happy to get a feedback from all of you about the your need in the insurance sector, and how we can fulfill that need. Recently, for example, those who would like to use drones for certain activities, we have recently we have designed a new product for drones. Similarly, many new things are coming up: cyber security insurance, kind of liability insurance. All this will become more and more important as we progress, and the way of working also post pandemic perhaps will change. Many people will work from home, so more of remote working will be necessary, for which the cyber security will be an important requirement. uh, our insurance penetration in the country is only 3.76% of GDP, whereas the world average is 7.23%. So we have even from the insurance penetration point of view, we have a lot of opportunity for fast growth. And India ranks 11th in terms of gross written premium collected per year. And I'm sure this over a period of time this will grow, because the one is that with general improvement, general economic growth, people will the insurance products will be more affordable. There will be greater awareness, and kind of different types of insurance will be demanded, and the industry has to cater to that. So I would this during the pandemic, we have tried to build operational resilience among the insurance companies, and they have stood it well. And I'm sure all of you also must have withstood. There are difficulties, but we have to get over those difficulties. And our constant effort is to ease the business processes and all, so that kind of it will be easier to operate. And I'll request Mrs. Rajya Lakshmi Rao as national president to uh, get feedback from all of you, if we can do something for you from the regulatory point of view as far as the insurance sector is concerned, so that you will derive benefit from the insurance sector. And also many of you can also contribute to insurance sector, which ultimately will contribute to the development of the Indian economy and the India-US bilateral cooperation. So thank you very much for inviting me here, and I wish today's deliberations all success. Thank you very much.
Thank you, Mr. Kuntia. Just wait for one moment. Just a small. We also have this entire insurance program has been coordinated by Mr. Prabhu Thakkar. He has been driving international insurance and Indian insurance and reinsurance industry for more than 3 decades, and he has been helping Indo-American Chamber also. And he was a president of IMC earlier, and he has taken up growth with governance, with that is his philosophy. And he has worked tirelessly to make sure that his patriot by nature and a visionary. I want him to take over from here, introduce the rest of the panel, Jaideep Roy and others, and Jaideep Roy will introduce others and moderate the show. But before that, I want to just say one thing, because I was experienced in insurance industry from the consumer courts point of view for many years. And those days, all cases were going against insurance, every single case. Believe me, we used to say, oh my God, it's insurance, that means it's against that company. All those judgments, I'm talking about many years back. IRDA has come into picture and started streamlining all these things. With that, everybody got what should be the right way to deal with it, and how should the policy be given, how should we redress the grievances at your stage itself. And internally, every insurance company should ensure that grievances are looked after. It is such a sea change to what I have known. I'm talking about million years back when I was in the courts. Thereafter, being on IRD as a member, I've seen the effort you all have taken to see this entire insurance industry. You know, that you're just paving a beautiful way to make sure we flourish in this industry, because we really need to go rural. And now with this virtual technology and digital technology, I think now we can connect to all the rural population. Now they'll all take insurance. Incidentally, Mr. Prabhu Thakur, when he had done this program with the Indo-American Chamber, I think he was the first one I know who actually offered insurance for pandemics. Just like that, whoever thought it's happening, but he did. Not many people thought of it seriously then. I think now everybody's thinking about it. It's a bit of a vision from him, but people didn't make use of it. I'm just giving this background to you so that you know that we've been working towards insurance sector in Indo-American Chamber, and your excellent leadership in IRDAI and also your address today to us means a lot to us and to insurance sector and to everybody, all the participants and the attendees. I have to thank you wholeheartedly. And before you take leave, if you stay for some time and hear some of these people, I'll be very thankful. If you cannot, at least we would like to give you a small, modest, I wouldn't say gift. In your name, we'll plant a tree. A tree will grow somewhere tall in your name. We will just present it to you. Mr. Prabhu Thakur, will you also join in, and Joydeep Roy and others?
Thank you very much. So that's a very noble thought to plant a tree. Maybe
Yes.
someday I can come and
Yes.
see the tree.
I'm telling you, you're walking tall in your own life, and that will also grow tall.
Thank you.
That is, it will be sent to you, sir. But this is a small gesture from us. And we are extremely thankful for your presence, sir. If you can stay for a while, you can hear some of the speakers also. Just if you have time.
All I would say to Honorable Chairman is thank you. But sir, you are planting lots of tree and seeds for the industry, which will grow. And you have taken a lot of initiatives, and we are really are touched by one thing, is that you have given a strong message. Charity begins at home. That let all here also buy an insurance for their respective employees. This is, in your earlier address also in the SOCM, you mentioned that. It was a very touching point. Your focus on the rural area, reaching it out. And it's an education. I mean, I was shocked as well as learned today that only 5% of MSME is covered. So industry has a lot to take from your guidance and a lot of work to be done. So we thank you very much. And of course, you have also touched upon lots of other modern challenges related to cybercrime and drone whilst you are tackling the pandemic. And as Raj Lakshmi Raoji said, sir, we did mention in City Index, what we created was Mumbai and Delhi City Index and other cities. And we did highlight in one of the last event in the Indo-American, incidentally, not long ago, 1.5 years back, and who thought that we will be facing so soon. And we did highlight about pandemic as one of the risks. And this was, I must say, was with the help of our collaboration that time with the Lloyds in India, and we are facing this. So all we are working hard is now to tell client is and the community to listen more and more and way more futuristic. So you have been a great facilitator. So your guidance has been very helpful. So once again, I thank you on behalf of my insurance vertical and Indo-American Chambers for your presence and your guidance today in the morning. You really made our day. Thank you very much. And thank you, Jaideep, and Dr. Anand. We have the Garg, Tata AIG CEO, I think Radhakrishnan, Chairman of United India, is joining, or I don't see him here.
He's joining at 11:45.
11:45. His role.
Yeah.
So, and I also believe, sir, I did send a small note to you that on personal line insurances, you are reducing your recommended government for reduction in GST. So that would be of a great initiative by you. If I can add one more thing, sir, and I did talk to Mr. Anand also, especially personal line insurances, when there is a disaster take place, that is a big relief if they are insured. And if they are not, it's other way around. Then either it's a burden to society or to the government or to that individual family. So 2006 Bombay bomb blast in Mumbai, and we did a survey on the platform of IMC, and we found, sir, that 93% of the people, those who were in first class affected, were not insured. Sir, my humble submission to you, since you have invited some suggestions, I'm tempted to take this opportunity. I will take 30 seconds. Is, sir, if you will please consider, the personal line insurance is like personal accident, term life insurance, and don't give any concessions to corporate if you don't want, but especially this personal line insurance, sellers as well as buyers, if there can be a good incentive in terms of tax. Because, sir, life insurance growth in India has been a tax centric. Kuch milta hai kya buyback is a mindset of Indian. So personal accident policy, and we are going to remain accident prone society for a long time to come. So be it terrorism, be it something else, and such a massive industrial growth that we have in time to come. Personal accident policy and term life, if that can be, exempted from tax, and even to small agents, especially, you can ignore brokers like us, but if you can give those concessions, I think this will also generate lots of employment, sir. And I think the insurance companies will generate a huge fund that again goes back to infrastructure. So Jaideep was just saying yesterday that we have insurance industry is one of the largest investor in the infrastructure. So more the premium comes, and it's a win-win situation. So with this, sir, once again, genuinely appreciate your presence today.
Thank you very much.
Thank you, sir. Thank you for acceding to our not never say no request. It is very valuable for us to have you start of this session.
Thank you. Have a good day. Have good deliberations.
Thank you very much.
Thank you, sir. Thank you.
Thank you so much, sir.
Thank you. Thank you very much.
Thank you.
We're indebted to Joydeep Roy for this, for your presence.
No, my pleasure.
You also are equally persuasive. Thank you.
Sorry for having bothered you so much.
Thank you very much.
Thank you, sir.
Nice to see you.
Nice to see
Thank
you. Good morning, Giriji.
Good morning, ma'am.
Good morning.
Oh,
Sir, I'm sorry I was a little late because we are all very technologically challenged. Apparently, we couldn't get through to this in time. But very happy to be here. Thank you.
So nice. Now we've program coordinator is Prabhu Thakkar, but Mr. Joydeep Roy is the one who is going to now take over from here. Will you do the introductions for you all know each other, you're all one family, but for our members and attendees, will you do the introduction? I thought you should do it correctly because you know them all personally.
Yes, definitely. Thank you, Dr. Ji. It is a pleasure, as always, to be in a function of Indo-American Chamber of Commerce, as well as for something which is close to all our hearts around in this panel, which is insurance, which we all firmly believe in the relevance of, and today have the task in the panel discussion to express that. So we are very fortunate to have a very powerful panel, and panel which represents across the whole sector of insurance. So we have with us Mr. Girish Radhakrishnan, who is the chairman and managing director of United India, so which is one of the large public sector insurance companies, which does both commercial business as well as retail. In the same general insurance category, we have Nilesh Garg, who's the CEO and MD of Tata AIG General Insurance. Tata is, which is also extremely active in the retail one, while it is also there in commercial. And we would like to hear more about that from Nilesh as we go along. We have with us Vipin, who's the managing director LIC, and LIC needs obviously no introduction. The giant domestic insurer, the insurance company, which is the largest in the world in terms of policies. So that's what is represented here by Vipin Anand, and we will love to hear how this is being relevant at all times. And to top it all, and you've been hearing the program coordinator, member of Indo-American Chamber of Commerce and also chairman of Global Insurance Brokers, Prabodh Thakkar, who has been a constant light to the industry for a very long time. So, and from Prabodhji, we will like to hear about risk, his understanding about overall the attitude towards risk of customers, be it corporate and retail. So, this session today is about how relevant is insurance in these challenging and uncertain times. Now, it is very funny that we talk about this as of relevance in these times. Insurance is something which actually comes to use. It is a product or it is a service which is used in challenging and uncertain times. And for it to come to the rescue of people, it needs to be relevant in everybody's mind all or in all other times. So insurance is a friend in need, which has to be relevant throughout the year, 24 by 7, 365 days, forever. And in most developed countries, where we see insurance as a very large proportion of the financial services, you'll see that insurance companies and industries have been in existence for hundreds of years, 300 years, 400 years. Insurance is overall, organized insurance is about 400 years old. But this is how we see the development in India that way. Has seen nationalized insurance for 65 years, and after opening up in liberalized economy with a lot of global players coming in, it is just 2 decades. So 20 years seems a long time to us who have been in industry, but it's not in the evolution of insurance. The relevance of insurance is thought of in terms of protection and long-term savings and pensions, so protecting people against the risks of living too long, dying too early, or of health and disability, as well as against natural and disaster acts of God, which prevents both individuals and companies to go up back in their financial status, and that's where insurance comes in. It's a financial instrument to help in these times. However, the relevance of insurance industry expands to many other areas which are not seen all the time. And since the overall theme of the whole conference is the $5 trillion economy, the insurance industry is also a provider of pooled capital for both government spending, government bonds, as well as infrastructure investments. In India, more than 20% of the infrastructure investments come through insurance. Then the insurance industry also provides capital through corporate bonds to companies to grow. Insurance industry invests and develops in professional development of professions like risk managers, actuaries, and lastly and most importantly, it is one of the limitless providers of livelihood, both through the employees of insurance companies as well as service providers, and the largest pool of all, which is agents, which can be literally limitless. So today we will examine all of these and see how the relevance of the industry is holding good even in these times. And for that, I would like to first go to Vipin Anand. Ji, uh, from your vantage point of having been in LIC and also seeing the economy and the propensity of people to go for insurance, both for long-term disciplined savings as well as protection. Your opening thoughts, please, on the relevance of insurance industry in these times.
Morning, Mr. Roy, and good morning, everybody on the panel. It's a privilege to be on such a panel as this and to be invited by the Indo-American Chamber of Commerce. I think the theme for today, which has been chosen, there couldn't have been anything more relevant. It is relevance itself. We're talking about the relevance of the insurance industry. Just now, it was a privilege to hear to Dr. Kuntia regarding the kind of contribution the insurance industry is making to the economy of the country. And when we are talking about a 5 trillion economy by 2025, I think if we just go back slightly to the pre-COVID days, I think it is a modest target looking at the speed at which India has been moving forward. Only the kind of disruption which COVID has brought in has upset the cart so far. I think what we should be looking forward is maybe much more. When we talk about the nominal GDP, I think it does not really present the right picture for the people. Ultimately, what impacts the quality of life for people is the purchase price parity-based GDP. And here, currently, we are at a level that we are at number 3 in the world currently. And with a $12 trillion PPP-based GDP, I think if we look at 5 years hence, we would be looking at something like 20 trillion or more, which would be something equivalent to where US is today. Essentially, we are looking at that kind of money in the economy. And I think that is something which is really going to impact the quality of life in the entire country for the entire population. Coming specifically to life insurance awareness is currently at a height. And I think right now, life insurance and insurance of property and health insurance, these are possibly the most important things in the current environment. Normally what happens is that when there is a difficult situation, we start looking at conserving all our resources, spending less and less, trying to stay away from anything we consider as superfluous under the circumstances. But this is the time which brings insurance to the forefront of our mind. And I think earlier I have been talking about insurance being maybe the third most important thing after food and clothing, even before shelter. But right now, it has come along with food at the same level. Today, food and insurance are the two basic necessities in this kind of an environment. So that is one of the very basic issues considering the relevance of the insurance industry, whether it is non-life insurance, whether it is life insurance. The other issue, if we come at, is when we are talking about India becoming a 5 trillion economy, or if we take it a 20 billion PPP, 20 trillion PPP economy, insurance has to be an integral part of it. Because there are certain issues which we need to look at when we are talking about moving forward economically. And savings has been in the DNA of the Indian population. About a decade ago, we were almost saving 27% of our earnings. And for a huge country like India to generate resources sufficient to meet its development needs, it needs a lot of money. I think these two things, mobilizing public savings for public good, that has been essentially one of the main objectives for which the Life Insurance Corporation of India was created. And I think we have done well enough on that count in these years. As on date, our total assets are about $426 billion. The kind of resources we generate in a year our previous year's revenues for 1 year alone, in spite of March being hit by COVID, amounted to $83.6 billion. I think that shows the kind of scope which is there. And looking at that 98.8 billion, 98.8 crore Indians do not have any kind of insurance at all. And those who have only 8% of what they actually require. I think the potential which is there in this sector is tremendous. I personally feel that if we are looking at adding another $2 trillion to the GDP of the country, looking at what directly the insurance sector can contribute and the kind of resources it can generate for other sectors to produce further, handling insurance sector in the right manner can itself possibly lead to a cascading effect which can add $1 trillion alone. If you look at things today, I think the biggest challenge in the insurance industry in the country, the reason why even after so many years of having insurance in the country, such few people are insured, is that we have a serious distribution issue. And for addressing that distribution issue, looking at what has happened in the last 20 years with all kind of experimentation, I feel still the agency model is something which remains essential. And like the Indian farm sector, where in spite of all kind of mechanization, still there is a lot of dependence on human involvement. Similarly, in the insurance industry also, what we need today is another 5 million people to be in the distribution process to really encash the whole opportunity which is there before us. And just imagine the kind of savings it will bring in, the kind of resources it will generate, which will invested in the infrastructure sector and in the government sector, and the kind of taxes which will come in. Re-rolling that same money in different sector, the kind of opportunity which is before us. I think possibly insurance sector is uniquely poised to take India to that target of $5 trillion economy, not in 2025, but maybe even earlier than that.
Thank you. Thanks, Mr. Anand. That is a very illuminating opening remark, because you spoke of the protection gap. And despite being the fastest growing insurance industry in the world for the last 20 years on an average, we still have a very large protection gap that shows the extent of the work to be done, as well as the extent of possibilities which is in front of us. I'm glad you brought up the topic about insurance needing more and more agents, 5 million agents, and more distribution, more rural distribution. And then therefore, going up to probably adding 20% of that 5 trillion, $1 trillion for the insurance industry alone, a worthy goal to work towards. I turn to Mr. Radhakrishnan now. On the topic of insurance acting as not only the protector but also a channelizer of funds, pooling funds from savings and earnings of individuals, companies, pooling them, directing them to the right areas of developmental investment, and also coming to the aid of people in need in terms of acts of God. So looking at that function of insurance, how do you think from the corporate insurance point of view, insurance is remaining relevant in these times?
Thank you, Mr. Roy, and a big thank you to the Indo-American Chamber of Commerce, particularly Mrs. Rao, who also sits on my board and keeps a hawk eye on the consumer, friendliness of the company. So I was, virtually scared into agreeing to join this because she asked me to. But jokes apart, this is a pleasure, and thank you very much for this opportunity. Mr. Vipin Anand made a few very, very, striking points. Of course, he was speaking from the life insurer's perspective and from an informed observer of the economy perspective. when you look at general insurance, what needs to be perhaps understood, slightly moving on a tangent from what Mr. Vipinanand said about mobilization of savings, mobilization of money into large corpuses which can be used for productive purposes and which will also pay off individual losses. What is peculiar to non-life insurance is that the key concept to understand here is transfer of the risk. And by transferring of risk, what happens is that money that would have otherwise been avoidably paid out, or money that is being blocked into reserves or funds anticipating future losses, can be released and made productive use of in the industry, in the economy. This is the single most important thing that non-life insurance would do. And since this is a forum where a lot of businessmen are sitting and listening in, that of course attains a lot of importance. I would like to make a point here. No, the basic figures are all quite well known, even if there are differences of opinion about the nitty-gritty of some of the figures. The non-life insurance penetration in India as a percentage of GDP is still below 1%, which is abysmal. If you take the world average, it would probably be in the vicinity of 3%. But that again is not a very clear picture, because you have extremely underdeveloped countries and you have highly insurance dense countries like New Zealand or the UK or Canada. And so a kind of any kind of mean that you draw wouldn't be a very accurate picture. But for an economy of our size, and more importantly, for an economy of our potential, this should easily be twice what it is today. This sub 1% is quite a shameful thing. It's quite an embarrassing thing. It should probably be at least 2% in my, as of today, in my view. I don't want to get too much into numbers, but see, there are one or two very glaring figures which I would like all of us to always keep in mind. The largest number of people in India, apart from, I'm not talking about life, in having any kind of non-life insurance cover would be health insurance. Something like 47 or 48 crore people, depending on who you ask. Let us say, take a good figure of 48 crore people have health insurance of some sort or the other. And what we have to note here is that this is not because of a kind of an organic growth of health insurance or an awareness increase of the importance of health insurance until April this year. There wasn't much of awareness about health insurance. So this has happened primarily because of government initiative and nothing else. The government health schemes have ensured that a respectable, I mean, it is nowhere near enough, but at least this is a figure you can, speak without cringing in embarrassment, that 47 or 48 crore people have some kind of health insurance in India. But if you look at, say, homeowners, less than 30% of homeowners have insurance of either their buildings or their contents. We have about 250 million vehicles in India, and at least the most, kind-hearted statistician would probably tell you that at least a third of these are not insured. So this is the kind of, insurance, non-life insurance picture that we are contending with. I was reading a UN report a few days ago in which it was said that India has probably lost about $80 billion over the last 20 years or so in natural catastrophes. So whether it is a cyclone Amphan or a cyclone Fani or the Kashmir floods or the Mumbai floods or the 8 years ago the Uttarakhand floods, less than 20% of those losses are paid by insurance companies. The rest of it is being borne by people who cannot afford to spend that kind of money rebuilding their own lives, who have lost everything that they have. There is a huge gap in insurance. The gap is much more, I need to say this, that the gap is much more in the retail sphere, among the individuals, among the ordinary man in the street, rather than in the corporate world, because the corporate world is run by professionals, by finance people, by engineers, by businessmen with cold, hard viewpoint about the importance of managing money and managing resources. So the corporate India is not that much of a worry for an insurer like me, as much as the man in the street is. But again, the corporate India also does not, in my view, have a very good view, a very healthy view, or a very comprehensive view of what insurance should be. There is a lot of gap in between what the insurance should cover and the kind of cover or the extent of cover that the corporate India buys. And here I want to sort of poke a finger at one of my long-term colleagues and a personal friend also, Mr. Prabodh Thakkar, who I can see on the screen here. Prabodhji has been actively, personally involved in aviation insurance, and I want to draw this parallel, and I hope he will speak a little about that also. Aviation is a sector which, even in India, is almost entirely insured. Just about every risk that you can think of in aviation is insured. And this is one of the reasons why, even in spite of very bad revenues and very tough business environment, airlines still manage to pull along when a disaster strikes them. So with the kind of difficulties that the airline industry, for example, faces, if they hadn't been adequately insured, one single loss would have been enough to take them out, to remove them from the market. The other segments of Indian industry, I believe, ought to draw a lesson from this. Maybe if you have a friend who is in aviation, particularly aviation finance, talk to him, or at least talk to someone like Prabodhji to understand what insurance does and what you should be looking at when you look at insurance. I would, wind up my initial remarks with this, and I hope we'll get to discuss more things in detail. Thank you.
Thank you, Mr. Radhakrishnan. Very beautifully put. And since so we have two choices. We can either go to hire or get somebody from aviation industry. But since we don't have that, the best thing for us to do is to go to Mr. Prabodh Thakkar, as you say, there are two choices. So, and we are fortunate to have Mr. Prabodh Thakkar here. So, I would turn to Prabodhji. In fact, I will pick up one point which Mr. Radhakrishnan talked about, which is about transfer of risk, which is the primary purpose of uh, general insurance, which is transfer of risk from individual companies to a pool, and sometimes to a pool to cross border, just to manage the country risk and the country liabilities. Not be it, and the Thailand floods was such a great example of a well-managed country risk managed, where more than 70-80% of the risk was actually reinsured globally. And so Thailand did not suffer a downgrade with the 28 billion dollar losses and all, but then it didn't happen. So while transfer risk is the primary function, and corporates are so well insured, or at least more clinically insured, I would ask Prabodhji, what do you think about that in the current challenging times? And many people have come across and saying, hey, we thought our business interruption will really take care, but it didn't, because there's no pandemic. Has the insurance industry not really educated the corporate sector about pandemic insurance? What do you think?
Well, it's not about insurance company alone. It's an ecosystem, and the insurance, as I always believe, is no disrespect to that. Every cell of my body is made of insurance. But I would say the insurance by nature is a reactive industry. So, for example, we never had, cellular telephone insurance because there was no cellular telephone in the world. The aerospace came in the world, and then people started insuring the aerospace and rockets and the launchers. And similarly, tsunami. Nobody heard tsunami till it struck in southern India before a few years. So terrorism, for example, is following 9/11, it came to the limelight now. Dr. Kuntia mentioned about cybercrime because of now digitalization. So whatever you do on the positive side in economy and technology, the risk is always associated. It's like shadow. Your commercial or personal activity moves like a shadow in form of risk. So coming back to the pandemic insurance, yes, I think it will evolve. It will market will revolve, react. It will come up with the solutions. Unfortunately, in India, like we have three clients, and most of them were in sports and leisures who bought pandemic. It's not that we did not raise the red flag. Insurance is like anything, and I don't blame client. I mean, we sit on a sales side or on a distribution side or as a manufacturer, like Dr. or Kuntia said, we still have massive 95% of MSME not insured. So there is a challenge in terms of reach and distributions. But on another side, companies like Tata AIG and companies like United India and so Radhakrishnan is not only chairman of United India, he's also chairman of GIPSA, which is a public sector insurance companies and life insurance corporations. I think they can manufacture and give everything. There are thousands of products, but we are always accused of two things. One is, we are trying to oversell ourselves whenever we try and sell this. So there's a perception issue in the market. And partly insurance industry is to be blamed, partly, the ignorance. So, for example, pandemic, we did mention it in Indo-American Chamber of Commerce, one of the event, but there were not big takers or, a buyer of that, except sports and leisures. So I have a feeling that we all have a lot of work to do. Yes, we have to reset our mindset. What has happened, especially when you ask in pandemic in context, there is a mindset issue. There is a depression taking space in varieties of things. I would like ourselves to be more on a positive note. Again, Chairman IRDA mentioned about it, that let's be a positive. And in Indian context, again, we are in a most unique situation, and a good and bad is all relative. So imagine, as an Indian, I'm very happy for many things. We have a very stable, strong government. We don't have a general election around the corner. Compared to that, look at what's happening in USA. Now think of in context of UK. The UK is just came out of a European Union, and they must be planning to do something different. Now compared to all those, and Europe became one of the epic center of in a very early stage of pandemic, and the death rate was so high, which shocked them, not only in terms of loss of life, but it really shook entire Europe and challenged their self-belief of one of the best health infrastructure. So compared to that, India is doing very well. We have a very good future ahead of it. But I think insurance industry, and I'm talking among ourselves, is we need to regain some of the credibility. Claims are an issue. I would like to take this opportunity is claim service is the only service, the best ambassador of insurance industry. And claims are something that, is not, we may all think in insurance industry that we are doing our very best. There are genuine challenges, the documentations and understanding of coverages, over expectations, these are there. But I only like to share with my colleagues and friends offline and online is wherever claims are payable, can we show more grace? Can we be more, bring more speed? Can we be on the client side if there is a gray area? If gray area means turn left. Now that attitude is something is going to not helpful for the growth of insurance industry. So claim, I always believed, can be and is a greatest ambassador of insurance industry. So I'm very optimistic, futuristic. Futuristically speaking, I think there is. I hear from lots of market. They are trying to come up with some solutions of business interruption. We only can pray and hope that COVID-19 is one of the last in our lifetime. But who knows now? It's a big wake-up call to entire humanity, and insurance industry will have to play a significant role proactively, as if something else is going to come. Hopefully not, but if it comes, God forbid, there are talks about other virus. There are talks about bacteria. There is a talk about fungus. That all is in, we keep on hearing in a small corner of the media. What happens if that comes? So while we would like to deal with the pandemic in one way, but we have to be ready in parallel for other challenges as well. And this all are wonderful. I'm not trying to be cruel, but it is a wonderful opportunity. Every crisis is challenge is an opportunity.
Absolutely, and I think you've put it just so beautifully that sometimes we just try to encourage people to say crisis is an opportunity, but in the real sense of the term, it is in the insurance industry and its relevance, which shows both to industry and people as well as to the industry itself how it can become more and more relevant. And yes,
all I would add, with your
yes,
permission again, is
yeah,
that
please.
one of the another pain that I experience and we feel is that insurance has become a little bit of commodity, So
Yeah.
from our friends and supporters and clients, I do tell them that this is extremely important, sensitive product. Somehow we don't have that great perception like bankers, but insurance industry do much more than many other industry to support the core industry. But and now we find also the procurement officers deployed. Earlier it used to be director of finance or CFO domain. Now it's a procurement. So they're treating insurance like a commodity, and that is again a great pain.
Yes, a point taken. Absolutely. So there's a lot of work to be done to regain that credibility, as you said, and to make sure that it is seen to be the sophisticated financial risk transfer tool as it is, rather than just something to be as an expense to be made. So excellent points, and that brings me to Nilesh Garg, who is the CEO of Tata AIG. Nilesh, we have been hearing about the life insurance from overall concept of general insurance and the commercial point of view and overall risk point of view from Pramodji. So let's, what I would like to focus on with you is the retail side, the personal line side. Mr. Radhakrishnan also said that the corporate buyers of insurance are, cold, calculated money managers who know how to allocate money, whereas by implication, therefore, the individuals who are highly uninsured, uh, maybe are not, and maybe that there's a gap to be bridged through distribution education or through customer education. And some interesting questions are coming up, which we'll take in a moment, and some of them are getting answered by all that you're saying, right? And I'm sure the people who ask the questions are listening in. And just to also highlight one point about cars not being insured of 50 million vehicles, which Mr. Radhakrishnan said, more than 45% of those are not even insured in third party, which is legally mandatory, and more than 75% of those are not even insured with own damage. That is the situation in India. So when we sometimes feel that motor insurance is plateauing or the motor industry will not do well, there's so much to be done still. So it boils down to the individual's attitude towards risk and how to manage that, how to educate, how to expand more and be more relevant in that. We're waiting to hear from you, Nilesh.
Good morning, everyone. Thanks to Indo-American Chambers for inviting me to be on this very prestigious panel. I represent Tata AIG, and if I may say, AIG represents the best of America, and Tatas represent the best of India. So very happy to be, representing the Indo-American collaboration, on this. Greetings to Mr. Thakkar, Mr. Radhakrishnan, Mr. Anand, Joydeep, thank you, and Ms. Rao. Quite ironic that in the midst of this most severe pandemic India and the world, has ever seen, we are discussing the relevance of insurance. Uh, you know, it would have been much better. I know Mr. Thakkar and other people have been speaking about for some period of time, but it's quite ironic, that we are discussing it right now. And so we had done some work quite some time back trying to understand the reasons, why an individual family in the rural landscape goes into poverty. And there were broadly, there were multiple reasons, but there were broadly three reasons, which we understood. One reason, primary reason, was crop failure. Second reason was in terms of health or debilitating hospitalization in the family. Third was an accidental death or disability, or a natural death. So if you really see that insurance today, is so relevant, because it addresses all of those needs. Similarly, if we take, while Amphan, was discussed, and while it affected a lot of large corporates, but I think the worst impact gets taken by the shopkeeper and the micro and SME business. And unfortunately, that is the truth, what Dr. Kuntia said, that the penetration there is less than 5%. And if I may, make a very quick comment, that if you look at various segments in India, MSME, travel insurance, which we all feel very important, only the travel insurance which is made mandatory along with Schengen visa or US long stay, that gets purchased. The other, anybody who's traveling to Southeast Asia or Middle East does not buy insurance. 40 to 45% of the vehicles, and Joydeep, that number goes up to 65 to 70% for two-wheelers. If you go to outside the top 20 cities, again, this number gets very skewed, wherein the uninsured vehicle population, goes up to, almost, 2/3. OPD spends, my understanding is, about 2/3 of the healthcare spends of India is OPD. And again, insurance today does not cover any amount of the OPD spends. Home insurance, less than, my understanding is, less than 2 to 3% of the homes in India are insured by insurance. So yes, India, in the insurance industry, I joined this industry in 2001-2. The size of the industry was 10,000 crores. I'm talking about non-life and health insurance. And today we are touching 2 lakh crores. We've come a long way. But I think the penetration gap which is there, the underinsurance which is there, I think is quite huge. And if India has to achieve its aspirations of 5 trillion economy, I do not think it can do without a strong foundation of the insurance industry. Insurance, not only, as I said, the rural individual, it helps that person. Today, everybody in India, and we've had like, the number of, we've got getting 1 lakh COVID cases, every day being reported. The average claim amount for each of these COVID cases is approximately 1.5 lakh rupees plus. That is a lot of money for any even urban middle class, family. And that is causing a lot of distress, because people are having to dip into their savings. People are having to borrow, for overcoming, that. Similarly, if you take the SMEs, for SMEs, it becomes a matter of survival. For large corporates also, it becomes a matter of managing the volatility of their profit and loss account. And sometimes it also, in a cat event, large catastrophic event, it also becomes a matter of the balance sheet itself. So I mean, insurance is important for India, in various ways. That is, I think, I don't think we need to debate that. That is an established fact. Whether in terms of individual, whether it's in terms of corporate, or whether it is in terms of infrastructure development. Because one of the things, which Joydeep, the insurance funds do, and which is very different than the investment made by banking and other sectors. Insurance funds are long-term funds. There are very few sectors, which are having the capability to provide funds, which are 10 years, 20 years, 30 years, this thing. So which is why, we see stalwarts like LIC funding the long-term infrastructure requirements of the country. So which is why I think the importance of insurance, to my mind, is a given. One of the positives, as they say, never waste a good crisis. One of the positives, which has clearly come out of this crisis is that India as a country where customers, were not uh, comfortable paying premium for risk protection. And, earlier it was mentioned, that everybody wants something in return. But the non-life industry, the general insurance industry, we basically cover you for a risk, and that if you don't have a claim, then but you still get protection. So that used to be an alien concept. I think one of the key inflection points, which I have seen in this current last 6 months lockdown is, that customers across categories are more comfortable with paying premium for risk protection. They are looking at more comprehensive insurance coverages. They are looking at the gaps which are there in their protection, and how do we do that. So health insurance especially, which I always felt for the last 25 years, it used to be what I call a strong push product. Every customer in India needed to be convinced to buy health insurance. Very slowly but gently, it has converted from a push product into a pull product, wherein customers, today feel comfortable, buying health insurance. So I think, so this is a very big inflection point, for us. A quick comment on, I think lots been also said about why, why is Indian insurance penetration so low, and what are the issues. I would just make again, 2-3 very quick comments. A lot of these segments like home insurance, health insurance, motor insurance, I also feel part of an insurance industry, I feel there are also supply side constraints. I am part of this problem. And I would just, without getting too complex, I would just say there are 3 kinds of problems. One, I think the products need to be simple. And I think while Dr. Kuntia has left, this thing, I think IRDA is doing a great job in introducing standardized products for the Indian population. A standardized health product, a standardized MSME product. These are great value adds, huge value additions, for the Indian population, so that there is no missell, there is no issue in claims, in terms of exclusions, claims payments. I think this is a big step forward for us. I think the insurers need to do much more to come out with products where there is minimal or zero confusion in terms of exclusions, coverages. The product, we should be making a product which any average Indian should be able to understand in 30 to 60 seconds. If it fails the test of 30 to 60 seconds, then it's not a good product for the individual. The second is, I think Mr. Anand made that point very beautifully. I think 5 million distribution. I think, and while there is a so strong employment angle, but the reality is, to reach out to India, reach out to Bharat, I think we need to employ more and more agents. And one of the requests, and I would, urge the panel members as well, to help in that. I have made this request to IRDA as well, that the process of licensing and enrollment of the agency should be further simplified and 100% digitized, even the exam. That itself, to my mind, can add about 10 lakh agents, if not more. So I think that's second very important part. And the last point, Joydeep, which I would make, again, something very dramatic has happened in this last 6 months. While, India had internet, we got Wi-Fi, good quality Wi-Fi, broadband, about 5 years back. We got good apps, everything. But in these 6 months, a mini revolution has happened, in terms of what I call a digital revolution. It is not possible for you and I to change the customer behavior. But in these 6 months, what has happened because of the lockdown, because of the pandemic, my father, who was not comfortable with the internet, has been forced to figure out how does the Wi-Fi work, how can he go online, and how can he order something. So the point, I think, which is being made, and I think somebody said, Mr. Girish, that 100 crore Indians are uninsured. I think the only way, that can happen is through digital revolution, through technology. And for us, because, a lot of India's requirements, and especially, you told me, if I would talk about retail, a lot of people need small ticket products which cost 500 rupees, 1000 rupees, 2000 rupees. No distribution in the country, physical distribution, will find it economically viable to distribute those products. So I think a combination of this distribution, digital, and product simplification is one of the ways, which can take our 0.9% penetration to a 2.7% penetration of GDP very, very quickly. Thank you. Joydeep, you're on mute.
Sorry. Yeah, thank you very much, Nilesh. And I think you touched upon a wide variety of points and sort of rounded off the kind of directions that we have been talking about, from distribution to supply side constraint to the kind of products. And I think what is important to understand that you actually talked of two separate kinds of products: comprehensive products for the aware, urban, sort of financially aware customers, whereas for Bharat, which is for the simple products, which would be simple to understand, 60 seconds. But 60-second check is an interesting one. There's another check which, the of simplicity check is that if you can't explain to a 12-year-old, then, and if that person doesn't understand, a 12-year-old doesn't understand, you failed it, right? So the check, the point is understood. It has to be really simple, easy to understand. And at this juncture, we'll take a few questions, and the questions are coming from all these areas. And so I will group the questions, sort of the queries, and go to person to person. So I'll just go to Mr. Radhakrishnan for questions which are coming from the area of crop insurance. So questions about crop insurance is about is it transparent? Is the process, is the claim settlement process transparent and efficient? And if, of course, if it is, then people don't need to be told much, right? Otherwise, there will be so much need for marketing and pushing and distribution. So is it really simple? And taking a leaf out of what Nilesh said, that is it as simple that we can be understood by the farmers? And if not, what can be done about it? It's a question from the audience. Another question.
Yeah, crop insurance is, while it has become, one of the biggest sectors in the non-life sphere, unfortunately, it is still at a very, very nascent stage, in spite of the big numbers that you see. The main issue there is that there are two issues, basically. One is that the premium payment and consequently assumption of coverage is a little complex. The farmer himself pays a small percentage of the premium. The central government chips in with a big chunk of it, and the rest of it is paid by the state government. So getting the premium together for the insurer becomes a bit of a challenge. The farmer, of course, pays very quickly because it's actually automatically debited to his bank account. So there isn't really much of a choice that he has. But the central and the state subsidies take time to come in, and there are also issues of contract certainty there. For example, I may not always know what exactly I have insured when the coverage starts, say at the pre-Kharif season or pre-Rabi season. That is one part. The second part is that the assessment of loss also is quite patchy in terms of its efficiency across the country. There are places like Karnataka which are quite advanced and who have been quite dynamic and quite adaptive in bringing in technology and bringing in good practices. There are other states where technology is practically non-existent, and something called the crop cutting experiment is the main source of loss assessment. So these, plus the fact that the weather is highly volatile in India, and India is effectively a cat country, and it is actually several cat countries within one country. So it's very difficult to make projections. It's very difficult for insurers, and more importantly for reinsurers, to have any clear idea about how to effectively price this crop insurance. These are the principal challenges we have. We don't yet have, though, some of the companies like Tata AG General, for example, have started thinking seriously about parametric products. But unless we bring in that kind of tectonic shift in the way the risk is looked at and underwritten, I am afraid, to be very frank, that crop insurance still would be an area which has more dissatisfaction rather than kudos that come to us.
Thank you, Mr. Radhakrishnan. Definitely, I think that shows so much to be done, and we can obviously have a whole conference on crop insurance. So I'm trying to group some questions into one. So there's one question about uh, customer education and distribution, healthy distribution or unhealthy distribution. So I'll just group both of them. So customer education, it seemed to be inadequate because people talk about, people don't understand, and therefore there's a disappointment at the time of claim. And along with it, there's a related point, because sometimes customer education can happen both from the product and industry as well as from the distribution. There's a feeling here that there's an unhealthy intermediation by the finance companies and banks, making insurance compulsory and selling very expensive, irrelevant products. For example, housing finance companies sell. I presume the reference is made to credit life products, and borrowers have limited understanding. So, and also cross-selling. So the whole thing about healthy distribution and customers being educated. So can I move to Vipin Anand for this, for his views, and maybe we can come back to insurance too after that. Yes, Vipinji, your views on this.
Jadip, I would like to begin with one statement that in insurance there is no India and there is no Bharat. There is Bharat in Mumbai, and there is not only India, maybe France or Paris in Gurugram. So all segments exist in all geographical areas. I think when we are looking at strategies for distribution, when we are looking at strategies for product creation, we have to look at all these things simultaneously. But I'm fully in agreement with what Nilesh was saying earlier, that for people who are not very aware, now customer awareness is something which we have been trying to do for the last several decades in this country, through mass media, through going to the customers and talking to them, through the salespersons who are engaged in the process. But still, it remains fairly elusive. So one single thing could be that if we can club people with similar needs, the process which has been started by the IRDA now, that at least let us say there are 40 crore people in this country who cannot afford insurance at all. Now, this is a group which can be taken care of only through Social Security. One thing which, again, I'm referring back to Nilesh, he said that one of the major reasons of rural poverty is losing the head of the family without insurance. I think This is where we need to make a beginning. Because if we look at it essentially, insurance, whether it is life insurance or general insurance, it is a wealth destruction mitigation tool for the individual. So if we want to cover a large number of people, I think educating all those 40 crore people may not really be practical. So possibly what we have to do is that the society has to take care of that. And we have had social security schemes for a long time. Even today we have PMJJBY. But what I think is what we need is a scheme which is viable for the insurance industry. It can be a scheme where the insurance industry doesn't earn anything, but at least it should not lose anything. So that viability is an important issue when we are looking at social security schemes. On the other hand, the government also possibly can't be asked to fund for 40 crore people. I think there is one very good tool which is available to us, and I have raised this issue at many forums, that now there is a compulsory element that 2% of the net profits of companies have to be spent towards CSR. If the government permits funding of social security life insurance schemes or even crop insurance schemes as a CSR expenditure, I think this can go a long way towards taking care of a very large part of the population which cannot afford and which needs possibly insurance the most. So this is one part of it. Again, similarly, when we look at the marginal segment of the population who are supposed to be covered by the micro insurance policies, I think now we have products in place which can be taken care of. But then again, this is an area fair for distribution. The individual agents are neither capable or have the access, nor it would be remunerative for them to do. This was a job which was entrusted to the NGOs for this. Unfortunately, a large number of NGOs made a total mess of this entire system by taking away the money fraudulently, and because of which the system has entirely lost credibility. I think this is somewhere, there are some NGOs which are still doing an excellent job. We have NGOs with us which are ensuring crores of marginal population through microinsurance schemes in the year. But I think we need a very large number of credible NGOs to step into this area and take care of this segment of the population. When we are talking about insurance education and awareness, I think that is required for people whom we expect to put good money upfront, which we are planning to collect for the purpose of supporting the infrastructure development of the country, for supporting the industry, and generating further employment, whether it is through our own distribution channels or whether it is through the industries and the sectors in which we invest the money. I think this is the area. There we have to look at going into mass media. We have been doing, there are programs which have been started by the Life Council, by the General Council. But what I think is required here is a lot of collaboration. On this one point, I feel very strongly. There is another issue. I was talking about lack of distribution. I feel we also have a very small number of insurance companies. This may come as a surprise to some people, that I'm talking that we need more and more insurance companies in the country. But that is what is actually required. Even if you look at a country like Bangladesh, it has more life insurance companies than India. Yes. We need a very large number of companies who are not only interested in insurance as a viable business proposition, but also who are keenly interested in spreading the message of life insurance far and wide, what LIC has been attempting to do all these years. What we need is not competition, not even healthy competition. What we need today is that all the insurance companies in the life and the general sector need to collaborate. Because with the kind of market we have no dearth of customers. So why do we need to compete? Why can't we collaborate and ensure that India not only becomes a $5 trillion economy, it also becomes a fully insured society? I think we have to address awareness in bits and pieces, focusing on the particular segment of customers and the population we are looking at. Thank you.
Thank you, Mr. Anand. That is very aptly put. I think we need more companies, we need more distribution, so that we can really spread around. And I think one of the significant things to talk about is that there is no demarcation. We find all kinds of socioeconomic categories all over the country. So great one. And we will come to some more questions in the same line. But we have two questions which I would like to group together. One was meant at the IDS chairman, and another is to do with the national natural catastrophes. So Prabodh, if I can come to you from your experience. So one question is about how do we uh, sell more catastrophe cover, and how do we make it? We heard about the $80 billion, which Mr. Radhakrishnan talked about, the $80 billion, out of which only 20%, is covered by insurance, and the rest either is covered out of pocket by individuals, or the rest has to come from government relief. So it is a big if, and these are things which do not go well to increase the economy. So how can we cover, what are the mechanisms, parametric or otherwise, through which we can cover natural catastrophe? First you, and then I'll ask Nilesh too. And this other question, and I'd like to put this straight away, is about innovative insurance covers for trade. And there's a question about that the fact that people have to go abroad to source certain things which have embargoes in India also, because of we are not allowed to import advanced insurance covers from foreign companies. But then people don't find those in here, and therefore large amount of money is blocked in liquidity. So they're somewhere related, because we're talking of innovations to do both natural catastrophe and other things like trade. What is your feeling about it?
Well, thank you, Jaydeep. I would divide this into two part of my response. One is, yes, it has been discussed a lot that we are underinsured and we need to increase our penetration. Now, there are a number of ways to do that. One is awareness, and I think Mr. Anand has said that to make an awareness to 40 crore, 50 crore people is the toughest challenge. I think he was talking in context of personal line, but the same thing applies to commercial line and the corporate world. Even in the corporate world, I'm afraid, barring few corporates, the insurance is still a necessary evil rather than a part of an ecosystem. But you take 27th of July Mumbai flood, or you take a tsunami, or you take a pandemic, or you take a recent Bengal major cyclone, where central government has to write a check of 1,000 crore, right? So this goes from unplanned expenditure, from treasury, taxpayers' money, something which could have been easily been insured. So there are a number of ways of doing it. One is to educate very few, but a solid influencer in society called state governments and state bodies and central government, like a national disaster institution, is to buy insurances on behalf of the community and pass on as a part of a tax. That's one way of doing it. Second is either you make it, say, take a city like Mumbai. Mumbai can easily, a corporation can charge 100 rupees, 200 rupees per building, and insure the entire city for flood or removal of debris is the biggest cost to government after disaster. This easily can be bought. So what we call it is in personal line affinity. So same thing in catastrophe, you can bring a concept of affinity, and that can happen through government. The third, and the second or third option is to make revisit the list of mandatory insurances. So say for example, the buildings, this before giving OC and before giving whatever permission, the buildings must, the society must be responsible and made it.
The line has dropped a bit. The proposed line has stopped. We'll wait for a
Prabodh has gone
second.
offline.
Yeah, there, no, he's back. He's back. Mr. Thakkar, are you there? came on for a second. So if it does not come, we shall move on to the question. But maybe I'll move to Nilesh to ask him also some part of the same question. So let's wait for a few seconds. Okay, so while he is reconnecting, and I'm sure the chamber people are helping on that. Nilesh, can I move on to you to ask you a flavor of the same? And what about innovative means to cover natural catastrophe? Can you just quickly talk about it? And then if Prabodhji comes on, then we'll continue with him. Otherwise, I'll move on to another question for you before coming back to Mr. Radhakrishnan.
Thanks, Jodeep. I think so we Tata AIG, we have partnered with the government of Nagaland to offer a parametric cover, and I think it offers a very good template of the way future cat events, pandemic events should be covered. And apart from other things, I mean, there are a lot of nuances. In a country like India, with the size, of population and the complexity, it is extremely important, not only to pay claims, but even more important than paying claims, I feel, is the time in which you pay claims. Money which you pay to somebody, but that family, again, to take the rural population example, if that rural family receives the money 2 years later, it is frankly quite irrelevant for them. So one of the things, which a parametric cover does, because, the basis of, claim is very transparent and defined upfront. So I think this is an extremely good template, which, needs to be popularized, socialized, popularized, and we are doing as a company and as an industry doing a lot of work to make everybody aware that this is the correct way. In fact, Mr. Girish, would recall, even earlier, we even used to have weather-based schemes. Even now, there are the thing which one of the key features of those schemes is, was, that the payments, while there was a little bit of basis risk, but the payments there was nobody sitting in judgment, physically going to the ground level and figuring out claim is payable or not. I think that's extremely important, because in these, it's can as an industry, can we come out with constructs in times of CAT that the physical payment is credited to the bank account in 15 days time? And I must also share, again, I'm sure a lot of other companies are doing it. In Amphan, we conducted some surveys, claim surveys, using drones, and managed to pay shopkeepers, monies which were due, the claim amounts, in 72 hours. So I think, so that is a extremely important aspect which we need to keep in mind, whenever we look at this, because a lot of times, again, while we have been discussing a lot of distribution, but I think, that technology and digital also needs to come into claims. And, we need to figure out, again, I'm sorry, but if I may, I think the insurance industry historically has always looked at claims with blinkered eyes, with with a question mark around the claim. Is this claim fraudulent? So I think somewhere it's also a leap of faith. We need to figure it out that, yes, there will be 1%, 2%, 5%, there will be, this thing. But for the 99% genuine customer, can I figure out the process in a digital way? Can I make it, can I get the money out in 2 days, 3 days? That's the product the customer has bought. The customer has not bought a A4 size sheet of paper, a policy document. And, we can use things like AI. There are a lot of those tools, to figure out frauds. Today, the ecosystem, the data ecosystem is becoming so strong in India, we can do a lot of things, to identify frauds. So that, I think, you're really, how do we get that speed of claims, and how do we get that parametric based concepts more popular, and that to my mind is a very important aspect of the cat insurance, catastrophic insurances that you're talking about. Apart from we just need to keep on covering more and more of MSME, and that's where I feel that the IRDA's efforts to standardize the MSME product, to my mind, will be a big step forward in that.
Thank you, Nilesh. Thanks a lot. And we want.
Pradeep, if I may
Can I add
supplement.
something to it? Can I add
Yes.
something to Mr. Nilesh Garg?
Yes, please. Yes.
Yeah, I mean, I'm
And then
sorry
we
to
come
intervene in your flow,
problem.
but it goes
yeah.
with what he's saying, and it's sort of it's like actually a music for me when I hear some nice suggestions coming from this panel. Whenever it is coming, I just feel like responding, although I am not the moderator. But having been on the bench for so many years, it is so ingrained in my mind. Everything you're talking about is part and part of my thinking at that time while giving judgments. I mean, what Mr. Nilesh Garg said is so correct. Consumer awareness, customer awareness. And he said, if you don't understand the policy within the next whatever now few minutes or whatever, that means you have not sold the policy correctly. It should be a simple policy which people understand, and awareness comes very fast, and not that small print. So, and there are no contradictory clauses which are which are very, very confusing for the best of us. And first, small print should be avoided, and a smaller policy which people can understand. Why I'm saying it right now is just as Mr. Vipinanand said, this we can collaborate. There's no competition here. There's so much, so much, so much, so much. It's like a huge pie. If only we look at it, carefully and share the pie in a very nice manner, and by bringing awareness, because today the situation is gone. You don't have to go to the rural area unlike before. Every grandfather, a father who's uneducated, with a grandson, he can actually take the policy. The grandson will read all the policy. Grandchild, I'm sorry, granddaughter can read the policy conditions and say these conditions are okay with us, and they take it forward. And then, like how he said, drone technology has come in, and surveyor and this whole thing is like not. It is important as per rules and IRDA, but now with the IRDA coming up with drone thing, that is also easier. So makes it very easy. And I must compliment, although I'm on his board, but still I have to compliment Mr. Girish Radhakrishnan ji, because I've seen in United India, they have taken from the chairman's level, they have taken every dispute, and they have like brought down all the disputes. Immediately phone call goes, and they're like looking at the numbers and brought it down to almost minimal in no time. I'm so happy to see that. It's like music. I think all of you are doing fantastic service, but I'm just adding, that now sky is limit. The entire India is ready for insurance, especially after pandemic. They all know they need this help. So I think you're all doing great work now. I'm sorry for intervening. I just stop.
Very valuable, very valuable, and a view from not the practitioners, but people who've been watching, and actually from sometimes from an adversarial point of view. I think it's very important to hear from that side, because you've been also on the bench. So I'll ask Mr. Radhakrishnan to supplement this,
Yes.
but just cannot resist pointing out two things that. I think the conviction is there within the insurance industry, right from the chairman to the board to the last person on the ground, that they're doing an absolutely wonderful job. It is not just a job, it's also a social mission. However, to the people who take a policy or who face a claim, there is a trust deficit in this industry. It is not new only pertaining to India, it is there all over the world. I cover more than 100 countries and I see it everywhere. But it is in large or small degree. But India being one of the largest payers of claim, probably the largest claim payer in the world, 91% of the money in health, for example, goes in paying claims, more than 80% in other lines, but still there's a trust deficit. And I think all these questions, which all of you are, pointing towards, to make it go to India to go to a $5 trillion economy. And Mr. Vipin Anand has already set the target. The insurance industry has to be 1 trillion. So I'll ask now all of you, in the interest of time, to go. I'll go one by one, starting with Mr. Radhakrishnan. I'll come back to Prabodhji on what is your vision? What is the one thing you think, magic wand if given to you? What is the one thing you will change to make sure that this $1 trillion of insurance industry happens to contribute to the $5 trillion, so that all the trust deficit disappears and all these issues are not discussed in conferences beyond the next 3-4 years. So, Mr. Radhakrishnan, I interrupted you, but please come in and talk about yours. We'll go to Prabodh ji, and then to Vipin ji, and then finally end up with Nilesh back again.
Yeah, thank you. I had this urge to interrupt and blurt out because Nilesh made a few excellent points.
Yes.
Which a lot of us have been thinking about, but which is not perhaps articulated much. You mentioned about trust deficit, and it is an unfortunate fact, not just in India, all over the world. The public thinks that insurance companies try not to pay claims. I will, sort of link this with what Nilesh was pointing out to bring in more digitalization, if I can use that word, into the processing of claims, handling of claims. Now, Nilesh made the point that insurers, claim handlers in insurance companies generally tend to look at claims with a slightly, a colored lens, colored glasses. And this is actually tied to the fact that processing is still substantially manual. So you bring in the human element. So you look at it. So your the claim handlers' fears and prejudices and proclivities and everything comes into play. And we have hundreds of thousands of claims. If you look at the industry, you have a huge volume of claims. It is ideal. It is ripe for automated process. And if you bring in a proper AI-driven process, what would happen is that the claims are handled based on the algorithm that you built into it. It will throw up red flags only where there are reasons, where there are clear reasons for a red flag to emerge. And those claims can be looked at again by human intervention. The rest of the things will be automated. Now, we have, fortunately for us, the government initiative of Jan Dhan and the others have ensured that, a substantial part of your insured population now has bank accounts and you have the data with you. So like Nilesh was pointing out, we do pay probably 95% of our claims electronically now. The claims are not paid through the traditional, checks or bank drafts or anything like that. They are paid electronically, and that lends a certainty to us that the amount reaches the right person. So digitalization of claims is absolutely vital. And it will, the other issue is awareness. So the trust deficit also has to do with awareness levels. Mr. Anand mentioned about the difficulty, the sheer physical difficulty of trying to, educate. But I would, venture the submission that in case of non-life insurance, it is something to be done. And this is probably, our onus as the industry to ensure that people are aware of insurance and people are aware of why insurance is required, and people are aware that insurance companies do tend to pay claims rather than the other way around. The General Insurance Council has started a program of advertisements, including TV spots, called Fayde Ki Baat. So that is being bankrolled by all the insurance companies based on a formula that we have worked out among ourselves. So that kind of thing has to be done. I think the industry has to take a bit of pains and do that. However difficult it is, and however tough it is to see results for a few years, maybe for a number of years, but the effect will be there. So this is the point that I wanted to make, that you have to, the industry has to continue doing this awareness programs, and claims, particularly health and motor and other high volume sectors and claims, have to be digitalized. And the human element has to be brought into the minimum.
So that's sort of outlines your vision for the 1 trillion. I think that is one of the definite great pillars, and I'll carry that point with me. Over to you, Prabodh ji. Coming to a continuation of the last discussion, but maybe migrating onto this one, is what do you think is one thing which will help that $1 trillion to happen for insurance industry and bridges all these deficits that we've been talking about?
Unmute yourself, Prabodh. Unmute. Please unmute. We can't hear you, Prabodh.
Okay.
Yeah, now we can.
Good.
Yeah.
Okay. So thank you, and my apology for disconnections. Uh, well, we are greedy people in insurance, so one point will not be sufficient. But if
Sure.
I can, I would just like to recap and then respond. One is, yes, uh, 5 trillion is not possible to achieve unless we have a strong foundation of insurance, which plays a very, very important role in the whole ecosystem. Uh, I would say it is, one of the pain. We will have to be having a mindset of taking away the pain of the customers, create a credibility, rightly or wrongly. Yes, there is a trust deficiency, as Girishji says, and I endorse him. This is not only in India, but even in international market, it is the same thing. But however, we will have to keep on doing our bit. So I think building the trust, and this is an opportunity for insurance industry to really make a big mark. Uh, Settle. If one way, or a few wish I have is, you have offered me one wish, but I was expand it to three. One is, yes, settle the claim where there are possible more gracefully, and unlock these hundreds and thousands of crores which are lying of Indian corporate, especially. The public at large is suffering, and everybody feels that my claims are not adequately settled. Sometimes they are right, sometimes they are not so right. But I would say the most sufferers are also the corporate world. Now, nobody has a sympathy easily in Indian context, corporate world. Uh, why I'm especially flagging corporate world is that, in event of dispute, their only redressal is either arbitration or court. Arbitration is just emerging. Where in personal line insurance, there is amusement, there is sympathy, the claims limits are so low at the mid and junior level, this can be settled. The corporate world is suffering a lot. So if we have a dispute, we have no other go but to have a civil suit, and that takes years together. The second part is the underwriting. At the moment, now we have this new tariff which has come in, so everybody is painted almost with the same brush. It's on industry-based rate rather than the client-based. So I think the merit-oriented underwriting would be the most important thing. And I think the third thing I would say it is that insurance industry will have to meet, including this particular meet. Let's take few suggestions to the policymakers and even at the political class or at the bureaucrat class, and share our views. I have met some of the politicians and bureaucrats, and they are wonderful. They say people don't come forward, especially from insurance industry. We don't come forward. We end up having this kind of conferences, and that's it. So I think with the help of President of Indo-American Chamber and many others, we should have our wish list and share our pain collectively. It's a collective effort, and follow it up till it is concluded. I think there are good parliamentarians, there are good ministers, there are good bureaucrats, and we have a help of Dr. Kuntia, who has invited us to give any views that we may have it. So if we, I think, follow it up and not end our discussion today morning, uh, take it forward and pursue it relentlessly,
Yeah.
including, like what Mr. Garg said and Mr. Anand said about the agency. Can we simplify it? And if Mr. Garg says 1 million is a potential new recruit, I think there cannot be better good news for government and everybody if somebody can recruit 1 million new agents. And that will also help industry to penetrate better. But again, to recap, uh, we have to build the bridge of credibility. When I got disconnected, I would just slightly, I think almost completed what I wanted to say it was, which Nilesh again, summarizes with one word: parametrics. That when you were talking about that catastrophic cover is how do we do it. So that is gaining the momentum, and I hope it reached to its conclusion. So with this, thank you.
Thank you, Shakar. Thank you very much. Absolute pearls of wisdom. So we need to really look at these as pillars of our strategy as we go forward, not only for the industry, but maybe for the Indo-American Chamber to catalyze this. So I'd like to move on to Mr. Anand here. So, Vipinji, what do you think is your magic wand to make your dream of $1 trillion happen? I mean, you've already laid out quite a few, but if there's one or two things that you think are absolutely important.
Well, there are certain things which are absolutely essential to create that kind of an ecosystem where we produce the kind of result which we are talking about right now. So first thing is, if I am looking at ensuring 100 crore Indians, that is a billion Indians in life, and again repeatedly in health, then maybe several different products in non-life. That kind of a thing is going to need a huge amount of automation just to handle the entire processes. This is an absolute given. And I believe that the industry is actually on the path of coming to a situation like this. We are doing a lot of good job in this area. In fact, we have taken advantage of this pandemic period when we had less of work pressure otherwise to re-engineer our processes. And I believe that by 30th of September, when we are closing our anniversary month, we would be almost fully digital in most of the processes. And by, let us say, calendar year, when we enter the calendar year 2021, we would have moved substantially towards automation. So that is one part of it. Then we were talking about hurdles in moving forward in this. We talked about awareness. Definitely the government, the regulators, the Life Council, the General Insurance Council, they are all doing a job in this regard. But I still think that this is simply too big a job to happen all at once. Maybe we will need to look at something different, something new. Distribution is a huge challenge. Even today, in spite of all talk of digitization and IT and everything, online products, pure protection, even today, most of the Indian customers are comfortable only with buying a product which will return the money at the end and which they can buy face to face from a known person. So I think whatever might be happening in the rest of the world, in India, agency channel has its place of importance and it cannot be done away with. But again, 50 lakh agents, again, is going to take a lot of time to come. Another issue which we have discussed in detail is that of trust deficit. I think this is an area where life insurance industry has made a lot of inroads. And a few years ago, we were the only one with a sub 1% repudiation ratio. Today, the industry itself has come to that level. I think that is a very good thing which has happened with the life insurance industry. And I hope that this will even go further. But what I feel is that if we are trying to find a shortcut to this, you said, what is one thing you would like to do to make a change? I think the one thing which I feel can address all of these issues simultaneously to some extent, and which I would like to take upon myself, is maybe to rewrite the policy bond. That is going to make selling easier, that is going to make the trust deficit go away, and that is going to make the claims processes much easier. I think that is one single thing which, if addressed properly, can make a lot of difference to create a policy bond which a lay person can understand, which doesn't need a lawyer, which doesn't even need an agent to tell him this. I think this is one single thing which can possibly be a shortcut to many of these things. Of course, it cannot totally address everything, but to some extent, it could be a beginning. And that is something which I would definitely like to do at my level where I can do. And of course, like I said earlier, we have to work as a team, all life insurance companies together, all general insurance companies together, all life and general insurance companies together as an industry, and the regulator and the government. they have to give us the kind of confidence. I'm not saying it's not there, it is there, but the task which we are planning to take is Herculean. I would just like to say that we are in a position of like Archimedes when he says, "You give me a place to stand, and I will move." I think that is the stage at which the insurance industry is today, and together we can really move the world. Thank you.
Fantastic, Mr. Anand. I think you've touched upon some very important uh, points, the legalese of the policy document. In fact, we have done, at PwC, we keep on doing our own research and across city countries as well as with other parts of the ecosystem in India. And it is quite certain that policy documentation need not be written in a legal language to form a legal contract. A legal
Definitely.
contract can be written in plain English. It is perfectly reasonable and allowed in by the legal system. It is just that we are continuing with some policy wordings because we've been borrowing it from earlier and earlier. And it's like the proverbial cut and paste goes on. And on distribution, which you mentioned very correctly, that while it's not only in India, larger parts of Asia, larger parts of Africa, quite a larger part of Eastern Europe, Latin America, it is the same. While technology is expected to elevate the skill of the person who's selling, while technology is expected to bring transparency to the process of selling, the buyer always wants to buy from somebody who's there to answer the questions and explain the same things. So technology assisted distribution is the order of the future. It's not technology replacing distribution. It's not man versus machine. It is clearly a man and machine, beautiful synergy working together. So these are findings from Pricewaterhouse, which I thought I'll share. So Nilesh, you have the proverbial last word on this. You've already laid out quite a few things on the thing, but if you can think of the $1 trillion, what is the one thing that you would ask, as from the genie and from the lamp?
I think, Joydeep, most of the points, have already been discussed. Mr. Anand, Mr. Girish, and Mr. Thakkar have made. I would uh, just reiterate technology, 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 or whatever you want to call it, digital, digital, digital. And I think that is the only way for us to uh, solve whatever problems of penetration, complexity, claims, uh, expense, which are there, which will help us in a meaningful way. I think again the regulator is doing a lot. In fact, recently we also regulator allowed digital issuance of life as well as now health policy as well. I would just say, that one, I would, want probably the regulatory environment to be looking at digital in a much more encompassing and a comprehensive way. So, for example, right now, digital issuance of policy, that's again limited to March 31st. It is so how today customer also wants that. So how can we, make the regulation more enabling of digital? That's one aspect. And second is, when we look at digital again, we have to look at it, whether it is enrollment and licensing of an agent, whether it is issuance of a policy, endorsement of a policy, a claim survey, a claims handling and settlement, whether it's retention. We need to look at digital in a very comprehensive way and disrupt our own industry in a very deep and a significant way, so that, we emerge out of this much stronger. And I've got no doubt, that where we are standing, today we are at the cusp of this revolution, and we can easily surpass the aspirations which the Prime Minister, Dr. Kuntia, all of us have, the literally speaking, India has from the insurance industry.
Thank you, Nilesh. So absolutely, you've touched upon the same point now. So which means that's comes with deep conviction, claim servicing, which is the proof of the pudding, and it is really the product. It's not the paper and the promise. It's more the promise when it's fulfilled. Insurance is unfortunately not a gratification product which people queue up to buy, but we have to reach there. And I might also mention here that there's no country which is talked of as a developed economy, where insurance penetration and the size of the insurance industry is not robust. So one can say, people can view it two ways. One is that, okay, when a country gets developed, insurance develops. The other way of looking at it is unless insurance gets developed, and it really goes and protects the GDP, and it protects livelihood. It protects the future earning potential of people in case of death and disability. Unless this happens, the GDP cannot grow. It will have shocks, and shocks to the GDP are always difficult to always recover from. As we are speculating at this point of time after looking at these numbers, but beyond a point, the world is showing differently. There's enough confidence in India. There's enough confidence in investing in India. And I think we need to get out of ourselves. We need to get out of a bit of self-doubt. And as players in the industry, players in the ecosystem, collaboration is very important. And all the points which came out and from all of you is that there needs to be a high degree of collaboration and industry-led, industry scale approaches, like platforms, like looking at things like policy wording, things like looking at parametric, which you've done, but maybe it needs to move to be the, as you say, the template. So more and more simplification, more and more spreading out. Look at how distribution can be distribution cost can be reduced, how it can be eased off, so that the dream of the $5 trillion of India is not only achieved, but is achieved with a significant contribution from this industry we so love. And we so love it because it does contribute to human happiness index also. So with that, I would thank the organizers, Indo-American Chambers of Commerce, Rajalakshmi Rao, as well as the Kamal and others. Of course, my panelists, my friends from the industry, Prabodhji, Mr. Radhakrishnan, Vipinanji, and Nilesh. And with that, I would and the people who have been asking questions. I'm sorry we couldn't take all the questions because of paucity of time, but we have tried to answer some of your questions. Please keep asking them to Indo-American Chamber, and if possible, we'll give you some answers also. Thank you very, very much.
Thank you, Joydeep. You've moderated it so beautifully, and you brought in IRDA chairman for this program. I'm extremely thankful. I have to tell the audience, our Minister Anurag Thakur is still busy with Parliament, but he still said he will send a message, a video message during the day. We'll play it at some stage. And before we all move on to the next program, I would like to individually thank all of you for having come, Mr. Girish Radhakrishnan and Mr. Vipin Anand and Mr. Nilesh Garg, and of course Prabhu Thakur, our coordinator of the program. And I want to especially thank Mrs. Suneet Maheshwari, who also helped me to get Mr. Joydeep Roy. And Mr. Roy is also helping us on the other events, in Fintech and MSME sectors. I'm very thankful to you for coordinating a lot of things for us. And I already feel we have reaching 5 trillion because the insurance sector is huge. If you really go outward and not competing with each other and collaborate with each other, believe me, virtual programs are happening. Virtual insurance also will happen. I'm very, very confident. Now, can I just tell everybody our humble gift to each of the participants, panelists, Mr. Girish Radhakrishnan. It's our humble gift to you to make world greener, and there will be a tree that will be planted in your name, and we expect all these trees to grow well and give a bountiful of shade and health. And, thank you very much. Mr. Nilesh Garg, thank you so much for having participated and giving such wonderful ideas. Yes, we have to have consumer awareness programs and ensure the consumer knows what he is getting into, and will definitely take insurance. And great ideas coming from you. Thank you very much, Mr. Garg, and a plant in your name. And of course, we will send this gift to you by email. And Mr. Vipin Anand, you have hit on the correct thing. And LIC, your funds actually is part of the growth of this country. Whatever they're spending, government is going mostly from LIC funds, I know. So whatever infrastructure, whatever is happening in the government, expenditure for public service, social causes is coming from LIC. Thank you so much for having given your time and making sure that you said we have to all not compete but collaborate to make this 5 trillion economy work. Thank you very much for having said so beautifully. Thank you very much. And this will go to you. Mr. Prabodh Thakkar, always a friend of Indo-American Chamber of Commerce, a person who has a lot of patriotism to the country and does a lot of good work. And we thank you for having coordinated for us for this program. And a tree will grow. You're tall, but the tree also will grow tall. Thank you very much, Prabodh.
Thank you. Thank you. Pleasure.
Thank you to all the panelists and also attendees for joining. Any questions unanswered right now, we will send it to the panelists at some stage. Once again, Jaideep Roy, the most important person. Thank you very much. I wish I could give you more trees, but you've already planted a lot of trees here. Thank you very much for having come in and moderating it so beautifully. Really, the perfect program you have made it. I'm so obligated to you.
Thank you. Thank you, everybody. Thank you.
Thank you very much, Jaideep, for bringing us together.
My pleasure. My pleasure. And wait for some wonderful more programs coming. I think my colleague Vivek Belgavi will be moderating a fintech session, which is going to be probably very, very exciting.
It'll just starting. Some of you can stay on and hear that also. Thank you very much.
Thank you. Thank you, Ms. President. Thank you very much. Thank you.
So you had an interesting session in the morning.
Very nice.
On,
it was a very nice
insurance, and I think some useful points being discussed there. May I like to welcome, sort of usher in the next program on fintech. And I remember when I thought of this, I said there's a lot of discussion happening on fintech, and we need to, and we all have, shall we say, our own impressions about what fintech is. And of course, being a banker and an investor, I think about if there's so many fintech opportunities happening, how many are going to survive and which will return back the money? But that's a different issue. So coming back on this, I discussed this with Joydeep, and Joydeep led me on to Vivek, and very nicely, Vivek, we kind of went over with some of the topics. And so without much ado between you and the audience, I would want to first just introduce Vivek, and he's a partner at Fintech or at PwC, looking after Fintech. But by and large, consultants are there, and he's in the practicing consultant. But the other interesting thing is that he started his career at TCS. So he's not so, shall we say, pure consulting oriented. He's seen the real world of this industry. And so I hope we have a lot of practical and perspective coming from him. When Joydeep was talking about who we must have to speak, and he mentioned two names, and he mentioned Mrs. Arundhati Bhattacharya and Google Sajid coming over. I said, are you sure you will be able to get Arundhati Bhattacharya for a session on fintech? And he says, I will try. And I said, well, nothing like listening to such an eminent banker, sort of changing her leaves into a new avatar, and listening to her worldview. And, fintech has, of course, a lot of applications in financial services. And of course, Sajid, for the fact that, Google is ubiquitous in our lives, I don't think we can dream today what we can do without Google. So yes, as of course that is there, but more important, not many of us realize the kind of backbone infrastructure that it probably provides to a lot of payment gateways and financial transactions that happen in our world today. We don't even realize it, and I hope when he talks about some of the things, we might kind of understand its true importance. So I'll leave that for you, Vivek, to sort of usher in those concepts. But before I begin, and I think, when I mentioned Mrs. Bhattacharya's name, Mrs. Rajalakshmi Rao kind of exclaims, this is, are you sure? And so I'm just going to request her to put in her 2 words before your session starts in welcoming all of you and Mrs. Bhattacharya in particular.
I think it's already good afternoon. Welcome to Arundhati Bhattacharya ji, and Mr. Sajid Shivanandan, and Mr. Vivek Belgavi. He are going to now take over. And we have been doing these events on almost every day because till 30th, and that's when I pass on to the next president. And so we're having many, many events as the annual conference series. And we had tremendous banking sessions yesterday, and now in the morning insurance sector, and once again now fintech and MSMEs, and it's another delightful sessions going on today. And tomorrow is a pharma from USFDI in the morning, and evening they're going to talk about vaccine from Bharat Biotech tomorrow evening. I'm just saying this so that some of you can perhaps join these programs if you don't know about them. And then we have investing in India. A lot of companies who got investments from Reliance onwards are joining on 28th and 29th investments in US, what we are doing. And the same day, US ambassador is speaking to us. And we have also one more interesting thing. Justice Sikri is speaking on 26th, Arjun Sikri from Supreme Court, former Supreme Court judge, on dispute resolutions between Indian and US companies. So whether it's arbitration or which are the routes to have any disputes between business entrepreneurs in these two countries. These are some of the programs we have already lined up, and yours is a very important program for us. And I'm so happy Sunitji has put it together and got all of you, and with Jaideep Roy, who also helped us in the insurance sector. We all, we're all prepared now. Look forward to hearing you. Of course, Arundhati ji, I've met you many times, but today I'm formally, I have to say something very interesting. Let me just read just a small bit at least. Everyone knows you, but at least I must say bit. Arundhati Bhattacharya is an eminent retired Indian banker and former CM of SBI. She was the first woman CM of SBI. She oversaw the landmark merger of SBI and its banking subsidiaries. In 2016, she was listed as the 25th most powerful woman in the world by Forbes. She is the only Indian corporate leader listed on the Fortune's World's Greatest Leaders list, ranked at 26. Wow. I mean, I don't want to go into other details. They are not so relevant. This is enough to showcase how wonderful you are, and being a woman, you have reached there. I've also become the first woman president in 52 years in Indo-American Chamber of Commerce. So I can relate to some of this, of course, in a small way, but you're larger than life, having come into SBI. That's huge. So I welcome you to this session, and the rest of the people, Mr. Suneet and Vivek will take on and introduce, and I wish all the success to this session. Thank you very much for having come here.
Thank you so much, ma'am.
Great.
Suneet,
Go
would you
ahead.
want to?
Yeah, just wanted to add that we had a very interesting session yesterday on digitalization in banking by Bijit Bhaskar and your colleague Dhruv. We discussed some of that. ICCI was one of the first ones that kind of initiated something some 20, 25 years back. So yeah, I mean, the perspective of that journey, and then maybe some of the things that have happened in more recent times, particularly the jump that has happened with COVID. I think that was the other, while everybody seems to have a huge challenge because of COVID, I think when it comes to digitalization and financial services and banking, COVID probably creates an opportunity. And I think with that, I would leave it to you, Vivek, and your fellow panelists. And I'd love to hear Arundhati ji in this avatar. And I've heard her as a banker for many years.
Thank you so much. Thank you, Mr. Sumit. I think I'm when you have two panelists who both their life, their work, and the impact they're causing and their organizations have caused and are causing is so much, and the experience is so rich that I felt that my job as a moderator would be largely to be to kind of get out of the way, kind of just foster the communication, and we'll jump onto it. But then I also realized that all of us we serve this industry. Many of us serve this industry But definitely all of us are consumers of this industry, and all of us are equal stakeholders as citizens of this country, and with our own individual aspirations. And whatever one's aspirations are, financial services one can't take away from it. So it can both foster as well as enable individual aspirations. So I thought the best I can do is kind of lay down a few pegs in terms of the context, and then open remarks and foster conversation with both Arundhati ma'am and Sajid. So we recently did a report as PwC with the FICCI FinTech committee, which was a pretty, and this was last quarter, so I wanted to refer to that. And we came up with 6 imperatives, and we said, okay, what is the status of the industry here today? And we kind of disagreed with the aspects that FinTech does mean only startups or only A or only B or only C. We kind of defined it more as a way of working or a way of doing business, the way of solving problems, way of delivering service. And we came up with the 6 pegs, which I've divided into what I would call as demand side drivers and supply side drivers. So really on the demand side, what is fostering the industry and what is really creating the market for it is there are unmet needs. In spite of 60, 70 years of working in the sector with all the efforts, we still have millions of bank accounts which are underutilized. If you look at last couple of years, there has been a surge in new to credit, which kind of gives an indication on pent-up demand. Both we had the insurance session before it, both in investments and insurance penetrations are in single digits. So clearly the peg number 1 is unmet demand rate remains. But at the same time, the second demand side driver, which we have seen come in and where COVID, I believe, has played an important role, is formalization of the digital economy. Because of the distancing, every sector that we have seen, whether it is logistics, commerce, agri, utilities, wherever, and as they're getting formalized, data is getting generated. And these sectors are also under profitability pressure. So they are looking for getting into adjacencies, into financial services and others. And that's also a supply side, sorry, a demand side driver. From a supply side perspective, let me just call out 4 brief points. A couple of them, and some of them we are aware, but as I said, I want to set the pegs for the conversation. So one clear supply side driver, which is very unique to India, has been a public digital infrastructure, whether in terms of UPI stack, eKYC, the bureaus that we have, account aggregator framework coming in, the open framework, which is getting facilitated. So we have found a kind of a method which is public-private. So there is a digital infrastructure which is built by public, but equally vibrant is a private digital infrastructure. And many of my panelists and their businesses are in that space as well, which allows enterprises to now leverage the public infrastructure, leverage of the private infrastructure and create their own businesses. The third very interesting aspect, and we have to credit our regulators to a fair degree, is there are multiple regulated paths available. Starting from a pure play, I could be a technology company which is developing applications on top of a certain kind of a digital infrastructure layer that we spoke about. Or I could be a payment focused company, a small finance bank. So it just gives me a multiple paths to serve the customer. I could be light touch regulation, I could be heavy touch regulation. The sandboxes have got created across the board. So that's a third key peg, which again is quite distinctive. We are not the only one. There are a few other jurisdictions which are quite progressive, but I will count ours as one of the more progressive ones. And the last one, which shouldn't be ignored, and that probably causes a lot of attraction in this sector, is availability of risk capital. Let's do appreciate that we need some of the risk capital to solve these problems, because many of these segments are not profitable on day one. But those are the kind of harbingers, if you may, of trying to penetrate newer segments and markets. A tough job needs an entrepreneurial risk capital onto it. But it also recognizes that this capital today is available in all shapes and forms from debt to equity, and available to all players, not only to startups, if we have the right game plan. So I think those were the probably 6 pegs, Sunit, for setting the conversation. But without further ado, let me invite esteemed panelists for their initial comments, and I'll pose them an open-ended question just as a warm-up and kind of for us to get a feel of what they are thinking, both as individuals and organizations when they look at this space. So my starting query really is, and Arundhati ma'am, I'll go with you first. How would you define this ecosystem? And I would want to go beyond fintech as one small type of a company, and there are multiple places. So how would you define that ecosystem with your diverse experience, now as part of a leader of a technology company and erstwhile a banking company, which I think you try to make a technology company as well. So how do you define this ecosystem? That's an opening query. Ma'am, will invite you for your thoughts, and Sajid, after ma'am, I'll invite you to come in. Ma'am, over to you.
Thank you. First of all, thank you very much for having me, and thank you for all the kind words that Mr. Sumit and Ms. Rajlakshmi they said about me. Thank you again. Uh, the very fact that I have migrated from finance into technology should indicate what my thoughts are on the subject. I do believe that anything and everything today has to have a very strong technology backbone in order to really, be fit for the coming ages. And the reason for that is everything ultimately is becoming B2B2C. So, it is the C that is becoming the biggest. And if you look at the consumer experience, that piece cannot be solved by any other means other than technology, because any other means is way too costly. It doesn't work. And if you're looking at simple things like even financial inclusion, it's not as though we were not trying to do financial inclusion a long time back. Why did we manage to do it in 2014 when we had not done it earlier? Because, the government wanted it, we wanted it, but it couldn't happen. And it didn't happen mainly because we didn't have a way of establishing KYC, which, as you know, is Know Your Customer. And in 2014, on account of Aadhaar and the Unique Identification Authority, we had that ability. Of course, it was helped along by the fact that mobile communication was far more easily available across the country. But that was the one single really big feature that helped us to actually do, or rather cover 98.7% of the families with at least one bank account. Something that we had been struggling to do for 14 long years, we did in a matter of 7 months, and all because technology was available. So today, if you're looking at the ecosystem today has very many players. There are infrastructure players, there are full service players, there are niche players, there are NBFCs, there are these fintechs and startups, as you call them. All of them are part of the ecosystem. And mind you, it's not as though each one is sort of eating into the other. In many cases, actually, they are collaborating and giving services which were never imagined earlier. So, if you look at, you mentioned some of the platforms that have made this possible. If you look at the UPI platform, the UPI platform is actually almost a publicly owned platform, right? But the number of people who have built on that platform, starting from Google Play to Paytm to many others, even in June, when India was officially probably having a minus 23% GDP growth, even in that period of time, we did 1.5 billion transactions on the UPI platform. Okay, so that's an evolution of the ecosystem that was just not available earlier and would not have been available had it not been for technology. Now, the UPI system, as you know, was built by certain volunteer organizations. It was then handed over to the NPCI that's currently maintaining it. But frankly speaking, it's a platform that is unique in the world. It's a platform where if you have the app of Bank A and you connect it to your account at Bank B, you can make a transfer of money to a person with an app of Bank C whose account at Bank D is connected to it. So you're getting as many as 4 banks, but the entire settlement is all real time. And it's an enormously powerful piece of technology that has really empowered us. So if you're looking at the ecosystem today, the ecosystem is really growing in many ways, and fintechs and startups are very much part of it, because what they are doing is they are bringing in that element of competition, they are bringing in that element of addressing pain points. The pain points could be on any front. It could be on the demand front, it could be on the supply front, but it is actually addressing the pain points. The aggregator module that you talked of, it's the one kind of platform that actually gives the power of the data back to the individual. As you know, data is supposed to be new oil. Why is it new oil? Because it gives a lot of leverage to those who have the data. But the leverage that means is with the corporates. Do the individuals who generate the data get to use it? No, they don't. But if you look at the aggregator platform, for the first time, it is allowing the individual to have access to their own data and to use it for their own use, in the sense that I'm applying for a loan. I ask the aggregator to aggregate all of my data and provide it to the bank. The bank looks at the data, looks at the rich information available there, and then is able to decide whether to give me the loan at 6% or to give me the loan at 12%. So as an individual, I'm now able to leverage the data. So, to that extent, I would say that, the fintechs, the startups, the ecosystems, the platforms that are coming up, all of this is extremely essential. This is
Yeah.
the way evolution will happen. And
Yeah.
technology is very much part of everything we do.
Hmm.
Remember, however, that whatever we do with technology, I personally believe that human touch will always be necessary, at least in two areas. One is the area of health, and the other is the area of money. Because at the end of the day, you do still want to see a physical presence of a unit somewhere, because money is what gives you security. And you don't want it to just disappear in thin air. Why is it everybody is not into bitcoins?
Yeah.
Because they can't catch hold of it. We don't know where it is. We don't know
Yeah.
how it's getting lost. So,
Yeah.
there is an evolution that is taking place. But my own particular belief is that, for things to do with money and things to do with health, while technology will be a huge enabler, it will still have to have some element of the physical in it.
Yeah. Great point. I was just kind of my first reaction was, yeah, money can become invisible, but service and touch can't become invisible, right? So it has to be become palpable, and probably that's where the marriage is. Sajid, I think that sets up very nicely for you. I don't want to steal your opening remarks, but I can't help but imagine you wanting to comment on few of the themes which ma'am touched upon. Over to
No,
you, Sajid.
very much, Vivek, and thank you, by the way, for having me on this panel. I mean, the only reason I said yes is I actually wanted to just come and sit and listen to Ms. Arundhati Bhattacharya. So I have like a ringside seat, if you will, and I'm very much a student of the industry. I have not spent a lifetime in banking at all. So very much a student, very much learning. And I think a lot of the points that Ms. Bhattacharya made just now actually resonate, right? And if you were to think of the ecosystem as it is evolving in front of us, and you have to keep in mind, I mean, I like the word ecosystem because it is indeed that. And there are multiple players, as ma'am just described now, and also that it is evolving. By no means is this, a stagnant kind of, or that it has reached its end game or end point. And the way that I think of this is really sort of there are three parts to this, or three layers, if you will, to the ecosystem. Number one are, think of it as enablers, right? And these are actually financial institutions. So they've been around for a while and they're evolving. But also start to think of UPI. I think ma'am talked about that. But UPI, and if you start to think of what's happening on like Aadhaar, all of these are, if you will, enablers. They're platforms. So they lay the base because, without financial institutions, without these platforms that are being built, look, you can't build anything on top, right? Where if they weren't around.
The
And then
stack theory.
them, correct, exactly, right? And then on top of them, I think to the point, and I think ma'am described them as fintechs and startups and etc. I think of these players as accelerators, right? So on top of the enablers are accelerators, and you can argue people like us are accelerators, and Paytm and others are accelerators who are playing on these platforms and in partnership with financial institutions, right? I mean, it's very, very critical to remember that the partnership with these financial institutions is very critical for players to succeed, for accelerators to succeed. And then on top of these accelerators, the way to think of this is really the part of force multipliers, right? And when I think of force multipliers, I actually think of these sort of new startups, new models. Imagine if anybody like 5 years ago would have said that one of the largest merchant acquirers in the country would be, let's say, Paytm, right? I mean, it's just like nobody would ever say that. Like, how would that even happen? But today, the point is that they are. I mean, and there are others like us and PhonePe and etc. who are doing that. And these are force multipliers because what happens is those actions of doing these things actually digitizes, let's say, merchants far faster than we could have imagined would happen, right? And so that becomes very, 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 very interesting. So this whole notion of enablers, accelerators, force multipliers are the way that at least I start to think of the ecosystem. And I couldn't agree more. I think the human touch will remain important because look, ultimately, there is nothing more important to a person than his or her money, right? And so the ability to be able to reach out to, so whilst you want to digitize money and you want to make it fast, and that's kind of what we live by. We want to make it fast. We want to make it simple. We want to make it secure. But ultimately, you have to make sure that like you don't lose that human touch. And so that is something sort of we really very much buy into. I do want to end by saying, on the description that Ms. Bhattacharya gave about UPI, I think it just really is very exciting. We're obviously biased because we've seen the benefits of it and how quickly India is digitized. I would also add to the point that she made that actually, if if any person with any bank has the app, you can also send to any bank account, by the way, even independent of whether they have the app or not. And that transfer also happens independently. So not only can you send real time to anybody with apps on both ends of the leg, but you can also send direct into a bank account so long as you do have so long as one of the legs is the app. So it's very exciting, right? Like, I mean, it's like, I think it is really setting the sort of marker for the world, not just India, but for the world. And so it's very exciting from that perspective.
Yeah. And especially if you add the layer of credit, which was the trend which will start, and we saw some recent announcements on it. It just seems to be a journey, and at some level, I one way to look at it is almost like virtualizations, right? So what like an email did to physical URLs, right? So once you virtualized it, now suddenly you can play a lot more in that space.
So the reality, Vivek, though, is that credit has always been around, but it is now the means. It's like a force multiplier again, right? Like now the means or the way that you can avail of credit is just very different. It's much faster and can be made even more faster. And so the next thing you know, ideally speaking, there are more new to credit that sort of come on board. There are more new to bank also. Of course, new to bank would be first, and then new to credit would be second. And it just has a lot of transformative benefits.
Absolutely.
Yeah, it'll happen on both sides. In the sense, it empowers customers who have never got credit to get credit. Also for lenders, it empowers them because it gives them very rich data to enable much better underwriting. One of the reasons why, it was not freely available is because bankers are unsure. They don't really know how to assess the numbers that are being shown there. There is no way of assessing whether those numbers are correct or it's just a fairy tale. And in many cases, there were fairy tales. Today, that doesn't have to be. Today, because you have so much of supporting and correlating data that you can actually understand what is being shown to you, whether it's correct or not correct. And all of that, again, becomes available because of these platforms that quickly pull the data from various sources, correlate all of them, and actually show you the status of a person and their eligibility for whatever they're asking. So, it's an enabler on both sides. It makes the entire system more secure, and therefore it's a force multiplier because it can then cover more and more people who don't have a pay slip, but still have the ability to take those loans. Okay. So it's really something, absolutely, what should I say? It's really and truly enabling.
Yeah. Empowering is the word I've heard being used. Ma'am,
Exactly.
but also one of my banking clients told me that lending business is not about giving money, but collecting money. Once you have done it right? So, and probably in my mind, that is one area where probably that experience angle or the human touch angle again becomes critical, right? It will probably be a certain space where data itself becomes a detriment. And I don't think we are there yet. till then those physical touch points and relationships are, I don't think they're going to go away very soon. So what would be the reactions from both of you on that aspect, which is also concern many people? You have to talk about what is the worry when they think about the ecosystem. This is one of the worries which does come out. So how would you weigh in on that, and what are the realities there?
At this point of time where collection is concerned, I think, we still are reliant or a little on the physical side of it. However, with progress, that reliance can come down. And it can come down because what happens is with time, you will be able to predict who are the ones that are going to get into trouble far faster than what we are doing now. So, as you get more and more data in, you will be able to do that analytics to be able to understand these are the people I need to target ahead of time in order to see that they don't get into trouble. So, not always people do these things because they want to. A lot of people don't pay up because they can't. Now, if they can't, there has to be a way out. How do you restructure? How do you ensure, that you give them maybe a little more in order to tide over whatever problems they're having now, in order to generate enough for them to be able to repay? Or how do you, at the very first instance, take a haircut and cut it off? Don't waste time. You don't let it go into, one of those severe crises. It's like what's happening in the pandemic today. You detect it early enough, in all probability, you'll be able to contain it. You detect it very late in the day, well, there are very few chances in that case. So, early detection of problems also helps hugely in collections. And that is where the physical touch starts coming down, because you're able to reach out very quickly and say, look, it looks like you will be having this problem, and these could be the ways out. And let's discuss it then, or let's see what you can do, and then let's come to a conclusion as to how we take it forward. So, overall, I think while the physical, I again say that it's very difficult to rule it out. In my mind, I can't see it happening, at least not in the next 10 years. I just can't see that happening for the physical to go away altogether. But it's going to come down. It's going to come down drastically, and it's going to be ensuring that, both sides actually come out winners out of this. Because even the side, in this case, if it's the consumer, even they know that we are being taken care of. Even though we are not coming to the bank knows about what's happening, or whoever is with the lender knows what's happening and is going to reach out in time in order to see that, there's no trouble going ahead.
Yeah, I mean, there are some really exciting constructs being discussed here, right? I mean, if I almost to the point that ma'am just made, imagine a scenario where, again, if you have the right data and the consumer, and again, you had made this point at the beginning, and the user has said, listen, I think this data, my data is valuable to me, but you can use it. So imagine a scenario where actually there could be early warning signals of when a user is about to get into trouble, so that you could actually give him or her credit. No, this isn't about collection. So I'm actually thinking how you could make credit available because somebody may potentially get into trouble. And then you could try and see if you could use the same signals by which you could aid collection, right? Because ultimately, look, we all know this. Well, I'm certainly learning it, but the rest of you all know this. It's easy to lend. It's easy to give money. It's very, very hard to get it back, right? And so I also feel like with the data that's at hand, with the right user opt-in, etc., all of that, you could almost think of how flow-based lending and also how transaction sort of that data points, etc., could actually enable credit to be made at the right time, but also enable collections in the right way, so that it is something that is not onerous on the user, but also allows for the institution taking the risk to be able to make it back as well. And I think if you could find that construct where both are in harmony, look, that's a really, really good place to be in, right? And I think if you do that.
Let me just add another dimension to it, which is, and probably to your earlier point, Sajid, that as we get into this newer ecosystems as force multipliers, we realize that there's a reason why they're not part of the mainstream, because technology and intent and government push was there for last 50 years largely, right? It is also the nature of work or economy that we are part of as a country, where most of the things are informal. So many a times repayment, if we stick on credit problem for a little bit more, what we have also found through our research is many a times it's just a question of time, and in many cases it's a question of days. Because unlike the salaried class, which was the majority of class we had at some point in time, you can call it gig, and gig doesn't just mean the delivery worker, but at some level the definition of gig is very wide in this country. Agri workers also doing gigs at some level. They can't equally predict at which month will they be able to sell their grains and get their money. So probably there's that flexibility element of knowing that, to your point. And the question really is, how much are the systems today you feel are flexible? Ma'am, you've been seen a traditional organization, and Sajid, you are engaging with the incumbents and the risk underwriters. How much flexibility is there? And we know that we want to manage risk. Another close friend told me friction is very essential. We're pained by it. If friction was not there, the buttons would have fallen off, right? Friction holds things together. So where is that balance? And maybe just build on that point to say we need flexibility, because the economy and ecosystems are very informal. They're not cut and dry. Everyone doesn't get paid on first of every month, so on and so forth. So how will that agility flow through, and how will it flow through the value chain from acquirers to manufacturers, if you may?
So, if I can go first on this, Sajid, because there are, there is something that I have said for a long, long time. And the thing is that if you look at the rural areas, and the farmers get bulk money once the crop is out. If you look at sugarcane farming, for instance, sugarcane farming, it's an annual crop. It's not even a 3 monthly, 6 monthly crop. It's an annual crop. So the money comes in once. Now imagine yourself, most of us are salary earners, right? If we got paid once a year, would we be able to husband that money properly across 12 months? And especially if the money was not enough to meet all our needs. As a result, what happens is farmers get money in one stroke, and their needs are huge. So they are not able to sort of divide it across the months that they need to. Instead, it gets spent right up front. And so then they start running up credit, okay, to the local grocery store, to the local, money lender, whatever. And what happens then is when the next money comes in, the first bit of it, the most of it, goes to pay off these earlier bills. And they are left with very little. So, that as a result of this, their standard of living never goes up, because whatever profits they are making is going into paying off the interest for the loans that they have taken in order to manage during the period when they were not getting paid. Because again, as you rightly say, they don't get paid by the first of the month. In fact, if you go into the US, people get paid once every fortnight. Again, because they cannot husband their money properly across even a month. Okay, a lot of people get paid every fortnight. Now, our farmers are not getting that. And unless and until you can give them that flexibility of getting a regular flow of income over the years, it is very difficult for anybody at all to manage. One of the ways of doing that, of course, is to give them, various solutions where, they do say maybe, sugarcane raising in a particular area, a little bit of floriculture, a little bit of horticulture. They have a cow or two in order to provide milk. So, they get sources of income across every week, every day. Okay. The
Yeah.
other way is to provide them this money, but not from the money lenders, but through which what is happening today, the microfinance agencies and others, who allow them to get it at a far cheaper rate in order to ensure that they are doing some activity which may not be non-farm, which may be non-farming activity as well, to generate that regular flow of money. And you are right, in the sense that if there is no friction, there is nobody who's going to look at that problem. Friction causes you to look at that issue and try and find a solution to it. People look at pain points. Only if something is pricking, I look at my finger to try and find out whether there's something there and something I need to do about it, right? So as a result, this is of course true, that it's friction, the friction in the entire system that is causing all of these innovations. And the startups, etc., the advantage they have, what is the advantage they have? Their advantage is they are not bound by certain rules. They don't come from a set of, what should I say, boundaries. For instance, if you are going into an office day in and day out, okay, you will not notice if the sign on top of your office has become a little askew, or maybe a letter has fallen off. You won't notice it because you're going in and day out. Now comes a new person, looks at it and says, wow, they haven't even got the sign on right, right? So that's what the startup community does. That's the main point. Let's get there and sort of
Nice,
solve it.
beautiful.
Okay.
Yeah,
So I think that's what's happening. And
yeah,
definitely, the ability, the flexibility to allow people to access money as they need at
yeah.
a price point that doesn't really sort of impoverish them, I think
Yeah.
that's very essential. And it's one of the reasons that we are seeing so many types of lending activities coming up.
That's
Sajid, in your response, if I can just add one question for your response is, I do question is to man's point of saying that habit of when you do day in and day out, you don't see the sign has fallen. And I do think, and it's my presumption that the organization and disruptor organization like yours has figured out a method to make it a part of their thinking and living every day. Uh, is that a myth? If it's not a myth, if it's a reality, then I think that learning is something the entire ecosystem could value from. If you can just shed light in addition to whatever you're going to add on.
Yeah. I mean, it's a great question. We'll, having spent 13 years at Google, I feel like maybe, we're a very different company than what we were 13 years ago, which, by the way, is like 60% of the life of the company, right? So, whereas, you take SBI as an example, it's a 150-year-old,
Oh,
institution.
210, 210. You've got it
210.
wrong.
I'm so sorry, man. There you go. 210, right? Like it's very different. But let's go
And
back.
at PwC is 130, just in a matter of scale. So
So we are like toddlers in comparison. Like we are toddlers. We are so by definition, toddlers are learning far more, than institutions. In a way, right? Is one way to think of it. But let's go back to the point that we were sort of discussing. Actually, it's very interesting, and I enjoy the framing of that friction point, because in short, see what friction does is it creates opportunity. Because I can tell you the one thing and this is something I learned at Google, there is one feature that every single user, regardless of country, regardless of any other segment filter you want to put on, every user in the world loves this feature. It's called speed, right? And so what do I mean by that? So friction of all kinds will create a need, right? Like people have a view that, hey, listen, it's hard to get a loan, right? Like, or it's hard for me to pay back, or it's hard for me to get a card, whatever. Pick one, anything. There are friction points. The ability to make that smooth and to convert that to speed of any kind is basically where the opportunity margin lies, right? Like that's it. That's the point to sort of focus on. And if you think of like all the developments that have happened, uh, the reality is there's a saying, right? Like you should never waste a good crisis. And it's actually crisis that really forces change. And I think the remarkable developments that have happened in the India fintech ecosystem, at least, is really sort of spurred by the event of 2016, very candidly, right? Like that's when it really started to put that sort of accelerator or that crisis kind of moment in the ecosystem, and things started to really move from there. Today, it's a crisis of a whole different nature. I mean, we would never want this again. But the point that I'm making is that friction creates opportunity. And for a company like Google, I think we're so focused on trying to ensure that whatever we do is it sort of helps the user in as fast a manner and as secure a manner and as simple a manner. If you have that lens in your mind, it sounds very simple, but it's very, very hard to achieve, right? Because I think we all love, simplicity is not very simple. And we all love to and have the great ability to be able to complicate things. And that is something that, I think if we can fight against that and we find ways in which we make things uh, faster, we make it simple, and we are secure whilst doing it, look, you're in a really good place. And I think that's been our DNA right from the time that we started, because if you think of sort of our core as we started as a company was about search. And it's simple bar, and you put in, like, you type in a few queries, and boom, in a few milliseconds, you get what you're looking for. And again, it sounds very simple in sort of theory, but very hard to do in practice. And I think if we, as an ecosystem, thought through those lens, I think you start to get to a place where you'll see why these different kind of transformations, these benefits, etc., have started to happen. And by the way, UPI, I mean, it's fairly, I mean, it has a lot of work to do. We have a lot of things to do to be able to simplify the architecture. But the concept of instant bank to bank, like real time, is, that's what has led to its like remarkable growth. It's just very instant, very simple, boom. And
I remember
things.
the engineering books which had the mux demux kind of a diagram. It's saying that if it's basically a many-to-many kind of a system, it's actually an elegant one, and it's a very human-centric design at some level, or human society-centric design. But at this point, I can't resist but probably pick up another quasi-philosophical subject, which is with the pace of, at some level, both the organizations, Sajid, Arundhati ma'am, that now you're part of, and the way you're poised in the ecosystem, which is opening up, and it's very conducive to the ambitions and the possibilities that we have spoken. We're also aware that we're getting into things like privacy, considerations we are getting into, right? The question which I was slightly more, how do we protect ourselves from things we don't know? How do we have, because we are moving so fast at some level, and you also have pointed out, and at some level it is a responsibility for billions. And I'm not going to come from a very conservative cyber security lens, right? I'm more thematically, how should we approach solutions to this, so that it can be, we are mitigating ourselves against risks that probably none of us have foreseen right now. And what do you think is the right way to do it? What more should get done? That was broad thematic point, open to either of you to kind of take a shot at it first.
Well, I'll take a quick shot at it because I have to get off at 1:15.
Okay, got the message, ma'am.
I have a hard stop there. But of course, first let me say that coming from a 210-year-old organization is true, but I'm currently in a 21-year-old organization, okay? And this organization is like a study. So, they have a totally different mindset, which is great because, they take nothing for granted and they keep looking at things with a different lens on a regular basis. Regarding privacy and our handling of data, and about things that we don't know, I think the only way to deal with that is to have a few central values. The central values of trust. At the end of the day, you have to have a value that says that customer trust is primary to whatever you do. And if you don't want to lose customer trust, you will do whatever it takes to ensure that nothing at all is done in order to break that trust. Now, I don't know in which way it can be tested. There might be ways in which we will fail, but we will at least, have this comfort that we are doing whatever we can and we are testing whatever changes we are making against those values. And if you can have those values very firmly in place and known by everybody in the organization, that all your actions must be framed and must be tested against these values, that's the only way that you can actually protect your customer and their privacy. There is really no other way. Because as I said, there are unknown unknowns. How do we know which are the unknown unknowns? Only thing is we should stop sort of disregarding known unknowns. The pandemic is really not a black swan event. It's a gray swan event because this has been predicted for a long time now, that it's over 100 years. It's time that something like this happened. The sad part is, I have reviewed as a part of a very thick risk document, all kinds of scenarios, in the risk element. And I remember in my earlier organization, I think there were 62 scenarios. Sadly, pandemic is the 63rd, which we didn't review. Okay. So, we have to now understand that there are known unknowns. So let's not keep those known unknowns as unknowns. Let's try and take those in. About the unknown unknowns, nobody knows. Nothing much can be done about it. But as I said, create the DNA and the value of the organization in a manner that everything is tested against those to protect ourselves and the people whose data we hold in trust. I think that's
On,
the only way we can go about it.
on unknown unknowns, ma'am, just want to quote that, like, I've been following work of someone like a Kara Swisher in the US. I mean, just trying to look at ethics of the technology industry in their own right. One point I'll kind of borrow from there and test it here is to say, I don't think we have enough participation of humanities in financial services. Probably like technology companies might have done a better stop at it. But this whole knowledge of humanities, if you may, and we can look at as base or as deep as possible, was one thought to say from an inclusion perspective. We saw an inclusion other dimension, but in some of these problems, I'm kind of corresponding to that thought that you need probably different thinking hats also on our table.
I
If we
agree
have,
with you.
right, so
I fully
probably
agree with you. And by the way, I come from a humanities background, okay?
maybe that's the secret.
So do I, I'd have to say. So do I. I'm a history
Wow.
So do
graduate.
you. Great, wonderful. Good to have you. But again, uh, I fully agree. And in fact, Salesforce has a separate office, which is called an office for the humane use of technology. So, there's a separate lens that we put on the technology to ensure that it's for humane purposes that it's getting used. So I think that lens is something that most companies must have, no matter which area they are in. It doesn't matter whether they're in manufacturing or in services or in fins or in tech or whatever. But I think, yes, that lens is definitely important.
Perfect. Ma'am, I know we are on the time. The way it was getting warmed up, I'm sure we would have loved to chat a lot more deeper. But probably I'll kind of wrap it up with two questions. One for you, ma'am, and one for you, Sajid. Ma'am, from your lens now, what would be your top two predictions for breakthrough technologies or platforms or themes? And largely, I think we spoke about incumbents, saying that, let's say, the startups are sorting their own technology, but really from an incumbent lens, which is also a large space for us. And they have to prioritize so many things. So if they're looking at a lot of things, what would the top two from your end that they should look at? And I'll wrap up with a question for Sajid on top two changing consumer preferences, Sajid, which we spoke about. So, ma'am, your thoughts on top two breakthrough
Top two
technology?
changes, I think would be platformization of most things. It's already happening. It's not something that's new, but I think that is something that's absolutely on the cards. And the other thing I think the change will be, and that has really been brought on by COVID, will be this concept of anywhere access, whether it be for the customer, for the employee, for the other stakeholder. I think that is again going to be something that will be part of the new normal. So these would be probably the top two changes that will happen.
Fantastic. Thank you, ma'am. Sajid?
Yeah, no, very quickly. I read this just a couple of weeks ago. I think, this wonderful quote by Lenin, who once said that, look, there are decades when nothing happens, and then there are weeks when decades happen, right? And this is really sort of, I think, what is happening to us as we speak right now. Literally, in the last 5 months, 5 years worth of changes just happened. And I think, look, just from a consumer perspective, there is now a very secular shift towards the digitization of what the consumer wants to do from a like commerce, transaction, finance perspective that I don't think is going to like revert back. That's number one. And number two, you know, the requirement for businesses to also digitize fast and serve those consumer needs will also go up significantly, because reality is what tends to happen is consumers are almost always ahead of businesses in terms of the change that they ask for. And now I think, it's a time and an opportunity for businesses to be able to actually react well in advance. And I think if you do that, look, the ones who do that really well are the ones who are going to win.
Fantastic, fantastic. Sunil, I think I've done, ma'am also had a hard stop at 1:15. Uh, I'm sure everyone took a lot of it away from this. If there are any Q&A, I'm sure the organizers can relate to our respective panelists.
Yeah. Yeah, I think there are a few questions there, but which cannot be, we can't fit in. So yeah, I would request you to relay to the panelists and maybe we can get the answers to them. But clearly, Vivek, it just comes out. We thought 1 hour would be more than adequate, and I think it's not. It's a topic that is live and emerging, and in fact, in my mind, there are so many questions. We are all discussing about fintech in the space of consumer banking and consumer interface. And I've been largely a wholesale banker, and I've been looking at how AI and fintech can be used, and modern day technology like project monitoring through drones and things like that. How it can actually change, because what we realized if you see the stressed assets thing that we had yesterday, bulk of the stressed assets are in wholesale, in volume. And bulk of it is because we don't do follow-ups, and we don't do follow-ups because it's a drudgery. To look at engineer reports, detailed reports, it's a drudgery. And I think there is a huge lot that fintech can do there, and this time is not adequate to have this discussion. And thank you, Vivek, and thank you, Mr. Bhattacharya and Sajid, for making this so interesting. And Arundhati ji, I have a request at some point in time. I know you don't want to discuss finance. I hope I can take a rain check with you to discuss a lot of things. May not be in a public forum, but maybe catch up on a lot of things that we have.
Welcome, most welcome.
So
thank
yeah,
you.
with
I
all
have
of
to leave, so my apologies. But
Please,
thank you ever so much.
Thank you so much.
Pleasure. Thanks, Vivek, for everything. Thanks for helping us out with all of this. Yeah. Oh, there she is.
Yeah. You're on mute.
Yeah, there is a small little gift for all the members. They've all left.
Arundhati ji, can you just come back for one moment? She's gone.
She's gone. She's logged out.
I think we both are panelists.
Okay. I at least I see two of you. Our humble gift from Indo-American Chamber of Commerce for having come in. Of course, this is for Arundhati ji. She's not here, but we're extremely thankful to her for having accepted this invitation and joining. And we're honored, Arundhati ji, with your presence and your discussion about the subject. And we're extremely thankful. And a small tree which will grow in your name somewhere beautifully. Thank you. We'll send this to you. Sajid Shivanandanji, what we do without you, without Google Mama, for everything, even children, grandchildren, everybody checks on Google to correct, each of us. I'm just joking. But Sajidji, thank you so much for joining us. It's huge information you have shared, and it was very interesting discussion between all of you, and Indo-American Chamber of Commerce have benefited with your inputs, and thank you once again. And this tree will be for you. And Mr. Vivek Belgavi, you have moderated it so well, and I'll have to thank you, and also Joydeep and Sunit to have asked you to come in, and you made us proud by handling it so well on behalf of Indo-American Chamber of Commerce. That is for you and your tree. It will grow somewhere beautifully. Thank you very much.
Thank you so much, ma'am. I was just going to comment that my panelists were true karma yogis. They did the work and they've gone down to do more work. So it was really nice to have a chat with everyone. Really appreciate it. Thank you so much. Thank you, Sunit. Thank you, ma'am.
So thank you very much. We are having the next program starting right now. Somewhere along the line, we also got a video from our Minister Anurag Thakur. And I think as soon as your discussion is over, you please don't go away. We will play our minister's address, which was to be in the morning, and that is just getting uploaded on our email, and we will share that with all of you. So please stay for a little extra time after you finish, and that's when we will have our minister's address. It's for 10 minutes. I'm just disclosing the timing, so you can also plan when you want to exit. And thanks for coming, Mr. Nilesh Shah. We have I've heard you many times in IMC and other places. Amazing talk you have given. What in-depth knowledge, since I know you've spoken earlier and I've heard you. And I'm very happy to see you that you've come in. We're extremely thankful. And I think Mr. Sunit will introduce all of you, Mr. Narsimhan, Mr. Munot, and Mr. Balsubramaniam. Thanks a lot. And I'll leave Sunit to moderate the whole thing and take it forward.
I think Ashutosh, we need to, Satya, would you please check if Ashutosh is there or not there? I suddenly see him missing. But
I'll just check.
He had joined earlier. I've
he
seen
was,
him.
in fact, I saw him.
Yeah.
So I'll just, okay, hopefully he'll come in.
But presently he's not there.
Yeah, so I think, yeah, okay, he's coming. So thanks, Ashutosh, for readily agreeing to moderate this session, and Nilesh and Bala and Navneet for agreeing to come on to this session. And Nagarajan, thanks for presenting a perspective or agreeing to present a perspective. And I think I will borrow a sentence from one of our earlier panelists, Ajit Shivanandan. The last few months, as he said, there are decades when probably nothing happens, and then there are weeks when decades happen.
Yes.
And a very well put perspective. The last 5 or 6 months. So
I think Ashutosh had just messaged here that someone has changed his status to now he's there.
He has come in.
Yeah, there he comes. Yeah, so I think that's sentence where Ashutosh, just to repeat, there are decades when nothing happens, and then there are weeks when decades happen. I think last few weeks have been that, and probably I would say last 2 years. I think the volatility in the financial sector and some of the other NBFC sectors, etc., that has caused for some of you in the industry is unparalleled. And there are lots of things to discuss, and I would kind of hand over. All of you are very well known to me, and they're very eminent people, and I'm not going to get into a lot of introductions, but I think each one of them come with a lot of experience and perspective, and I think that's the most important. They've seen the industry for a very long time, and I leave it to Ashutosh to take you from here and proceed.
Thank you, Sunit. Thank you, Rajlakshmi. I think the glitch happened was somebody seemed to have placed me as an attendee mode suddenly. So I could hear you all and see you all, but I could not participate.
So we saw you first, and then we suddenly...
That's all right.
Yeah.
So thank you so much. I think it's I feel a little humbled in this panel because I'm part of the smallest, newest business here, and I have before me all these people who have been in the industry for 25 years plus each, and have grown fantastically large businesses. But before we start, I think we have Mr. Nagarajan Narasimhan, who's going to give us a quick background, a backdrop for the sake of participants on the status of the mutual fund business. And I'd like to request him to keep us to a point, because I think we are a little short on time overall. But so it's over to you, Mr. Narasimhan, to take the participants through a background on the industry, and then we'll come back and do a discussion.
Yeah. Good afternoon, everybody. Thanks for the opportunity, first of all, Sunit, and to ISCC. What I'll do is I have a very short presentation. I know, Ashutosh, we have stalwarts from the industry, Nilesh, Bala, and Navneet. I think cumulatively they would have more than 70, 80 years of experience. So I think they will be far better equipped to share as to what's the future likely to be. What I will give is, as CRISIL and CRISIL Research being a participant in the industry, not a player itself, but I would say the role of a commentator on the industry. So try to give a outside-in perspective of how we see the industry over the longer term, especially in the light of a very I would say, interesting and a challenging year. Not just COVID, but 2020 also saw a challenging time at the start of the year on the credit side. So, in the backdrop of which, I think it'll be a good segue to take a look at what does the industry sort of hold in the future. Is my presentation visible?
Yes.
Yeah. So I have basically divided my presentation into two components. One is the backdrop of macroeconomic. I think it's important whenever you look at a particular industry, it's important to see how that particular industry is faring in the backdrop of the overall economy. So I'll just do a very quick view on CRISIL's macroeconomic outlook, and then get into the mutual fund industry itself. So, and the macro, I think, to use the phrase, I think we were an economy on low immunity even before the COVID start. So, while we are one of the few economies which are growing negative, I think first quarter was minus 24%. And for the full year, we are, and there are many estimates, right, ranging from high single digit negative to low double digit or low teen sort of growth rate for the full year. But I think the point, and also on the back of one of the most strictest lockdowns globally, I think the backdrop to this has been that the last couple of years have been a period of weak growth. And in that sense, we entered this COVID shock with a very low immunity. So be it the GDP growth, be it the private consumption, even the investment, private sector investment, except for the government investment, I think overall economy was fairly muted over the last couple of years. Add to that, we have had a series after series of financial sector issues, starting with the IL&FS crisis 3 years before, to multiple credit events, including banks and various other entities falling into the challenging path. And that has added to the domestic vulnerability. And at a time when the fiscal scenario is also weak, I think we already had the FIS at the center looking close to 4% deficit. And if you include the states, it was high single digit fiscal deficit. And the ability of the government to do the heavy lifting was limited. And even though the Prime Minister announced an overall package of almost 10% of the GDP, if you included the fiscal and the monetary measures, the actual outflow of the government to buttress this entire trouble has been probably less than 1.5 to 2%. And that sort of has sort of resulted in what we are looking at. While the economy has sort of opened up, it is I would say it is in a stuttering form, not in a smooth form. Because there are many places now, starting with the urban, now it's seeped into the rural segments where the overall infection rates are high. And given that our expectation for the year, this is the financial year 21, is a minus 9% growth rate. I think the challenges are there. Containment, we are still not seeing the peak or the plateau before we bring it down. And the economic cost of this entire COVID, fiscal support I talked about, global weakness, again, that's been a challenge. The only probably silver lining has been the muted crude oil prices, which where India is a huge importer, and that's a positive. And the other positive has been the agriculture sector. I think thanks to the gods above, we have had a bountiful monsoon. And not only the Kharif, but also hopefully given the water table levels, I think the Rabi crop again this year should be fairly robust. So with this background, we are looking at a 9% negative growth rate. Having said that, with the low base and the rising tide effect, we expect the overall GDP to bounce back to by 10% next year. So effectively in FY22, we will be at the same level as we would have ended FY20. So it's technically a loss of 2 years in overall terms. And we try to sort of model this. And in our assessment, effectively, we have lost there's a permanent loss of almost 13%. And in absolute terms, this is almost 30 lakh crore of GDP. Because even if we grow at 10% next financial year and grow at a steady 7.5% growth rate in the subsequent 3-4 years, I think we will still be almost 30 lakh crores if this entire crisis had not happened. So this is the backdrop in which we need to look at the overall mutual fund industry. So before I get into the outlook for the industry, just want to do a very quick status check on the various trends that we have seen over the last 5 years. One has been the very strong individual investor participation. I think if you look at the high net worth individuals and retail segment, cumulatively that has grown for almost 45% to 50%. And more importantly, the folio count has almost or more than doubled to almost 90 odd million by end of June. And very, very positive fact is that even during this lockdown times, we've seen additions to the folio count. And the second is the largest share of the inflows have been on the equity side. A large part of the individual investors continue to focus on the equity segment. So equity as an asset class has also seen a share increase over the last 5-6 years from around about 30% to almost 40%. One interesting fact, if you see at the top, though it is still a small percentage, the others, which largely is passive investments, has also seen a increasing trend. I think from just around about 1% to almost 7% as of last quarter. And I think that's a trend that we expect slightly to increase going forward. The second interesting aspect is the entire distribution, how that has changed. The share of direct plans has increased significantly from 34% to 47%. However, that's largely in the institutional investor space. Even in the individual retail or retail investor, I think there has been a marginal uptick from 17 to 21%. But if you look at the distribution channel mix, I think that's where banks continue to play a large role. But one also needs to keep in mind that some of the changes that have happened in the last couple of years. If you remember a couple of years back, SEBI had come out with a circular on reduction of the total expense ratios. And subsequent to that, there has been a significant change in the distribution commissions. And what we have seen is very interestingly, while banks, one of the largest segment where the distribution commission levels have significantly come down. And we have also seen that in the smaller players, be it individual institutional distributors or regional players, and that's also reflected in the market share coming down. I think the large national distributors are a segment where we've seen relatively the distribution income levels actually remain unchanged. So probably what one could infer from this is that we will see probably greater sort of consolidation in this entire segment, probably also where SEBI is also looking at distribution and advisory sort of segregation. So that probably might also accelerate, and also the greater penetration of direct route. So this is one trend that we have seen which will accelerate. The other part is on the overall industry structure itself. If you see, I think the number of players still remain in the low to mid 40s. There have been a few players who moved out, so a few new players coming in. So the overall number of players itself has not increased. But if you see the concentration or the market share of the top players has remained strong and only has inched up further. And this shows the nature of the business, and also probably from the user's point of view, where they would probably look at strong sponsors for entities where they would want to invest in. Looking forward in terms of what are the drivers for growth, very clearly, I think our demographic, hopefully it will be a dividend. The sheer population itself increasing by 6 crores and the potential investor base, if you look at the working age population of 15 to 60 years, that is going to significantly increase. I think the other large trend that we see is the beyond 30. I think while the top 30 still accounts for a lion's share of the total penetration, I think the sustained effort by the industry as well as by the regulator in terms of pushing and incentivizing the move beyond the top 30 should increase the penetration levels and hopefully help India increase the overall mutual fund penetration closer to the global average over the next decade or so. So today we are at 12%, around about 25, 27 lakh crore in a GDP of around about 200 odd lakh crore. Assuming we sustain a growth rate at an overall GDP of around about 6-7% over the next decade, the financial penetration, and which I'll come to subsequently, and the role of mutual funds should substantially increase. The second is financialization itself. I think one large trend that we have seen is the substantial increase in financial savings itself vis-a-vis overall savings, which means moving away from physical savings to financial savings. Within physical savings, we've seen that shift because of the challenges in the real estate sector for the last decade. While gold as an asset class is still performing okay, I think real estate has been a challenging one. And we've seen that shift from away from real assets or physical assets to financial assets. Within financial assets, again, we've seen a larger shift into the market. One of the trends that we expect going forward is also while bank deposits and some of the small saving schemes have been seeing a lion's share in the overall investments by individuals. There again, given the fact that government has continuously sort of brought down the small savings rate and trying to make it more market linked, I think that should augur well for the overall investments in the mutual fund segment. So overall macros, and linking it to the initial point that I talked about, that the growth rate itself might slow down, while that overall economy, it is probably not a positive. But however, what we see is that this could lead to lower consumption, but the savings or investments might actually increase, and which is a positive as more and more people save for the rainy day. The financial savings and within that the mutual fund segment should see a uptick because of that. And this is also seen in the SIP trend. While there has been a slight dip in the last couple of months, but still month on month over the last couple of years, we've seen close to $1 billion every month. And that's one of the very positive redeeming factors that we've seen in the last few years. And I've seen this market for more than 20 years now. There used to be a time when the equity markets used to be swayed by the FI inflows and outflows. Every time you read the Economic Times or any financial newspaper, that used to be the headline. But nowadays, it probably the domestic institutions and led by both insurance as well as the mutual funds have a far bigger say in the overall market movement in that sense. And the other interesting trend that we have seen is the increasing technology adoption. We have seen, like I talked about, the demographic change. The median age is going to be almost 28 years, and which means the large part of the investing population will be the millennials and the digital natives, people who are just around about turning into voting age. And these are the guys who will sort of adapt like fish to water for a digital sort of environment. And that we've already seen. Share of digital investments have moved to upwards of 20%, and we believe that this will rise very, very sharply. You can almost see a hockey stick sort of curve there. And second is the rising folio count. Even in a crisis time like COVID, when most of us have been working from home, investments have continued, and people moving to the market and moving into mutual funds has increased. So folio count has seen a sustained increase even during the period of lockdown. So that's the true sort of the dividend of investing in technology and moving that curve. So I've talked about technology. I've talked about the declining expense ratios. I think the other positive facts is also what the regulator has done. Categorization of schemes has been made uniform, far more disclosure. So I think far more transparency in the entire set of operations, I think, and we work with across the various asset managers and manufacturers. And I think mutual fund industry is one segment where we have this mark-to-market daily sort of NAV and daily sort of liquidity. I think it's a fantastic thing that we as an industry have developed, and probably best in class in the world in that sense. So I think there are a lot of positives that we believe will give a fillip to the growth. So while the macroeconomic outlook, at least for the short to medium term, might be negative, we believe that the India story is still intact for the longer term, and that will sort of reflect in the overall growth in AUMs. If you take the last 5 years, the growth rate has been fairly strong. If you take even the 10-year period, the overall growth rate has been around about 14%. We believe that it is it's a great opportunity and very, very strong probability of the industry to grow in very high teens to almost double to 50 odd lakh crore by 25, and on track for the overall target of around about 100 lakh crore or in the next by the end of the decade. And in that context, we believe that the trends will continue, probably will only accelerate. One of the things I heard the earlier set of speakers also talk about. I think what we are seeing, COVID, and this is not just mutual fund industry. As CRISIL research, we track close to 100 odd sectors. Sector after sector, if you see the trends, it is not some new set of trends are emerging. It is the same existing trends which are been either happening or underneath the surface. They have just exploded, and the rapid adoption is something that we have seen. So stuff that would have otherwise taken a decade are probably taking months to happen. And that is something that we also expect in the mutual fund industry, where I talked about digitization and technology use, the movement of millennials. I think a lot of these factors actually will help propel the growth. And we expect the growth to be across segments, but slightly more skewed in the equity segment. And also, like I said initially, probably in the passive, probably ETFs, which were 1-2% few years back, moving to 7%, probably will accelerate further to low double digits by the end of this forecast period. So that's broadly, I have to say, I think it's a time for growth, sustained growth. But I think it also needs the continued focus on financial literacy. I think the industry plays
if I may, Mr. Nagarajan, in the interest of time, I would request if you can bring your presentation to a close quickly. We need to start with the discussion.
Ashutosh, this is my last slide. So this is for everybody to read. So I think there are caveats or some risks, but I think overall it's a positive outlook that we have as CRISIL for the overall industry's growth. Thank you.
Thank you so much for laying that background. So in the interest of time, and I don't think we have much time left, but I'm going to actually then dive straight into some of the key challenges with given the intelligence on this panel about the industry, some of the key issues which against this backdrop that we face. And clearly the views of the panelists will carry a lot of weight in light of the fact that we have at least two people who have steered the Association of Mutual Funds. Nilesh is currently doing it. Bala's did very successfully for a couple of years. And of course, Navneet, who carries a full flag for the largest players in his performance. The question I have, which has come very sharply in focus for us recently, is that are we carrying the mandate of investing the small investors' money well enough? And I think that keeps coming up when from time to time it gets questions, particularly in rough times. We saw that happening earlier in the year. Some accidents happened a couple of years ago in the debt market, equity market. When it nosedives, people raise questions, and they, from seriousness, raises from just taking a pot shot at the industry versus raising some serious issues. So when these kind of events come up, clearly it's always time for introspection, for the industry to look at itself and ask ourselves, are we doing a right job? Are we doing a good enough job of managing the fiduciary responsibility placed in us? And it always comes to be called upon at rough times. So I'm going to actually start with you, Nilesh Bhai. You're currently at the forefront of leading us as an industry in the association, and I must compliment you on the quantum and the size of challenge you've taken on to lead us, and we're doing a good job. Do you think there is somewhere a doubt that keeps getting raised that fund managers, mutual funds have a lot of discretion in what they do with the money of the investors? And that every time we go through a bad cycle of the market, the question gets raised in some form or the other. Do we have too much discretion? Should the discretion be curtailed? And from time to time, suggestions are made. And of course, sometimes we ourselves bring ourselves into some greater ring fencing of risk. But broadly, do you think we have enough discretion? Do you think we have too much discretion? Do you think there is room for still further managing this discretion by ring fencing? What's your broad thinking? You've been in this market for a very long time and managing money. So what do you think where we are as an industry?
So as an industry, if we look at the track record vis-a-vis comparable peers, I think we can legitimately say that we have done a good job. If I compare foreign portfolio investors vis-a-vis domestic mutual funds, we stand out. if I compare vis-a-vis other competing industry, let's say private PMSs that is not managed by mutual fund, or insurance industry or pension fund industry, we have done a decent job. If I look at from a government point of view, did they ever have to intervene to capitalize mutual fund industry? Answer is no. But they do it regularly in banking industry, NBFC industry. So whichever way I look at it, we have done a decent job. Now, obviously, it's not that we have done a perfect job. There is always scope for improvement. And we do get encouragement and guidance from regulator, from independent media, who say that, okay, these are the points where you can probably do a better job. At the end of the day, hand on heart, I can say that mutual fund industry believes sunshine is the best disinfectant. There's not even a single industry in India, in financial services or outside of financial services, which has the kind of transparency and disclosure standards which mutual fund industry has. At the end of the day, I can't guarantee performance. That's function of market. But I can always guarantee disclosure and transparency. As industry, we believe we are in the business of managing trust, because performance can't be guaranteed. And as long as we are transparent and disclosing everything honestly, fairly, the trust will be maintained. And finally, to all the critics who say that you haven't done well, we haven't reached here without doing well.
True, absolutely. I think well said. Actually, I think we are in the business of slowly building trust. If I get your drift right, and it's so true. I think most of us have been there for more than 25 years each, and we've seen. There was a time people used to not recognize the name mutual fund, and we've come to a point where we have millions of people now opening SIP accounts on a regular basis. Clearly, trust is getting built, and you rightly say it is not that you can guarantee the market, but you can guarantee transparency. I'm going to sharply question a little more in that direction from Bala, you. In the last couple of years, we saw, particularly in the debt market, and you've been a really great manager in the past. I know that today maybe you do not directly manage money, but your insight in the debt market is amazing. And we've seen many accidents, okay? And of course, many more accidents have happened before, that's a different matter. But in the last 2 years, unfortunately, some of these accidents also affected the mutual fund portfolios. And that did raise quite a storm. And there were questions being asked. But I know that you and your a bunch of people from AMFI, the evaluation committee, and you yourself, I know Nilesh himself, many of the leading managers of the debt portfolios engaged very strongly with all the stakeholders. Where do you think we've come in the last 2 years? What has changed to make people more comfortable around the debt in terms of discretion we have and how we manage?
Yeah.
What's your perception?
Yeah. I think interesting, Ashutosh, fixed income market, when it comes to the question of mutual fund, people generally think equity mutual funds. And fixed income, people generally forget, plays a very big role in the savers portfolio, as well as in the development of the bond market. And as Nilesh mentioned earlier, that industry, of course, keeps evolving, and then we keep learning, and then we keep building the size of the portfolio to a larger size. That's why we are there today, because whatever we have done in the past, we have made, of course, corrections and kept improving it. The one other thing that, of course, in the credit market, again, we have seen the cycles, 2008 cycles we have seen. I've seen in the 1999 to 2002, there was a recession. There were big companies in India were under stress, and they were at the risk of getting downgraded, and the yields had shot up, and then we were, I think mutual funds were getting impacted at that point of time. In 2008, 2009, after the financial market crisis globally, we did go through a similar situation what we saw in 2018, and the industry did manage it that well. All the exposures that was there in the real estate segment. And I think if you look at uniformly, all this period, including 2018, Despite all the issues that were being discussed were there in the mutual fund industries, because they were also building up the credit space as one of the area of new focus. I think fixed income, if you just stick to only your AAA way of investing, it'll become a lazy investing beyond a point. That's one kind of happens. Then second is, as normally people chase the yields, as it happens in equity. If large cap doesn't do well, you say mid cap will do well and small cap will do well, which is nothing but you want a higher return for the risk that you are taking. The same way, if you draw a parallel for fixed income schemes, you invest only AAA, PSUs, you'll get only so much. And if you want to actually take a higher risk and go down the credit curve, and that's one of the challenges India has got. India has got a challenge on developing the bond market, going beyond AAA security. That's what the mutual fund tried to do by way of introducing credit risk fund. I still remember when I was driving until categorization of schemes as part of the AMFI, jointly with SEBI, we had a long argument on, we used to call this fund as a credit opportunities fund. And then there was a question which came from the media. I think Nilesh mentioned about media plays a role in even the development of the market. One of the media person played a role. What do you mean by opportunity? It's actually not opportunity, it's a risk. With great difficulty, finally all agreed that let us change the name of the fund from credit opportunity to credit risk fund to tell the world that there is an element of risk for the going down the credit curve that I'm taking. And that's something which we said. I think 2018 is something when I look back and the subsequent events you will get. In 2018, had it happened during the COVID period, nothing would have happened. Because during COVID period, whatever has happened, completely got saved because of the government intervention, various stimulus that has been given. Regulators have now become extremely conscious of the fact that no more credit defaults. And therefore, 2018, that the LFS crisis had happened. That's something which I think is more of an accident, unprecedented. Having said that, in the mutual fund industries, having now have gotten such kind of risk, will be the quantum of the issue that came and hit was only a 1 to 2% of the overall industry size. Unlike the banking industries, non-performing assets and various provisions the banking industries makes on their size, which goes in about say 3 to 4% of their balance sheet. Whereas the mutual funds, it's very nominal. That too, if I take the quantum of money that was at risk, and a total of about 13 lakh crore size or 14 lakh crore size, it was roughly only about 6,500 crores, out of which not all 6,500 crores have gone. Only small proportion of the funds would have got written off, which is roughly about say 2,500 crores, which can be counted in basis points. Suppose it was made out as a big issue from the credit market point of view, absolutely no doubt. Again, that's the price that we are all paying, being extremely transparent and highly disclosed environment in which we operate. But having said that, one thing that I always take pride being on the part of the mutual fund, one of the areas the struggle always used to happen in the Indian bond market, which is called money market securities, the price never used to get fixed in the bond market. And thanks to the mutual fund, just simply by one introduction of a liquid fund or the short-term debt fund, the entire money market curve actually in the country got changed big time. Thanks to the mutual fund industries played a bigger role without, of course, taking any credit for that. Even the Raghuraman Rajan, when he was RBI governor, he made one statement: the banks are not cutting the interest rates. The most of the transmission of his rate cut has happened through the mutual funds because they have been able to lend money at a lower rate of interest. Of course, we don't need to bring in capital, therefore we can lend the money at any rate of interest. But that's something as part of the whole exercise. But one thing I can only say that while the credit market will go through ups and downs, one must also remember that globally, the credit market is one of the biggest. It's called a junk bond market, which runs in about $3 trillion. And India, I think we all as the mutual fund players try to develop this kind of market. And knowing very well, there's some segment in which I think we have to gradually transition to provide greater opportunity of diversification investors. Having seen these cycles, and the industry also learned from that, as like what we learned in 1999 tech bubble. The industry also has learned, which is nothing but putting some sort of cap on the exposures, looking at various instruments that you take, and then make it as part of the learning. The more we bring in tightness, it's good for the investors from the point of view of transparency and making the portfolio more safer. And also one must remember, it also comes at the cost of the return going down if you don't take enough risk also. Therefore, the mutual fund money managers should also be encouraged, take some element of risk, and as long as you're able to get payoff to the risk that you are taking, then it's worth actually taking that risk. given the fact that we play the role of both, taking care of the investors' interest. Second, we play the role of the development of the market as well.
Thank you, Bala, for the quick summary of what's really happening in the debt market. You rightly said it's an evolving scene, and the tighter you get in risk taking, return will be lower, but clearly we are in a safer space than where we were from the point of view of risk management and discretion that we have. Turning to you, Navneet, an equal question on equities. Now, I know there was a small storm in the teacup recently when the regulator came and said, oh, your multi-cap funds must hold at least 25% in every capitalization. And it foxed many of us as to how we were going to meet that. And of course, I'm sure the association has made all kinds of suggestions and representations. But that raised a broader question that equity managers in a continuum of risk are seen as the highest risk takers generally. And by and large, they are likened to, from being cowboys to being very prudent and very conservative also. There's a whole spectrum of them. Generally non-discretion on and putting a lot of ring fence around equity is not seen across the world as being the right thing to do. However, in our markets, there are certain risk measures. Latest among them was what we saw happen a couple of weeks ago. What's your perspective? You've seen it from the beginning. I mean, I remember the time there was nothing. You could do anything with the money. To a time now where you've got all sorts of lines to draw and work within boxes. What's your perspective? Is this getting better, or is this not really so much better, and the investor may have to look somewhere else to find a better return? How do you see this?
No, we've come a long way. I and Bala used to sit next to each other and used to lend money in call money market and used to compete hard with Nilesh on the other side, who's lending better. Entire lending used to be in an unsecured call money market. And from there, whether it's the development of the CBLO market or the repo market, the money market, there were so many committees in 90s, but finally the money market, the commercial paper, certificate of deposits got developed because of the active participation, intervention, thought leadership by the mutual funds. Whether you look at the development of the securitized market, the whole PTC market, and after that, the number of innovations, I think all of us would have tried, whether to develop the floating rate bond market or the index bond market, or variety of things. Of course, it requires a whole ecosystem. But I think from our end, we have been trying a lot. And of course, the regulation has got tightened in the last few years, but even in 90s, I think it was through sheer competition, as well as the better governance of the mutual fund industry, the kind of disclosures that started. So the monthly disclosure of the full portfolio, I think started by mutual fund industries far ahead of when the regulator asked us. And I can give you 10 other examples where how the self-regulation or best practices in terms of governance actually came from the industry on its own without the nudge from the regulation, because simply you always believe that, I mean, if you do well, if you keep the product as transparent as possible, if you try to deliver the best risk-adjusted return over a long period of time, you will earn the trust of the investor. And that's how I think industry has got built. On the equity specifically, you are right. I think we have come a long way compared to when you remember in 90s, in the 92, 94, the kind of IPOs where you couldn't be certain whether the company exists or not. You couldn't trust the balance sheet or the annual report. We have come a very long way. And I think today it is not only about avoiding the mistakes, but even, I mean, the active engagement. Stewardship code is like a huge move ahead by the industry. Over the last 8 or 9 years, all of us have been trying our best to engage with the companies proactively through our voting, etc., to improve the overall corporate governance standards, raising our voice. I think that's a very a big change in India. Even in US, you have the small set of hedge funds who are activist investors, etc. But I think industry is doing it in a very constructive manner, very proactive manner, and not in the manner in which some of the activist fund perform in the United States, not in the interest of all stakeholders. In terms of taking risk, I think it's important to, I mean, you use the word cowboys or whatever. So, I mean, you have two kinds of product. One, you have a passive fund where industry has done a good job. If you look at the tracking error of our passive funds, I mean, if you compare, let's say Nifty, which just crossed the milestone of 1 lakh crore in AUM, tracking error of Indian managers who are represented on this panel today, or a lot of others, is the lowest in the world compared to, I mean, at the kind of size that we manage, the kind of markets we have. within that and with those constraints, we run passive funds with the lowest possible tracking error. That's what the risk management there is. And when it comes to the active management, I mean, if you hug the benchmark and you don't take the risk, you will not generate the alpha. Investor is giving you money because investor thinks that a fund manager can deliver a performance which is better than the benchmark, but within a very well-defined criteria. So your universe is fixed after the classification, even before the classification. I think all of us had our internal templates in place. So your boundaries are well-defined. Within that, you use your skill set and try to deliver better than the benchmark, and with full transparency where investors have complete access not only to the month-end portfolios, but in the bond market, you come to know about the trades on FTech, etc. within few minutes. If you buy or sell more than 0.5% of a company's capital, it gets reported. The kind of transparency which is there in Indian capital market is absolutely unparalleled, even compared to the developed markets. And I mean, just like Bala and Nilesh talked about the industry and particularly on the fixed income side, I think same thing on the equity side, we have done a reasonably good job. There are always scope for improvement. I'm sure we have a long way to go.
Thank you, Navneet. I think we echo the same sentiment that greater transparency is the only way forward, and all the ring fencing will fail unless we keep continuously winning the trust of the investor by performing, by sharing information all the time. You touched upon an important aspect of this about stewardship. And, you know, Peter Drucker in the 1970s, when he saw the mutual fund business in US beginning to develop, made a very interesting forecast. He said, this is the movement that's going to change the nature of capital in the world. From being capital being owned by capitalists, which it used to be, and in India pretty much still is, capital will be owned now by many, which is the households. And that will change the manner in which the capital gets used, because the owners of capital who are more democratized, more retail, more households will insist that it should be used in a manner conducive to their lifestyles, which we see happening. So therefore, that raises a big issue that are we going to be able to get every household in India to own the mutual fund? So I'm going to actually start with Nilesh Bhai. You know, you've been at the forefront of this whole effort of taking this forward, and something that Bala started, but currently in your leadership, of making every household aware first that, you know, there is such a thing called mutual fund. How do you see that? I mean, that's, to my mind, making awareness happen is key. Where do you see that going, and the role that it might play in eventually us having a very democratic capital markets where it's owned by millions of people and not by a few capitalists? How do you see the awareness playing a role? Nilesh Bhai, you're on mute.
You're on mute, yeah.
Globally also, we have seen that mutual fund see J curve in terms of growth. It takes 30, 40, 50 years to reach critical size, and then you start expanding exponentially. If we see today, there are enough catalysts for ensuring that mutual fund reaches to every single household in India. The first and the foremost is that household should have savings so that they can invest. As your per capita GDP crosses $2,000, the savings pool will increase. Second, India is fairly diverse. There are probably more countries in India than half the world. And within those challenges, now we are leveraging technology to reach out to customer. In the 90s or 2000s, technology was not that easily available. And hence, now we have far better ability to reach out to investor. Third is the intermediation cost. Our intermediation cost is a fraction of what our competing industry in savings pool charges. So with that fraction of intermediation cost and technology to reach out, we can definitely cover every single household in India. More importantly, SEBI blessed us with investor awareness program, and mutual fund Sahi had changed orbit on the SIP side. And this was all based on commonsensical advertising. Whereas our competing industry were using brand power, film stars, cricketers. Now we have covered that gap, and you are part of that committee, Ashutosh, where Mahendra Singh Dhoni, Sachin Tendulkar, Rohit Sharma, they are all advocating mutual fund or aspects of mutual fund. So with technology in place, with lowest intermediation cost, with brand power coming into play, and most importantly, our ability to add value to customer, I don't see a reason why Jacob starts happening for Indian mutual fund industry. As the economy grows, as the saving pool grows, our share in that saving pool will continue to rise.
You very succinctly put out many of the points: intermediation, awareness, and the impact that we are making already in making people aware, giving legitimacy to the concept of mutual fund with the Sahi and campaign, which I must give credit to Bala for having initiated when he was the president of or the chairman of Association of Mutual Funds. So Bala, I'm going to pick on one particular space of that reach out, because clearly awareness can happen, and it will, given the impetus that we are all putting behind it. But in your experience, and I've seen that in your, particularly in the business that you manage, one of the key factors of success of penetration is distribution. Being able to reach the product successfully. I mean, we can reach awareness, but if there's nobody from who somebody can buy a fund, then how does he actually, become a fund owner? And you've had some tremendous success with distribution in the space. So talk to the group here a little bit about what are the key levers of distribution you see changing or consolidating to make that reality happen, that the fund reaches, mutual fund reaches every household. What's your vision of that?
Yeah, I think interesting. I think you mentioned about mutual funds. So when as a industry members sat and discussed about how do we increase the awareness about mutual funds, that first and foremost came, of course, you are a marketing genius, therefore for you it's something as a routine. But I am not a marketing genius. When we discussed about this, and it came to my surprise, it said that we have to create a brand in such a manner that it becomes, it appears when people have a coffee and chai in the early morning, and they should be part of the discussion. They should discuss about mutual fund investing as a food. And that's why we created it. That's one of the reasons why it has really caught on quite well. But having said that, distribution is something which I think one of the things that I have seen when I was looking at building our own distribution reach as an Aditya Salim mutual fund. Personally, I'm quite inspired about the way Lever has built the distribution model. The way I think they have gone ahead and expanding into every parts of the country, which is like creating a hub and spoke model and making every individuals in the respective locations who can actually do both service to the community as well as serve the nation in the form of channelizing the pool of money into the capital market. So that's why for us, since we are not a bank-backed mutual fund, clearly our dependency on increasing our own distribution remained very key. And that's something we did it through a high level of engagement with individual financial distributors. It's not just only about doing a training is important, making new guys actually to come into the industry. And B30 market, when SEBI had introduced a new term called T15 and B15, now it's called T30 and B30. Then the question is, when they're given some kind of purpose, then that means that industry needs to work seriously on that. And that's why I think we as a fund house started doing, stepping up our focus on deeper parts of the country. The cities have got a high competition, no doubt. But in Mumbai, one has to compete to the 42 mutual funds. As you go down the path, then your competition comes down, then you are able to actually serve much better in those smaller markets to address the needs of the smaller audience in a better way. So that's why I think we went about expanding the reach. And finally, is all about how much of the commitment you want to bring in to create the awareness. I think one thing that we have realized, what is most important is not just only your performance and the way you give give your input on various things and process everything. All of them actually is becoming part of the hygiene factor. They're all a must. And that generally I call it as the heart of the mutual fund industry. So heart has to function at all the point of time very successfully. Otherwise, the industry will die. But having said that, all the ancillary work that we do with respect to the engagement and encouragement, and both I think have to go hand in hand. And that's why we said that from distributors' point of view, so one of the biggest lacking area was the motivation. I remember having traveled in the year 2011, 2012, and the markets before the pre-election period, the entire mutual fund industry is having a dullness in their activities. Distributors were not happy with the way the industry was evolving. And what was most important at that point of time, which we identified as the area of focus, is motivation lacking, which is there with most of the distributors. They need to improve the lacking. So then we brought in actually a social element of that. And I mean, social element on that is about spirituality, philosophy, kind of approach that we take. And that's why we started, let us not give a mutual fund talk, mutual fund gyan. Let us start giving actually how to actually be, you have to be a good individual, how to have to serve the society. So that's why we brought in, I can even take the name of the gentleman, Swami Sugavananda from Bangalore. We had a first session in Jaipur, and we had next session in Bombay, then we had next session in Delhi. And getting an appreciation from people from Delhi is extremely difficult. And we got the appreciation from Delhi list of distributors. Now we feel motivated for to do more business. These are some of the things that we tried, and all of them are touched to work well. Of course, we still have a long way to go with respect to increasing the distribution reach in India.
I think it's ingenious. You call me a marketing person, but you are very ingenious in getting spirituality. So, Navneet, there's a very important part of this puzzle or the element of this whole riddle. That is, yes, distribution can be there, awareness can be there. But ultimately, it boils down to the product and its delivery, right? You know, people will buy something which works for them. And it's for a layman, it's such a complex affair. And many times, many distributors and many platform owners have come to us individually as well as collectively to say, why can't you people just keep it simple? Give me one product, right? And then we will go everywhere. So SIP turns out to be that, magic product. It's not really a product, but it's just that mechanism worked for us. But as somebody who's managing money in this country for such a long time, do you think there is a one or two magic solutions which will break open the bank for the fund industry from a product perspective? In the US, for example, many years ago, it was the cash fund, right? And the moment somebody introduced a check writing facility in the cash fund, it just broke open the whole business. It went to every home. But in India, we're a very different structure. We're a very different business. What do you see the role that product will play, the fund management ability to deliver a return or a result? How do you see that?
So because you talked about the US, so US mutual funds were around $150 billion or so in 1980. And then in next 20 years, they reached $5 trillion. So it was a huge journey. I mean, and there are striking parallels between where US was in 1980 and where we are today. And those are like 3 or 4 very briefly. So you had Ronald Reagan, who said government has no business to be in business. We are also trying to do our best in terms of structural reforms. Maybe the gains will be seen over a long period of time. You had Paul Volcker, who said that Federal Reserve will not allow higher inflation again in the country. Over the last few years, I think with prudent monetary and fiscal policy, we have been trying our best that how we can keep macroeconomic stability without having higher inflation. The third thing that happened was that the baby boomers, I mean, it was at the right point in time in demographics, and I think India is also at that point in time. The fourth thing that happened was 401k. And there was like one of the most important aspect of the growth that US had, not in the mutual fund industry, but as an economy. And I think the regulatory support, the policy support that the development of capital market is crucial for the growth of the economy in long run. It is also crucial for social security because you cannot have the unionized system of providing security to a large part of the population. It has to be driven by the development of the capital markets and a good fund management industry. And rest is history. Of course, with that completely driven by the market where much lax regulation also had some of its excesses, maybe in 2008 or whatever, but over a 40-year period, I think they have delivered a lot of prosperity to the country as well as to every citizen in the US. Now, I give you the example of China over the last 3 or 4 years. And very interesting that China has grown, the mutual fund industry in China in last 3 years have grown by 70%. And particularly like last 1 year where the whole world has degrown in last quarter, I mean, they have grown. Because as a country, they have decided that mutual fund industry is of a strategic importance. Is of a strategic importance at the policy making. It is as strategic as we are focusing on defense or some of the other things. And just like I mentioned about that, for a long-term sustainability of growth, to ensure that you have savings, to ensure that the savings come to get channelized into the productive assets, to ensure social security over a long period of time, as people are going to live beyond 100 years and you don't want to go back to a bigger problem over a longer period, like a lot of other countries, other emerging markets have gone into trouble because they didn't have well-developed capital markets or the fund management or the pension industry. And I think this is what is needed. Nilesh Bhai and Bala have touched about the importance of whether investor education, the importance of technology, but we have to think strategically that, let's say if India has to become a $5 trillion economy, if our investments have to be 35%, which means you are talking about $1.5–2 trillion of investment a year. How much you can rely on foreign money? You cannot, because then you are very vulnerable to variety of things, which we have seen maybe in last few months. Large part of this has to come from domestic savings. Your investment cannot be funded through the banking system. Otherwise, one single balance sheet of the government is underwriting the entire economy's risk. That if something happens to Yes Bank, maybe some institutions have to come together, or tomorrow if there is some another risk, then how do you underwrite that? So it has to be, the risk has to get well diversified. And from a social security perspective, the first thing is what the government has done in last few years in terms of LPG cylinder to LED bulb to whatever. But over a period of time, how much money you can distribute from the fiscal side, you have to develop that social security through a very high quality, very deep, very vibrant mutual fund industry. I think once we do that and we start working whether our every regulation, every policy, how do we put the technology together, and then we move in that direction, I have no doubt in my mind that given the professional excellence, given the governance standards in our industry, that we won't be able to replicate what some of the other developed countries have done in our industry.
I think we're running out of, thank you, Ramneet. I think we're running out of time. So I'm going to not wind it up. I'm going to ask Nilesh Bhai, who's currently now the chairman of our association, for his last word on where do you see the vision for this? I know that we did an assessment of this with the help of external agencies, but many things have changed in the last 9 months. And do you still, are we on course? Where do you see this going? How would you see this happening over the next few years, the fund industry?
So, Ashutosh Bhai, there can be many quantitative measures of success, and which we have achieved in the past. But I think when I speak, I'm speaking on behalf of Bala and Navneet also. At the end of the day, we are an industry which has to collect blessings of investors. The day my investor starts blessing me, and all of us have witnessed such incidences in the past while going to public place. Today it is sporadic. Today it is with few people, few investors. The day it becomes universal, we have arrived. I'm not in the business of managing money. I'm in the business of managing trust. I'm not in the business of generating return. I'm in the business of generating blessings. The day all my investors starts blessing me, we have arrived as an industry.
Thank you. Very interesting thought, Nilesh Bhai. I think we have to all start counting blessings. With that, I know we are very short on time. I would have loved to discuss the whole issue of digitalization, but for another meeting, maybe sometime. So thank you very much for being on this panel, Nilesh Bhai, Bala, Navneet, and thank you very much, Suneet, for allowing us this discussion, and Rajalakshmi, you as well. With that, I would conclude. I'm not sure there's any time for questions, but if there are, I'm sure people will send them to us.
Can I ask you to stay on? For one thing, first we have to thank you immensely for having come in, such powerful speakers. I think Indo-American Chamber of Commerce is blessed. As Mr. Nilesh Shah said, he's looking for blessings for consumers and others, investors and all. I think our members also feel blessed by all of you having come in and spoken, together and come out with one thing, that trust and confidence is most important in mutual funds. And I think that is the best line. And a long learning has happened in this 6 months. As one said, of decades of learning has happened in 6 months, and everything is changing. The whole picture has changed. How we really look at everything. The whole lens has changed. We have to see it differently in a futuristic form, in a digital form, and with a lot more awareness and trust coming into that. I think that's what you all have spoken at the end and beautifully said. But we would like to give you a small tree in your name. It will be planted across in the country. And that is our humble thank you to all of you. It'll just come on screen and it will be sent to you. And we also have a speech from our Minister Anurag Thakur, which just came in time now. And if any of you have time, please be part of that hearing. We'll upload it as soon as we thank you with the trees. Thank you once again.
Thank you.
The trees, please.
Well, that comes on, Ashutosh, I must say, that you said you are young in the industry. I have to go back to your UTI experience, okay? We don't consider UTI as a mutual fund, okay, originally. But look, that was one of the biggest winners of trust back, if I may say so. If that wasn't done at that time, I think mutual fund would have been sorrier today for the fact that UTI didn't goofed up so badly. I mean,
yeah, it was a rewinning of trust, which is a landmark. It's one of my special memories of life.
Trees have to be brought in now.
Yeah. So, and there was another perspective. I mean, we discussed a lot about fintech just before, and even yesterday on digitalization, and I agree that that's an area that must be changing your industry. And one thing common came out from both insurance as well as from your perspectives. How little the layman has a understanding, let's say, on the insurance side of issue of risk, and also a risk from a different perspective in mutual fund industry, saying, because, okay, shit will hit the roof because markets are there, where they are. But, you know, investors have to understand that you are sort of carry you're basically the one in between, and your transparency ensures that trust. And as long as they know what you are planning to do or what you're foreseeing, I think that should be a good perspective. But the short point on that element of risk is, I think both these industries probably need to collaborate more with a view to increase lay investor understanding. I mean, for example, I'm going to one particular, I don't understand why this should not be an essential life learning skill at the school itself. I mean, somebody has to appreciate what this issue is, and we, as an industry lobby, maybe all of you should definitely, maybe a chapter there, it doesn't matter, but you know, it's important because these are all very important life learning skills, as important as writing a check or doing a bank transfer.
Well said, Sunit. I think it's worth thinking about, but I can say that as a mutual fund business, we made a small beginning. In the part of a campaign that we now do, we specifically do communication films on on broadcast, which only highlight risk. This is part of our communication plan mandate that X amount of percentage of money has to be spent highlighting the risk only, not selling the mutual fund. And I think we might be the only financial services business that actually does that, because we also realize that, you know, people when they fall down is when they start blaming you, and it's important that risk awareness should be made early enough in the journey.
Ashutosh ji, can you allow me to do a small introduction of our minister, because the video is ready to be.
No, please, we were just spending time.
Yeah, that's why I just thought, let me just intervene. I just want, because a lot of our viewers are there and participants, and you know, they should know about Mr. Thakur's background. Mr. Anurag Singh Thakur is a Minister of State Finance and Corporate Affairs. He's a 4-time elected member of the Indian Parliament from Hamirpur, Himachal Pradesh. Within Parliament, he has served as a chairman of the Parliamentary Standing Committee on IT and member of Public Accounts Committee. During the 16th Lok Sabha, he was appointed as the Chief Whip Lok Sabha, becoming the youngest to assume the post. In the year 2016, he was commissioned as a regular officer in the Territorial Army as a lieutenant of the 124th Sikh Regiment, thereby becoming the first serving BJP member of parliament to join as a regular officer. He's a former national president of Bharatiya Janata Yuva Morcha and has been only national president to be appointed for 3 consecutive terms in the BJP. He's also the first young national president for the BJYM and the 3 different BJP presidents, Amit Shah, Rajnath Singh, and Nitin Gadkari. Under his leadership, he led various socio-economic political initiatives such as Rashtriya Ekta Yatra, Kolkata to Kashmir, Shahid Shraddhanjali Yatra, a journey from Guwahati to Tawang to pay homage to 1962 war brave hearts, Sansad Ghirav, a national agitation against corruption, National Youth Convention, digital literacy campaign. Mr. Thakur is an avid sports lover and has contributed immensely to sports in the capacity of a sports administrator. He has served as the president of the Board of Control for BCCI, President Himachal Pradesh Cricket Association, and continues to serve as President Himachal Pradesh Olympic Association. President Hockey Himachal, President Himachal Pradesh Table Tennis Association, and Associate Vice President Hockey India. He's credited for building the world-famous Dharmshala Cricket Stadium, which is considered as one of the most beautiful stadium in the world. In 2019, he was awarded the Sansad Ratna Award in category of Jury Committee Special for his outstanding performance as a parliamentarian, becoming the only member of parliament from BJP and North India to be coveted with this honor. Recently, he was conferred with the Champions of Change 2019 award for significant contribution towards social welfare, particularly in the field of healthcare, education, and sports, becoming the only Union Minister of Government of India to be awarded with this honor. In 2011, he was awarded the Best Young Parliamentarian and recognized as a young global leader by the World Economic Forum. In a nationwide survey in the run-up to 2014 general elections, he was rated amongst India's top 10 MPs based on his parliamentary performance and commitments to society at large. He has been appointed by Global Fund in the category of public health for creating awareness about malaria, TB, HIV, AIDS. I think now he has to add COVID. He also served as the president of the EU-India Parliamentary Friendship Group, president of the FICCI Indo-US Parliamentarians Forum, India-German Parliamentarians Forum. He's an acclaimed public speaker at various forums in public health, information technology, national security, governance, sports administration, and issues concerning young people. That's his, for a young person, he's not even 50, he's much below 50. And he has achieved so much. And it is very kind of him to have sent this video today. In spite of his very busy schedule in Lok Sabha, he still sent it. Thank you very much, Anuragji. Sound? Sound is not coming. Sound is not coming, Trupti. It's raining like crazy here.
When you upload video of this kind, you have to enable, while uploading, there is an enable button is there. You have to enable that. Just while uploading, just ask him to check actually. Yeah, correct. While uploading only, you'll get that.
Trupti, are you hearing this? While uploading, it will come enabling the voice.
Yes, ma'am. I'll just take just a moment, ma'am.
Yeah. In midst of all this, he made time to speak to us. I'm very honored. But I thought all of you should also hear him, the young person who's a minister.
Industry and government are equal partners in setting the pace and policies for development. In age of globalization, let me begin by saying that I look forward to receiving your ideas and valuable inputs at the end of your conclave. The COVID-19 pandemic is an important turning point in modern history and offers an opportunity to forge a new vision of globalization, focused on the shared interest of humanity as a whole. The COVID-19 pandemic has unsettled the world, undermined established norms, and underlined the importance of good health in our personal lives, businesses, and the economy as a whole. It has disrupted supply chains, hampered business models. It has made us rethink, reimagine, and reset our lives and livelihoods. Despite the adversity facing us, India has decided to turn this into an opportunity. जैसा प्रधानमंत्री जी ने कहा, आपदा में अवसर ढूंढने की आवश्यकता है. And as the world grapples with the pandemic, India under Prime Minister Modi has decided to reboot, reform and research on the path of Atmanirbhar Bharat for economic revival. Atmanirbhar Bharat is a vision of a self-reliant India that creates value and wealth for all, accelerates growth, integration and opportunities for Indians and the world at large. Global economic resilience can be achieved by stronger domestic economic capacities. This means expanding our domestic manufacturing base. When we talk about the Make in India, that is about expanding our domestic manufacturing base. A robust financial system should be expanded as well, and diversification of international trade. This opens up vast opportunities for Indian and US companies to expand, collaborate, and accelerate growth. When I talk about India and US companies, why so? We are the two democracies. One is the largest and one is the oldest. In the sectors of defense production, atomic energy and space, we announced our intention of opening them up, inviting private companies on board. I am aware that these are important sectors that are of interest to the US companies as well. In sectors like agro-food processing, this is the right time to invest. We have passed recently bill in favor of farmers, where there will be a lot of opportunities for them also to sell their produce in the market and to create facilities at the farm gate, whether it is for the storage, cold storage, or investments to the tune of 1 lakh crore rupees into the agri sector, agri infrastructure sector. Indian rural economy has been going from strength to strength, and with the formalization of the economy, we will see more rural towns being connected to the supply chain of goods and services. So this is the right time to invest in the logistics sector, in the farm sector. Our intention is to provide a seamless logistical connection for our manufacturing units. That is, starting from the manufacturing unit or from the farm gate to road, rail, air and ports, from hinterland to the ports, to various parts of the world. And this physical infrastructure will be supported by a robust digital clearance framework that facilitates trade and accelerates growth. In order to smoothen the process of imports and exports in India, we have introduced a contactless process called Turant Custom, which means swift customs clearance. This means this will eliminate routine interface with custom officers and bring uniformity in assessment across the country for importers. We have also made our taxation system more simpler through faceless assessment and faceless appeals. This will bring more greater transparency, swiftness and seamlessness into the taxation system. In September last year, if you remember, we announced a historic, and that was the announcement made by Honorable Finance Minister during our Goa meeting. We announced a historic reduction in the corporate tax rates to the tune of 20% for existing businesses and 15% for newly set up manufacturing enterprises. Sorry, it's 22%. The world is well aware of Prime Minister Modi's push toward digital India and love for technology. In fact, India has witnessed a digital revolution in the last 3 to 4 years, from 400 million new bank accounts being opened up. Think about those who didn't have a bank account for more than 70 years. Those 400 million people have got their new bank accounts. And from there to direct payment systems, to our 1 billion plus UPI based app payments, which is more than 1.4 billion per month, and millions coming online and connecting via mobile devices. Prime Minister called it the Jam Trinity. As millions of Indians log onto the internet and go mobile, it will create a massive demand, innovations and opportunities to build products and services to cater to this aspirational demography. Further, let me also briefly mention India's new education policy, which is forward-looking and has come into effect after years of deliberations and stakeholder consultations. We intend to make India the hub of world's largest skilled workforce. When I say the world's largest skilled force, we are working on the skilling of youth, and this is an area where US universities and companies can collaborate, whether it is education, skilling, or other areas. On a lighter note, we really don't mind seeing even more Indians becoming global CEOs of American companies. They are India's pride and soft power. Before I end, to all the business leaders listening to me on the American and the Indian side, I would like to say this. In the business world, ROI means return on investment. In the COVID-19 world, where disruption is the new normal, ROI means reliability, opportunity, innovation. How reliable are products and services? How reliable are our products and services? Are you open to opportunity when it knocks? Will you innovate or stagnate and disintegrate? At a time when the world was under lockdown, Modi government turned adversity into opportunity. We innovated and excelled. India became the world's second largest manufacturer of the PPE kits and masks and exported to the world. A moment of crisis was India's moment of triumph. We innovated, we grasped the opportunity and became a reliable partner of the world. India invites the world to invest in our growth story and become partners of equitable growth and development. With a stable political environment, strong and robust macroeconomic indicators, huge supply of skilled and cheap labor, digital penetration, and a huge domestic market up for grabs, the opportunities are endless. And this is the optimum time to invest in India. India offered to the US and the world a perfect combination of openness, opportunities, and options. Invest in India, make in India, assemble in India, export from India. Incredible India is an incredible partner. Thank you once again. Jai Bharat, Jai Hind.
Dynamic young minister, very beautifully expressed about invest in India, and the kind of confidence he has expressed. It is beautiful, very nice. Thank you. I mean, we will of course thank you separately, and but thank you very much for staying on, some of you. Can we now see you all, Mr. Nilesh Shah, and they've left already. Mr. Nilesh Shah is there. Other speakers, Mr. Ashutosh Balasubramanian, and one more person.
Navneet is also there.
Ashutosh Navneet ji is there.
Nagarajan Narasimhan.
Nagaraj Narasimhan, Navneet. Yeah. Can we just show the trees? We are our humble small gift for you. A tree which will be planted in your name. We will send you the email certificate and make India more green in your name. Each certificate will be shown here, and we will thank you. Humble thanks from Indo-American Chamber of Commerce. Can you screen the Trupti? Trupti, we're looking for the trees. Are you showing? Yes. Mr. Ashutosh Bishnoi, thank you very much for having joined us and also having led the whole the whole event and moderated it so well. Thank you very much. And this tree is going to grow in your name.
Okay, next.
Trupti, next one, please. I think it's raining heavily in Bombay. So I
Sorry,
think,
again the system got hanged. I'm unable to move it further.
Okay, all right.
So, okay.
Can I just mention all your names and Nilesh Shah, Mr. Nagarjuna Narasimhan, and we have Navneet Munot and Mr. Balasubramanian and Navneet Munot and one more person,
Nagarajan.
Nagarajan. Yeah. So, I mean, we're not able to show it because I think suddenly it rained so much. It's raining here also in Mumbai. So Nagarajan. So all of you, you will get this in your email. And once again, thank you very much, Sunitji, for putting it all together and spending your time. How much knowledge you all shared. Honestly, it would have been very difficult for our members to ever get this kind of panel discussion and knowledge that you have given us. And thanks for waiting till the minister's speech is over. It's kind of you. You've taken more time than what you planned. I appreciate your being with us. Once again, thank you very much for this session from Indo-American Chamber of Commerce.
Thanks, Ashutosh, Nilesh, Bala, and this, I think, thanks for joining in and for a very interesting discussion.
Thank you. Thank you. Thank you.
Namaste. Namaste.
The next session is on MSME, and as we all have been talking about this, I mean, SBI chairman also yesterday mentioned, Jaspal also mentioned the huge scope. I mean, number one, what impact it makes in terms of employment, the impact it has on employment, the impact it has on jobs and economy, and the pain currently it is going through. I thought of this session, and we have Mr. Rajiv Anand from Axis Bank, several years in banking, and I understand from the market, not my own perspective. I am a large infra banking guy, but you are one of the most articulate persons on this subject. So we said if we can have the pleasure of your company. I know, and so thanks for coming. And again, Manish Kothari, who's coming in from Kotak. Kotak has had many years in this space. Its antecedents were somewhere in the SME sector originally, and I think it has grown on the back of that strength. And Manish is representing that collective wisdom. And then I requested Binayfer to come in. Of course, I know Binayfer in a different context, but coming back, when I asked Crisil to sort of present some perspectives, just some facts so that it sets the tone for the discussion, I gave her some inputs, and maybe towards the end of this session, I would have one or two lobbed balls at y'all, and maybe y'all can perspective. But essentially, my own perspective is that we do need to understand, we think of MSME as just one discrete thing, and then if we can take care of it, it happens. but the fact that it is actually a part of a larger economic construct and that it is dependent on its income from a variety of other sources, probably large corporates themselves. So Binayfer is agreed to present some perspectives, and I hope that it set the tone for discussion, and look forward to your collective wisdom on that. And I've requested Binayfer to also, she's more knowledgeable on this subject, on to actually facilitate the discussion with the two of you, and look forward to a very interesting and enlightening discussion. Over to you, Binayfer.
Yeah, thanks, Suneet. And on the outset, I would like to thank IACC for inviting me to this panel discussion and sharing my views along with eminent and distinguished industry leaders, Mr. Rajiv Anand and Mr. Manish Kothari. Special thanks to Suneet. Thanks once again for having me on this platform. Well, a brief introduction about myself. I'm Binayfer Jehani, and I head the SME Solutions business of CRISIL and have been with CRISIL for more than 15 years now. And the format of this session today will be as follows. I will begin with a brief presentation on the current developments and the trends in the MSME sector, post which I will moderate the discussion with our esteemed panelists, Rajiv and Manish, and follow it with the question and answer session. At this stage, I would want to introduce the panelists. I will start with Mr. Rajiv Anand. Rajiv is the Executive Director and Head Wholesale Banking of Axis Bank. Rajiv has in a career spanning over 30 years focused on various facets of the financial services industry, having held key management positions at leading global financial institutions. He has also been very successful as a debt fund manager and has won several accolades for the same. He brings strength in capital markets and building new businesses to his responsibilities at the bank. Welcome, Rajiv.
Thank you, Vanessa.
Yeah, and we also have Mr. Manish Kothari. Manish is President and Business Head Corporate Banking at Kotak Mahindra Bank Limited. He has been with Kotak Mahindra Group for over 25 years now, during which he has worked essentially on all aspects of the corporate lending business. Manish has been part of the Kotak leadership team for the past 11 years. He currently heads a 550 plus strong team across 30 locations, covering 4 business segments: large corporates, MNCs, SMEs, and new age companies, and the entire support backend for wholesale banks. I would welcome Manish too. Thanks for joining us here. And with that,
thank you, Vanessa.
Yeah, and with that, let me quickly begin with a brief presentation which I have to share with each of you. So I hope the screen is visible.
Yes.
Right. So with that, while I get into each of the slides, let me cover upon the key messages, which I have to share with each of you today. Clearly, as Suneet also rightly pointed out, MSMEs are the backbone of the economy. They play a very active role, not only in employment, but also in the value chain development, in economic as well as social inclusion. Information asymmetric has been one of the major obstacles. That's what we have, as CRISIL, have come across through our various interactions, various surveys. Actually, we keep doing on a quarterly basis a lot of surveys with various SMEs also, and that is something that has come to light. The other point which has come to light has been the delay in various receivables, which some of the SMEs and especially the micro ones are facing today. The other point, is that also the existence of some of the smaller MSMEs has been a question post-COVID. And clearly what's coming across is that these micro units, are in a bad shape as compared to the small and medium firms, which tend to manage, to get funding relatively easier. Coming to funding support, clearly that will remain critical in the coming months to come, simply because also there is an issue of slack demand. And we do understand that the government is also trying and has put in place various monetary as well as fiscal measures, which has definitely helped the sector. In fact, I'll be touching upon on that part of it also. But however, the big question that still remains is, how would the situation continue beyond 2021? And in fact, with Rajiv and Manish, maybe we'll touch upon all of this in our discussions which will follow. And however, I must say that it's not all gloom itself, but there's also some positive sign, wherein we are definitely also looking at some entrepreneurial SMEs, which have really been quick to figure out varied solutions. And let's also discuss that in our discussions and see what kind of, and maybe Rajiv, Manish would be able to throw more light on that, share some case studies. I'm sure as bankers, they would have seen a lot of SMEs trying to innovate. So we can take that up in the discussion also post my presentation. So moving on, clearly, the MSME sector today employs close to 11.1 crore. And this is clearly and they clearly account for the second largest after agriculture. But I think an important point which, most of the times we miss out is that MSMEs, being very widely dispersed, they really help generating employment opportunities at the local level and thereby reducing the population load at megacities. I think that's an important point that one really needs to keep in mind while, looking at MSMEs. And, this is something that came across through our various discussions with SMEs. So, and hence it called for pulling out some data points through our economic survey. So we pulled out some data points through the economic survey 2017-18. And what it threw actually was that 47% purchases of small GST registered enterprises are from large enterprises. And similarly, on the sales side of it, 28% sales of small GST registered entities are to large enterprises, which clearly shows the interdependencies and how important MSMEs play, in the entire value chain also. And simply because, and why we really got into these details, because, we received some feedback from smaller SMEs saying that, the larger companies are not making payments on time. And hence we wanted to figure out, is that segment really material or not? So clearly it shows a good 28% sales of small GST registered entities are clearly to going to large enterprises. And that's which, where is the concern, which has been specified by various MSMEs. So moving on, some of the other issues and the barriers to MSME growth clearly that has come across has been also lack of reliable information. And this is more true in cases of smaller MSMEs, who don't even have a credit track record. So somewhere the first instance, especially in this COVID environment, when they're reaching out to banks, they are definitely facing some issues there. And if you were to also look at traditionally how, the smaller guys have been operating, I think the big issue has been that, their funding is majorly dependent either on promoter funding or on various informal channels. And in case of informal channels, they've been paying out huge interest rates. So that has been a big concern, which is also hitting them currently in this environment, since they don't have any credit track record. The other points, which we thought we can even discuss, and it's important to draw light upon, is the MSMED Act, which of 2006, which actually has a provision of payment to MSMEs to be done within 45 days. However, in reality, that's not happening so, and that continues to be a challenge. In fact, we have the Samadhan portal wherein, they are, raising various, kind of applications are being put in terms of, delayed payments being received. And we are seeing a good amount of 54,000, delayed payment applications having been filed. And the amount is close to 15,800 crore. That's a huge number. And if you look at how many have been disposed of so far, it's just been a meager 3,367 amounting to 715 crore. So that's something to ponder upon. The other part which came across through our survey of the 350 MSMEs that we recently conducted, so 65% of them have highlighted delayed payments from customers. This is just to drop on light, some statistics. The other issue I think with MSMEs is on the labor part of it, since a lot of them are labor intensive, and the share of migrant labor is huge. So today they are ending up getting a lot of local labor, and they are tending to pay huge amounts there. So somewhere, that's hitting them in terms of the labor costs. So broadly, these are the issues. Moving on, so clearly, 5 concerns that we can lay out. One is muted demand, which is impacting their sales, and we expect sales to decline drastically. So in the following slides, I'll just give you a sense on, we have analyzed 11,500 companies, and we expect revenues to actually decline by around 20% or so. So I'll touch upon that. The other issues, as I highlighted, was delayed payment. The other one is because of deteriorating financials, EBITDA margins are expected to halve. And likewise, the concomitant impact would be on the interest coverage ratio falling to, much below 1.5 times from what it was at levels of 2.4 times, which is a concern. And I think the bigger one's going to be the dent in asset quality post-moratorium. Well, I think, Rajiv and Manish will could more touch upon these aspects on how they are seeing things post-moratorium. So broadly, these are the issues. And in terms of CRISIL's take on how do we see financials of the 11,500 odd entities that we've looked at, we expect, revenues in the last 2-3 years would have grown by 4 to 5%. We expect that number to fall by around 20%. And hence the impact also on EBITDA margins to decline from an average of 7% to 4 to 5%. And I've already covered on the interest coverage part. With that, if you look at, however, the idea was to really split and see the impact, because the impact's not the same throughout. So if you were to look, and here how we split the companies is that the micro companies are companies with a revenue of less than 5 crore and having, so this is the new definition that we've incorporated. Similarly, the small companies are companies up to having a turnover up to 50 crore and investments up to 10 crores. And medium companies are up to from 50 to 250 crore with investment of 10 to 50 crore. We said, let's split and look at it where the impact is severe. And clearly the impact now, if you were to look at the loan book mix of FY20, so this is the few data points that we've really pulled out. Micro firms account for 1,900 of them, and 9,600 amount to small and medium enterprises. In terms of the 18 lakh crore loan book of FY20, 1/3 of them are from the micro enterprises and 2/3 of them are from the small and medium enterprises. Clearly, what is the worrying factor is that one, we ought to look at the gross current asset days that's as high as 285, a clear 100 days in excess of what the small and medium enterprises are today. So clearly we are seeing that kind of pressure on the liquidity when it comes to liquidity for these smaller, companies. Now, if you were to also look at the credit growth, in FY18, we saw a growth of 12%, in FY19, 9%, FY20, 6.5. In fact, before the Atmanirbhar package was announced, we expected the growth to, taper down and reduce to 6%. But thanks to the package, and I think that has really been, good. We've seen good amount of traction there also, though there's a lot of room more for improvement there. And hence we've revised the outlook. Now today we currently expect it to grow by around 8%. So definitely we are seeing that government action is definitely playing up on the sector. Moving on, this is a rough sense of how do we see things in terms of the NPA situation, the gross NPA situation. But I must admit that this is just for 20% of the loan book that we have in place, since data is a constraint here. You can clearly see how the GNPA went up, it's kind of declined. And now again, I think the bigger concern is going to be what's the situation going forward, especially post-moratorium. So we'll touch upon this again while we have our discussion with Rajiv and Manish. Talking about the incremental working capital, and this is when we analyze the various sectors that we track, clearly one starting point that came out was that whichever sectors are either linked to B2B, so they're more B2B sectors, or they are export related. So be it the likes of textiles, construction, themselves, jewelry, these are the sectors which have been impacted to a much greater extent. And, somewhere these sectors are also facing an issue in terms of raising funds from banks, especially the smaller ones. This is what has come out through our various interactions with SMEs too. Moving on, this is the survey that we conduct on a quarterly basis. So on my left-hand side, this graph, it's on a scale of 100. 100 being scoring being meaning positive sentiment, and 0 being a negative sentiment. So you can clearly see that post-COVID, how the entire sentiment really fell. But the good part of it is also the sentiment has improved from 14 to 34. So some positive light we're definitely seeing there. And what also clearly came up was that the biggest issue is clearly demand, which is hitting them. Though liquidity is also, but the bigger point also to note is liquidity is also equally crucial, standing at a good 14%, which is also a concern area. Moving on, talking on the various government initiatives. So I must say that I would put them in various boxes, and these are roughly the 6 boxes that one would want to categorize. I think the biggest one would be the 3 lakh crore collateral-free loans. It's provided a lot of support to MSMEs, and maybe we'll discuss this in our conversations going forward. The 6-month moratorium has really also benefited in a big way. So the interest burden for FY21, we try to quantify the same. And what it means is that it helps to reduce by 25 to 30% the interest burden compared to FY20. Which really shows how important this initiative by the government has really played. The other ones, the 20,000 crore subordinate debt for stressed MSMEs, and the government here would guarantee to the tune of 4,000 crore. But what's important to note is that the infusion by government under the CGT MSE scheme is the highest in the past 2 decades. And this represents 60% of the cumulative corpus since its inception in fiscal 2001. So that's been a big move. The other ones have been the 1,500 crore interest subvention for the Mudra Shishu loans, the 5,000 crore facility announced for small vendors. And recently, the most latest one being the extension and one-time restructuring of loans up to 25 crore till March 21. Well, so far, banks have restructured 6 lakh accounts out of the 15 lakh eligible accounts. So clearly, the steps of the government have been in the right direction. And, we will, in our discussion going forward, touch upon the various measures by the government. And let's see how, and let's also discuss with the bankers here, what's their take on this. With that, I come to my last slide in terms of really the key issues which have been highlighted by even some of the lenders. So we did talk to some of the other lenders also to have their take on some of the key initiatives by the government. So coming to the point on 6 months moratorium, what the lenders feel is that the relief for payments to manage funds flow, it has definitely helped. But the real challenge may emerge post-moratorium. And, for that, we somewhere felt that post-moratorium, that's our view, that if there's some relaxation in NPA recognition norms from the 90 days to 180 days, maybe that could help the situation. Maybe Rajiv, Manish, you could touch upon that. And talking on the emergency credit line guarantee, lenders feel that, the timelines need to be extended because till date, only 35% of the target has really been achieved. And I think the other challenges that lenders did speak upon the scheme was that the scheme provides for 75% once the default triggers in. So the guarantees to that extent, and the remaining 25% is post completion of recovery proceedings, which there could be that they kind of face delays there. So that is some concern that lenders have, that the government needs to formulate some steps to expedite the whole recovery proceedings. so that that doesn't remain a concern for them. And lastly, the other one that came across through our various surveys was that the EPF relief benefit. So today the benefit is constrained to entities up to 100 employees. And a lot of them are saying that, that should have been for a larger set of SMEs who could have been, could have been positively benefited because of this. So somewhere that cap could have been slightly higher there rather than 100, the number should have been higher. So broadly, this is it from my side as regards our initial thoughts. I just thought I'll set the context before we get into an insightful, moderation of the entire panel. And with that, I'll get in Rajiv and Manish. And maybe to begin with, Rajiv, it'll be good if you could just give us some insights on how's the situation looking like. I'm sure now it's been a good 6 months that we are into the COVID supposed the lockdown. So are you seeing things improving? And maybe you could explain the whole journey, how it has been for this last 6 months. Over to you, Rajiv.
Thank you, Binay, and thank you, AICC, for having me here. I think, let me start off by saying that how important the MSME segment is to the country itself. We're talking about 63 million, there are about 63 million units across the country. They employ about 120 million people. They're about 50% of exports, and they comprise about 30% of the manufacturing sector. So that, in a sense, tells you the size and scale of the MSME segment. This is a segment that's been growing at about 10%, but I think the problems on the MSME side started to surface well before COVID, and I think they've been struggling. And some of your numbers have shown that as well. That the MSME segment growth itself was beginning to struggle over the last 18 to 24 months. So in that sense, I think the fact that we've got to get this MSME piece right, I think is a critical component. But within this 63 million, if you look at the number of customers who are actually availing of credit from the formal sector, it's a low single-digit number. And so therefore, many of these MSMEs use not the formal banks or NBFCs, but rather the local money lenders or family and friends, etc. And so therefore, in that sense, they've got to certainly formalize themselves. And I think the government, the RBI, and banks like us, and Manish is here as well from Kotak, we've been working extensively across the country to be able to bring in more and more of these entities into the formal sector. So, for example, hitherto we were focused on lending against collateral. Now we're increasingly moving towards a lending for cash flows, because we are now able to get better data about the customer. We are able to understand from his GST filings, from his transactions in his current account, what his turnovers are, and be able to estimate his working capital requirements, and so on and so forth. So I think that is the other big trigger that will play out as we move away from collateral-based lending to cash flow-based lending. You will certainly see more and more of that informal sector moving into the formal sector. So for us in Axis, we are quite bullish as far as this segment is concerned. I think the impact on COVID, your slides themselves have said. I mean, I was on a webinar in May, June. Things look pretty dismal. But I've been amazed by the adaptability and resilience of not just corporate India, but MSMEs as well. And there are so many great stories, and I'm sure we'll talk about it as we go along, about how many of these entities have been able to pivot, because of COVID impact. Yes, I do believe that mortality is going to go up. Meaning that the number of companies who are going to shut down is going to be very, very high. Our estimates is going to be that number could be anywhere in the vicinity of 20-25%. But how many of those 20-25% actually borrow from the formal sector is moot. That data is not available. But I think one also needs to appreciate the fact that MSME promoters have been resilient and have shown great resilience, and ensuring that they will certainly survive as we go forward. And we will speak about things like ECLGS, etc., which have certainly helped in ensuring that at a time like this, where I mean it was unheard of that we are talking about large and small companies having zero revenues for a month or two. I mean no model can model that. So therefore, in that sort of an environment, to be able to provide liquidity was critical, and I think the fact that both RBI and the government came in at the right time to be able to do that, I think has been commendable and will certainly help the MSME sector as we go forward. So let me just stop there, and then we can take this conversation forward.
Right, Rajiv. And Manish, what are your views? How are you seeing things pre and post right now?
Sure. Thank you, AICC, for having me here, and thank you, Vinayak. I quite agree with Rajiv when he shared the most critical piece in terms of what the bankers get to see are the formalized SMEs. Yeah, which he rightly put is in the single digit out of the total 63 million odd units which would be there. And I think the formalized units I have figured, at least from the perspective of adaptability over the last 6 months. Yes, of course, April and May was far more impactful. Nobody has seen zero sales, right? In the last 25 years, I've never done sensitivity analysis where I factored in zero sales. Yeah, you would say 10%, 15%, 20%, but you would never factor zero sales. But so the good part is that since the decision making is quick, the promoter himself is taking decisions, and people have moved very quickly to conserve cash. People have moved very quickly to cut costs. People have moved quickly to reduce their working capital cycles. People have moved quickly to change their business mix or product mix to suit what was possibly selling at that point in time in the economy, whether these were masks or PPE kits or sanitizers. I guess that's where the entrepreneurial spirit really comes alive in a place like India. And what one is actually seeing from what the way things were to the way things today are, percentage of people who have actually sought moratorium. Yeah, so moratorium 1 to moratorium 2 saw a very steep drop. Yeah, moratorium 1 was a phase where people were absolutely clueless what would happen in the month of April. And people said, okay, might as well take the benefit in terms of saving some liquidity. Moratorium 2 was when there was far more visibility of how business was moving. And one saw that the drop was pretty steep. It is and it is purely from the perspective of requests that we got to see and whatever one gets to see. So from that point of view, I would say that clearly there has been a far more positive move from April, May, June to, I would say, July, August, September. I think second quarter is looking dramatically better over the first quarter. While I agree that from what you presented in your slides, that from an average perspective, the EBITDA or the interest coverage ratios would drop. But from a run rate point of view, I would believe that it is better than the average that we will get to see. And hence, the second half of the year, unless something dramatically drastic happens in terms of the disease or lockdowns, and things go back to a situation like Q1, if the way one is seeing things today, I would say that H2 clearly is looking more positive than H1. And micro enterprises, clearly, I would say yes, a whole lot of them are unbanked. But a lot of them may be at best taking a home loan or a car loan or maybe a loan against property at best to some extent. And that's the limited digital trail that would be available or the limited set of information that is available. In fact, the information you were showing on the GST piece, you would find that even the MSMEs are not supplying as much to large corporates or MSMEs, which means that a very large percentage of their sales are actually going to individuals or people who are not actually registered in terms of where their sales are going. And which is where possibly the delay in terms of their working capital cycles or actually the demand pickup when we are saying has been a little slower. Possibly the micro enterprises, which are largely in the unbanked segment, could be facing more challenges as compared to what I believe the bank segments are facing.
Right, right. So just taking your conversation there ahead, Manish. So just wanting to understand what's your take on the various government measures announced, and what do you think should also be next steps? Some additional announcements to be made, or any recommendations from your end?
So I guess the two big pieces which I felt were very, very relevant and which the government did was right at the beginning, there was that moratorium, which I think liquidity is the most critical piece to provide in a time like this, where the sales have become nil for somebody. I guess liquidity is the most critical measure. And the moratorium was absolutely a step in the right direction. April to August, high impact period. Anyone whose business was impacted could look to avail that. And secondly, the ECLGS scheme has been a very, very strong one in terms of providing liquidity to anybody who felt they needed liquidity for a slightly longer period. And interestingly, this is an opt-out scheme, right? So it is not that the bankers are not keen to provide. It's a government guaranteed scheme. So there's no reason to not really look to provide it. There is zero capital for the bank to provide against this particular lending. But the fact of the matter is the numbers which the customers have gone out and taken is not that large. And interestingly, what we have found, at least our data shows internally, that people who took that money have actually reduced their working capital utilization. So effectively, it is not that they've used the money and kind of used it for something which was like some big investments or any of that. It is people have conserved cash very, very smartly. And I think that's the right thing to do in terms of how people have really looked at the liquidity angle. And then from the perspective of another big impact item which the government did, in my view, was the changing the definition of the MSMEs, which you had shared during your presentation. I think it widened the scope of people who could really look to get the support from the banks and from the organized financial system. And a lot of I would say that this is something which will really benefit a whole lot of companies in the space. In terms of what could be additionally done, I guess the latest thing which has already come in is the restructuring. So the restructuring piece is again a step in the right direction, because the sectors which are far more impacted and which wouldn't have really come alive, say in July, August, September, or will maybe take another 3 months, 6 months, 9 months, a hotel sector or the travel and tourism kind of customers in that particular segment but their businesses say were viable, and it is not a question of solvency, but it's only a question of demand really coming back. I guess restructuring is the positive thing from the perspective of how what can really be done, which is why I'm not so sure that 90 to 180 day, which you talked about, the NPA recognition piece, that is not something which you really need, considering the fact that anybody who is really in a tight spot from a liquidity point of view, purely because the demand has vanished. I guess restructuring is the right thing for a customer like that. And from a banker's perspective, the government has and RBI has provided that support by no provisioning being required for at least the MSME restructuring that you need to do.
Right. And Rajiv, I would want to have your views on the various government policies, and especially as Manish highlighted regarding the point regarding the change in definition. Actually, I want to slightly, if you could dwell more on that aspect, that does it mean that a huge number of SMEs now are getting into the definition, and hence their, the reach is wider. Can you just draw light on that part of it?
Yeah, I just want to start with the ECLGS scheme as well. Yes, the government was trying to do 3 lakh odd crores. I think when I last saw it was about 1,60,000 crores is what the number we will probably reach. But I think you've got to look at that in the context of the fact that across the banking system, this has been done in a period of about a couple of months. The whole the government has heard us. The whole process was simplified considerably. We wanted more inclusions in terms of individual who are running businesses, etc. That's been sort of taken care of. And I think the fact that we've got to this amount itself, I think, is commendable. Yes, we want to do more, but I think, the fact that we've been able to get to this with a simple single page process, I think has been phenomenal. But you got to also look at it from the perspective of there are a lot of borrowers who were eligible for ECLGS but did not want to draw down, primarily because of the fact that there was no demand. I mean, their business was not seeing that much demand and therefore did not see working capital. And so, yes, they were going to get liquidity, but a interest meter was going to be ticking. So they said, why should I be in an environment where I don't necessarily need the money because business is slow? Why should I take on a new interest burden in an environment where I actually want to reduce the amount of interest that I'm paying? So those are some of the issues that have probably held back the growth here even more than what we've done. And so therefore comes the critical point that I was going to make here, is that the key requirement from the government is to ensure that demand comes back, which means that one, we need to ensure that this whole issue of fear is reduced. People go out and go about their businesses and demand comes back. That, I think, is the biggest thing that we can do for the MSMEs. In the short run, liquidity, etc., I think is more or less sort of taken care of. Yes, and I also do believe that things have certainly troughed. Things are looking much better than what we saw in April and May. But I think we are now at about 75-80% of pre-COVID. The challenge now, and as you think about profitability, not just for the large corporate, for the even more so at the MSME side, the last 10 to 15% of revenue is what finally flows into EBITDA. And so therefore, as you think about sort of profitability and growth from here, bridging this 10 to 15% or 20% gap that we are currently seeing is critical. But unfortunately, I don't see that happening at least for the next 12 months, if you're lucky, maybe 18 months, if things go well. So I think we've got to do everything that we can to get demand back into the economy. I think most of the supply side issues are pretty much taken care of. It's really now the demand that needs to come back, and that is what will help the MSMEs.
Yeah, so Rajiv, just taking this on, so in fact, a lot of the lenders have told us that there should be an extension hence in the guarantee scheme. So are you of the same philosophy that they should kind of continue with the extend the dates, and also drawing the point that you mentioned that a lot of this sector guys are such sectors there's no demand, so why will they actually borrow it today? But when the businesses start off, that's the time when they need some support. So hence these guarantee schemes should be extended. So do you also believe think that it should be in such kind of a manner?
See, there is merit in the argument, but the problem is that we don't know when that demand is going to come back. So at the same time, having an open-ended scheme, probably doesn't make sense. What we are seeing is that obviously, like every other bank, we've pushed this with our customers, with our eligible base very aggressively. So I think in that sense, we think that we are pretty much done. I mean, maybe there's 10% more, maybe there's 15% more customers who could potentially draw down. But within our customer base at this point in time, there's not a lot left in terms of people or customers who are looking to this particular scheme. But the point that you make is that if demand comes back, working capital cycles will or working capital requirement will increase, and so therefore, I think the way to think about that perhaps is that if demand comes back and working capital requirements are there, I think banks are there to support you. I don't think that for the customers who are within the formal sector, getting them working capital, I don't think is a problem at all.
Absolutely, I would quite agree with what Rajiv said. I don't think that working capital when demand comes back is an issue at all. And most of the customers who have not really taken the scheme are people. It is not that they are currently utilized like 90%, 100%, and they didn't take the scheme. If they were that high utilization levels with the bankers, they would have taken the scheme and created that liquidity buffer for themselves.
Yeah.
So these are already people whose lines are not as utilized as what you would expect. And in case demand were to really come back, there is bankers will happily provide additional credit on merit in any case, because these are all survivors, right? From the crisis.
Exactly.
And how is it on ground? Because we've also been hearing from some MSMEs saying that evaluations are done by banks first, but at the end of the day, they're not being, given those loans and, those kind of things. Also, we've been hearing now. So just thought that, I'll have your views. Is it that, you all have kind of also decided that you'll have a set of no-go sectors and set of go sectors? So are you also having something like that? Or is it that across the globe, across sectors, lending is happening?
So I think if you look at it, I think it's a bit of an unfair comment. I mean, if you see the rejection rates in the ECLGS scheme, at least for us, the rejection rates are in low single digits, which means that out of every 100 proposals that we are getting, more than 90 are getting approved. Yes, there will be some stray cases which don't get approved for sort of various reasons. But to say that a large percentage is getting rejected, I think you're being a bit unfair to bankers.
Yeah, see, actually the important piece to note here is that it is an opt-out scheme, right?
Got it.
So an opt-out scheme means that the banker does not have the choice to select a customer, but the customer has to make the request. And like Rajiv rightly put, we have been pushing the scheme very, very hard with all our customers. So it is the rejection can be only on technical grounds and not necessarily on any other grounds, right? In any case, like this is a scheme where the guarantee is from the government and there is no capital to be put out by the bank. So there is no credit reason to effectively not do a loan under this scheme.
So on the flip side, since you're saying that, you cannot reject and all of that beyond a point or only on technical grounds, so would that also mean that, there's a lot of pressure that is mounting, in terms of bankers' books? And what would that mean when it comes to, from the longer term perspective, NPA, gross NPA numbers and all of that?
So I think the RBI report itself, talks about, sort of the expected NPA levels within the banking system. So I think you're not going to see the NPLs in this year, 31st March 2021, because I mean, effectively, some part of that is sitting within the ECLGS scheme, etc. But you will, and I think it is to a certain degree dependent upon how the economy plays out in the second half in 21, 22,
Right.
of how much. I mean, this is a 4-year loan, but I think we will certainly see NPAs higher than where we are today and higher than sort of long-term averages over the next couple of years within this segment.
Sure. And Rajiv, you are also on the board of the TREDS platform. So can you draw some light in terms of what's happening there? Are you seeing more traction on the platform especially in this environment?
So I think TREDS anyway has been growing on a month-on-month basis. So therefore, if I look at August of this year versus August of the last year, we are up. I mean, the TREDS platforms in general are up about 40-50%. But the way to think about that is that without COVID, that would have been up 100-150%.
Yeah.
So we are seeing very good traction. There is here once again there is a lot of traction that is being generated because of the government and making it mandatory that government entities need to use TREDS for making payments to MSMEs, etc. And I think the growth of the TREDS platform, in a sense, has been a bit disappointing so far. I think it should have been much, much bigger than, given the size of the MSME segment, the size of sort of what we do on a monthly basis is quite small as compared to what is possible. So because what it does most important, I mean, what we've been discussing for the last 30, 40 minutes is liquidity. And TREADS ensures that MSMEs get liquidity at a time that when they want it and at a competitive price. And because, I mean, we've got, I mean, on our TREADS platform, we've got about 25 or 30 financiers. You're effectively bidding for that invoice. And so therefore the MSME gets a good price for that borrowing. So, but I think we've got to grow much more than where we are today.
Right.
No,
I think Suneet wants to add something here. Yeah, Suneet.
I think this is a question to all of you, but anybody can take this up. But I, in my own sort of experience, felt that a lot of large corporates, particularly private corporates, actually used payments to their vendors, largely many of these SMEs and MSMEs, as a way of managing their own working capital sort of strategies. Even before COVID, and I'm sure, sort of COVID situation, this may have aggravated. I also saw that there was a large influence coming from, let's say, government orders. So there are some large corporates who are maybe construction or whatever, and they are receiving some payments and they're not coming. So the easiest thing for them to do is to say, well, this payment was to be made for this and they are not paying us, so delay that. So one of the constructs that I have been thinking about is whether we have a need for some kind of regulatory support or legislative support on what may be called as a Prompt Payment Act. And then, I mean, by the way, this is not just universal to MSME, even large corporates I know, some of them have gone under because of delayed payments from one government department or another. And there has to be a good reason for a non-payment in terms of non-performance. And I think this is one of the subjects that I've been thinking about, is that probably India needs something of that kind. I don't know whether that makes sense, because unfortunately, I think good sense, while we all like it to prevail, I think it prevails with a little bit of danda. So, if I may like to put lob the ball to both of you and see whether there's any merit in thinking of this.
See, absolutely. I think over the years, the biggest culprit has been the government. Not over the last 2 years, but over the last 10, 15 years. I mean, you've seen fertilizer subsidies and what fertilizer subsidies have done to fertilizer companies, for example. And so therefore, I think we need to ensure, or the government needs to ensure, that it is not just for the SMEs, but for the large corporates as well, that it is a credible counterparty. Because the largest, in a sense, I won't use the word defaulter, but the largest delayer of payments in this country effectively is the government. Not just central government, but state governments as well. And it creates havoc with finances of MSMEs and in the mid-corporate, large corporates as well. And so therefore, if there is a legislative mechanism to ensure prompt payment, as you called it, I'm all for it.
See, I have a slightly different take. I quite agree with, from a fact point of view, what Rajiv said is anyway gets borne by the facts which you get to see around. But I guess finally the entire chain has to function in a streamlined manner. It's not only one part of the chain which so if a central government or a state government or even a large corporate or even any corporate delays a payment, I'm sure they are facing delays on the other side. Yeah, so it is finally a question of it's a cash flow issue with majority, where one sees that. So if a state government doesn't get payments for the electricity that they end up supplying, or they end up their own finances have deficits which are dramatically higher. So how do you really end up providing financing for what you are looking to borrow, or what you have to really go out and make payment for? And the easiest thing to delay is an unsecured creditor. You can't really go and delay a financial creditor. And So from that point of view, overall solution has to be partly legislative, but in a larger scheme of things, until and unless the overall financial health of a specific corporate or a specific state government or a specific or the central government or a specific corporation in a central government improves, and how do you really ensure that there are finances available to make the payment? So it's a catch-22 in some form. When I look at it in a larger canvas.
Manish, having been in this business myself, I can say that we can't be so, shall we say, tolerant of government finances. Just as RBI is not tolerant on banks on managing their ALM. Okay, you're supposed to manage your ALM, and it's tough on it. And I don't see why the government is not expected to manage their inflows and outflows. Because there is no discipline of this kind, they then say, okay, I want to give 1 lakh crores of X waivers or farm waivers or whatever. So we, by not actually compelling them to make these payments as is contracted, I think it is important that we bring around some, as I said, danda, to ensure that everybody falls in line. Why I said so is it's very difficult for, however strong the Prime Minister is, to say that all governments must fall in line and do this. Because there are various pulls and pressures in the government. And as usual, states are not directly in that. But once we have a union legislation which says Prompt Payment Act, everybody's got to pay within some period of time, and maybe some rules of the game around that, then this will become a pressure for everybody to say, listen, we've committed this order, we've got to pay for it. Okay, and therefore let's figure out what largesse not to give. So by being generous to governments on saying that we have to worry about their finances, I'm not saying no, but I'm saying we have to realize that they have other escape routes to actually ensure this particular part. I mean, I remember way back in 2013, the dues to construction companies was 2 lakh crores. And so if you go back forward, there are at least 1.5 times is the payments to vendors. So we are talking of a 5 lakh crore working capital pressure in the economy. And so obviously you realize that there is a problem. What are these people going to do? They're going to say, okay, I will not make investments. I will delay this, I will delay that, or substandard quality. I mean, so I personally think that our generosity of discipline of payments should actually end at some point in time. Private sector has to follow the discipline, so also has banks, etc. And I see no reason why the same discipline of good financial management be not expected out of state and union government. And so that's my reason, and that was the only question I had. And I think you have kind of in a way underscored my point. So yeah, good for you. Probably you all should take it up at appropriate forums when you all discuss it. But here's my 2 bits. Yes.
Yeah. So in fact, Suneet, I believe that getting in that discipline is very important, and at times for a large nation, it's very difficult if there's no act. So at times that's required, and I think somewhere that brings in also efficiencies from a longer term, which then people itself will see the benefits and will understand the value of a Prompt Payment Act. So, definitely if you were to ask me this question, I definitely think something like that is really required. In fact, there are also some corporates who really believe in that. So, in fact, when we had our webinar, we had called for one of the large corporates, and they clearly said that we recognize the fact that the strength of a chain is in its weakest link, and the weakest link is the MSME. So, they very clearly pointed that out to us that moment in this COVID environment, we realized that, money would be an issue. We called our SMEs, we ensured that all the payments are cleared by us so that they are strong enough. It was not about, giving them clutches and pushing them ahead, but it's about being fair to them and making the payment and enabling the whole process. So I think that's really important. And I do see that some large conglomerates, large good corporates do understand the value of it. So an act will definitely ensure that, yes, it might look very harsh. It might look that, as you said, you're putting a danda, but I think from a longer term perspective, all of this definitely helps. The entire market, the entire industry will see the benefits of that. So definitely, I'm with you, Suneet, on this point, that it's really needed, yeah, Suneet, in a big way. I think the other part I would also want to understand, maybe Rajiv, Manish, from you, would be on the digital part of it. Especially for in case of unsecured loans and all of that. How do you see the entire market landscape, and what kind of risks are you seeing in, especially in this environment? When it comes to the unsecured book.
It's not so much about secured versus unsecured. I think the problem that we've had so far has been the fact that a large part of the lending was because of the fact that much of the business was done off balance sheet. Adequate data was not available for you to assess the credit, and so therefore you used collateralization as a as the security for you to underwrite a particular credit. But in the same manner that over the last 10 years, we've seen a significant use of data on the retail side as we've moved to scorecard based lending, based on behavior of the customer, his credit scores, his transaction history, and so on and so forth. I think we are on the cusp of that, especially for the smaller MSMEs. So if I break them up into two parts, entities which are in the vicinity of about, let's say, 25 to 50 crores. I think everybody who's below that, I think we will increasingly start using straight through processing with minimal manual intervention. We've already started doing that. I mean, I think we have various pilots working on that at this point in time. And what that does is that where the whole process, especially for the smaller sized credits, the whole process used to take, I mean, one could argue end to end by the time we got documents, etc. So I have seen from the time that a loan has been sourced to dispersal has taken anything between 75 to 100 days. And I think thanks to the use of technology and data, we are now able to crunch that to 10 days. And I think that we can continue to crunch to be able to do it in quicker and quicker time. Remember, on the retail side, we are now able to do personal loans in a matter of seconds. So for pre-approved customers, I mean, you can get a credit to your account almost instantaneously. I'm not saying that we will get there, but I think the use of technology and data is going to ensure that we are able to provide a differentiated customer experience for the MSME segment. And through the use of data and technology, we will be able to bring in more customers into the fold who may or may not have either collateral or formal books of accounts, etc. And at the same time, because data is available in terms of GST and IT returns, etc., our ability to understand the customer has actually improved. And so therefore, we will be able to do both, provide a differentiated customer experience on one side and an improved underwriting or reduced underwriting risk on the other side as well. And I think that, to me, especially in the smaller part of the MSME segment, is the future.
That's right, Rajiv. So even we believe there's huge potential when it comes to digital lending and all. Manish, what's your view? I think you are looking at that part of the business also.
Yeah, so I can tell you that analytics as well as technology both will play a very crucial role. What we have done in our SME segment specifically last year is when we brought in a credit underwriting tool which was purely based on analytics. Yes, of course, we have not done away with the physical touch just now because the tool is still under testing. You need for it to go through a particular cycle for you to validate the data and take credit decisions. But that's a so we are now, the credit underwriting tool throws up the probability of default of that particular customer, and it has been developed on the basis of last 3-4 years of our own data, right, in terms of how customers have behaved and the analytics have been built. But analytics is something which you obviously have to keep testing and keep improving upon.
Right.
Similarly, even from the perspective of, so ECLGS scheme, interestingly, I must share with you that in our SME book, 98% of the loan documentation we did entirely digitally, end to end, right from taking the request from the customer to sending the documents to the customer, getting the stamp duty done on an electronic basis and getting the signatures electronically. Everything was end to end digital. So in my view, some of these journeys will merge on a LOS, and where right from the request to the doing the credit underwriting and then doing the documentation at some stage over a period as the bank continues to improve that journey will happen end to end. And then I think the timelines within which you can take decisions, within which customers can get to see decisions, and the transactions will look dramatically better than what they used to be or even what they are today. So both analytics as well as technology will play a role. And I think the formalized MSMEs are now leaving a lot of digital trail for bankers to feed upon and plug it into their analytics-based model, whether it is like Rajiv mentioned, IT returns, GST returns, behavior on a bank account, CIBIL scores, etc., etc. There is enough and more available to be for you to be in a position to take decisions, create decision engines on the basis of which one can really crunch the time within which you take calls. So future, I'm pretty kicked about this particular aspect of the SME business for sure.
Yeah. So clearly, even we believe that MSMEs are the growth engines. In my interactions with all lenders, I keep hearing that. In fact, everyone's very clear. All are focusing on this segment because it's a huge untapped market. So clearly, huge potential. And with that, I think we are running short of time. Are there any more questions or anything? Or maybe Rajiv, Manish, you want to draw some closing comments or some added points which we might have missed, or which you all might want to just draw people's attention to, and any such points or anything?
I guess we pretty much covered most of it from where I saw it. I would say that from the perspective of how I see the future coming through, unless and until something drastic happens, clearly I am seeing monthly run rates getting better by the month, and hence, while yes, I'm not saying no mortality will happen, but I would see that most with all the liquidity schemes coming through, with all the entrepreneurial zeal with which customers are running their businesses, I'm pretty positive that things in this space will look better. And definitely, this is a space from a longer term perspective, I guess, holds a lot of promise.
That's right. Yeah. And Rajiv, you're on mute. Yeah.
And I agree with Manish. And just one last point, I think the change in the definitions is one thing, and second is sort of geopolitical issues on the other side is going to ensure that many of the hitherto unexplored opportunities are going to come up for the more entrepreneurial MSMEs, and it's going to throw up new opportunities, and these opportunities are going to be of a different scale and size. And so therefore, I will not be surprised at all that over the next few years, some MSMEs will come through who will become small caps and mid caps and maybe even large caps in the years to come.
That's right. So I think, Suneet, you are saying something. You're on mute, Suneet.
Mute myself. Yeah, I mean, if the discussion is over, then I can step in. But
yeah.
So I personally, having been in this part of financing, and for a certain time while I was at Shrey and I was at L&T Finance Holdings, I also oversaw, besides infra financing, the MSME sector. And coming back, I realized, I kind of noted how closely intertwined it is, and we probably didn't give it as much importance. The conventional wisdom or old conventional wisdom always classified an MSME and SME as those set of people, rent-seeking individuals who are looking at surviving based on excise and sales tax stories. So I think the world has changed from then on, and a lot has happened. And what came out from the discussion today, I mean, I am happy that I met both of you through this medium and through this seminar. That maybe people like me who are now at more of policy evangelism with respect to industry and things like that, I do that pretty actively in my time. So that people like us should probably engage with you offline and maybe debate on a few things. And I dare say that while I keep focusing on infra financing, I think we must focus on MSME, considering it's such a large employer. Collectively, some of our own experiences and wisdom will probably bring around more focused advocacy at the government intervention or even the RBI level if there is any intervention necessary. So I think that's what it is. And Binaifar, through you, I would urge, CRISIL to focus a lot on these linkages which actually impact the MSME sectors. We of course focus on financial situation quite a lot, but I think finance is a function of the way business operates, and therefore we need to probably one of your, I think your slide 3, which talked about the cross linkages between different of these sectors was important, probably needs to be built up a little bit more in understanding that. I'm sure there are sectoral changes also in those linkages. In some sectors it is more, some sectors it is less. And with the onset of a lot of private sector manufacturing coming in defense, I expect that a part of that would be getting offloaded to some of the larger MSMEs in terms of developing parts and things like that. And so if we don't focus on some of these things now, we might only make this problem larger. I mean, I'm worried about that. So we need to focus on this. Defense payments will normally not be stopped because of fiscal, challenges. And therefore it shouldn't happen that they also kind of get lost because of a lack of payment of Prompt Payment Act or something like that. So yeah, I mean, those are my thoughts, but it was very interesting to have your ground level feel of the thing, the fact that there is some change happening. I mean, there is a slightly long tunnel, but there is some light there. And, we'll have to see how the COVID thing unfolds, and hopefully the vaccine or some treatment kind of evolves. So all of this is going to get resolved soon. With these comments, I think, Indo-American, I must thank you, but we thank, Indo-American has a different way of thanking, which we plant a tree in your name. And so there is this grow trees kind of organization, and we plant a tree somewhere in India, and that certificate would reach you through your mail. And yeah, so this is
humble thanks.
This is what we would like to suggest. Rajalakshmi.
Yeah, thank you so much, all of you. You gave so much insight into MSMEs and a very positive insight. And what I liked is you all said, that they're very accustomed to the new ways of doing. And in my opinion, even in the insurance sector, we said, the village, they will connect to everything, because young children, students and youngsters, that generation will tell the father and the grandfather that this is what is happening, what is good for MSMEs, what is happening. Like how they're all using mobile phones and doing digital technology and learning school. They will take off. I mean, we are at that curve where we will just take off. And I mean, the fact that Mr. Manish Kothari said 94% of the transactions are done digitally, I mean, all like this without anybody coming to them. I think this has already started. I think MSMEs are going to rock. So that is the proper bedrock of our country. So if that starts moving, we are done. 5 trillion is happening. Binay, you conducted it so well, so focused. I'm so impressed. Yeah, young lady, done it excellently. That shows your knowledge far. And once again, thanks a lot from Indo-American Chamber of Commerce for having accepted to do this and beautifully moderating it. Thank you very much.
Thank you.
Mr. Rajiv Anand, thank you so much. Your expertise is something that we all don't have. So you parted with all that knowledge to us and spent all your time explaining all this, what's happening. But I'm very thankful to you. Thanks for joining from Indo-American Chamber of Commerce. Personal thanks to you. Thank you.
Thank you for having me. Thank you so much.
Thanks, Rajiv. Thanks, Manish.
Manish Kothari. I mean, you really made my day by saying 95% you don't even have to come to anybody. We just do it all online. Wow. I mean, SMEs doing it. I mean, I can understand big companies, corporates and all, but SMEs 95%. Wow, that's fantastic number. I think it was like really music to hear. Thank you very much, Manishji, for having joined us. Please accept that plant and tree. It will grow somewhere in your name. And all of you make India more greener. Thanks a lot. Thanks,
Thank
Sunit.
you.
Thanks.
Thank you so much. Thank you, Sunit.
Thanks, everyone.
Thank you, Rajiv.
Thanks,
Thank
Rajiv.
Thank you,
Thanks,
Sunit.
Manish.
Thanks.
Pleasure to
Bye.
connect.
Thank you.
Bye. Thanks.
Okay. Bye-bye.
Rajalakshmiji, I think we have
Vivek.
Vivek as the last.
Yeah. Hi, Vivek.
Person.
Can we hear you?
Come in, Vivek.
He's there, but he's muted.
He's muted. There he comes. Is it?
Hi, Vivek.
Can you see me?
Yes, we can see you.
Vivek, your profile and what you actually look are different. You COVID period,
Yes,
you have used
COVID
it
has
to
aged
grow a
me.
beard, I must say. For a
Yes,
moment, I was wondering, is that Vivek?
absolutely. No, thank you for inviting me. Thank you.
So give us some insight, Vivek. You're the last one to speak, and give us some nice closing remarks and what you think about investing in India in all these sectors that we had yesterday.
Sure. Thank you, ma'am. And thank you for the opportunity again. And really glad to be part of this.
People should know who you are. Mr. Vivek Abraham is part of Invest India. He's a vice president, and he's been helping all our programs. And most of the time, their logo has come to us. And for many of these issues, whenever we had, I actually bothered Vivek so much. And I said, you must at least say something today. So he just came on a special request. Thank you for accepting this request, Vivek, please.
No, thank you, ma'am. I mean, it's a privilege for me as well. And thank you for the opportunity. And it's been a pleasure working with your team. It's been one of the most professional teams that I've worked with in the industry. And it's always great to see these events. And I've logged into many of your events, and I found it very insightful and very, very forward-looking in that sense. But thank you again. And Sunit, you had told me about what I should speak. I should speak on what is happening in the industry and what we are seeing. I think in the last few months, we've realized that there are a couple of insights that have changed. And so I'll just sort of talk through that. I think about half a decade back, we were talking about India's potential and prospects. And in many ways, we've reached that target. In almost every segment of the economy, we've become a world leader. Technology, retail, food processing, financial services, consumer markets, infrastructure, steel, oil, transport, or even startups. We've either become a major producer or a major consumer in that segment. And I think the important thing, the key thing to note here is that although we have reached pole positions in all of these sectors, there is an immense amount of potential for each of these sectors to grow. Every company has that opportunity to come in and really grow immensely in these sectors. In fact, we were just looking at it, each sector of the economy is either a multi-billion-dollar opportunity, if not a trillion-dollar opportunity. And the reason for that is very clear. We will become the largest economy by population very shortly. And not only that, we are one of the youngest also. In fact, 50% of our population in 2025 will be below the age of 25. And a billion people, that is two-thirds of our population in 2025, will be below the age of 35. And if you really think about it, the consumption engine actually starts at 35. And if you look at it another way, so if you look at GDP growth at the states level, about a third of all states essentially are above the GDP mark. About a third, the second third are about at the GDP mark, exactly around the GDP mark. And the remaining third is below the GDP mark. So if you look at India as three engines, three growth engines, it's just one engine that is above the GDP mark and driving the economy. And we've reached so far. So we are working to ensure that the other two engines also get fired. And at that point, we will really start zooming. And to be fair, our GDP has been really accelerating. If you take the long view, we took 63 years from our independence to reach the first trillion. We took another 7 years, that is us in a 70th year, we reached the second trillion. And in the remaining 3 years since then, since 2017, we are now close to 3 trillion. And now we are expecting that we'll reach another 5 trillion in the next few years and 10 trillion in the next decade. And by that time, we will clearly be one of the top three economies of the world. At Invest India, what we're seeing is that this has not gone unnoticed by investors. In the financial year ending March 2020, we have seen an unprecedented jump, a record jump on FDI in March 2020. In fact, we received $74 billion in FDI, which is about an 18% jump from the previous year. And in the same period, global FDI has come down by -1%, by 1%. So if you really think about it, people have been expanding into high growth economies like India and have been going out of countries which are not giving that growth and opportunity. And the interesting thing for us was that most of this came through the automatic route, very minimal approvals that were required. And a lot of that FDI also came into greenfield investments. In fact, we were the top greenfield investment recipient for 2 years in the last 5 years, and which basically shows that the old story of investors or foreign investors not looking at construction risk or greenfield risk, I think that tide is slowly changing. We are becoming a more structured economy in their eyes. The risk appetite for Indian risk is increasing, and we will see this improving over the next few years. In fact, Bloomberg did a very interesting survey about 2 years ago. They did a survey of 900 CEOs from across the world, and they rated India with 7 other countries on key factors that go into the decisions. So factors like political stability, currency stability, ease of living, that kind of stuff. And in almost all of these parameters, we were either number one. I would say about 80% of these parameters, we were number one. And in the remaining, we were either number two or number three. And that was very astonishing for us. We didn't think that we had come that far. But it's very clear that company boards and company executives are looking at India very, very strongly, very, very positively. Someone in some senior executives from our one of our clients, they very succinctly put it that if India is not present in your company's strategy, then you're risking irrelevance. So it is a fear of missing out that is now setting into a lot of global companies when they're looking at India. Of course, this has not come to us automatically. This is not come from the sky. A lot of hard work has gone behind this. Each and every element of our corporate approvals, licenses, registration processes, we have re-examined it, re-engineered it, and ensured that it has become more reliable, more cost-effective, and more efficient. A critical change in this entire process has been the fact that we have changed our mindset completely. We have become more of a partner. And earlier, if you have dealt with the government, you would have understood that the government would have come to you from a very regulator kind of mindset. They would we would presume to know more about the business than a business person knows, and draw a box around that business and say that this is what you can do, this is what you will need licenses for, etc., etc. Now the conversation is very different. Companies come to government and say, we want to make India our global hub, and government says, how can we help, how can we ensure that you reach that ambition and target? And a huge part of this entire mindset and taking feedback from industry has gone into our ease of doing business ranking. Our World Bank ease of doing business ranking is completely based on industry feedback. In fact, every year they interview more than 9,000 companies from across the country. And it's only dependent on their feedback. If they see the reform, if they experience the change, that's when we get our rankings, or that's when we get our scores. And we have scored 79 places. We have jumped 79 places on that ease of doing business ranking over the last 4 years. And this is an unprecedented. No other country in the world has managed to do this. Starting from company registration processes, we have managed to make it possible that you can sit at home anywhere in the world and register your company in one day. It is possible to do that. Building permits have become more streamlined. We are bringing in more global standards. We are ensuring that people don't find a cognitive dissonance when they come to India. Land allocation is becoming simpler for industries who are looking to set up in India. We have built a very dedicated portal for them where they can see what industrial land is available. They can very soon book that slot online. And now land is available for much, much shorter lease periods as it was earlier. So making it very cheap and efficient for people to set up very quickly. Earlier, we used to look at setup times of 18, 24, 36 months. Now companies are demanding 6 months, 12 months, or even shorter, and we are delivering it. We are able to do it because we've built that infrastructure. Labor codes, one of the biggest problem areas for investors in India, they have been reformed. They are being reformed both at the central and state levels. A large part of the problem was the whole process around it. It was not just that it was burdensome to comply, but it was just the process around applying for all of those 44 registrations and licenses. All of that has been revamped. We have now collapsed it all into 4 labor codes. And we are now migrating to a world where we will just need 1 registration, 1 license, and 1 return on your labor requirements. At the same time, we are also improving on logistics. We have improved our turnaround time in our ports. Anybody who has been in the trading business or in import or export, you would have known that over the last few years, our turnaround time has reduced from almost a week to less than 72 hours. In fact, it's closer to 48 hours. We have the highest rail density in the world as compared to any other country in the world, and we are building more. We are opening up more airports when we are improving our air cargo connectivity. We have the 2nd largest road network in the world. What this means is that we are very steadily and very quickly bringing down our logistics cost. We know that it is one of the most expensive in the world, but we're determined to bring it down from the 12% level to 8% level to bring it in line with the global standards. I think the largest reform in the world has been our tax reforms. We have become one of the most competitive regimes in the direct taxation world in India, where we've reduced our taxes from what it was at 33% to 15% to anybody setting up in India right now. And for everybody else, it's around 22%. Our GST system has become a huge, huge factor in helping our logistics costs go down. All of the state barriers, all of those N number of returns and officers that you have to deal with for just a single product or a single service has all been done away with. So what has essentially happened is that our logistics turnaround time and cost has improved. Supply chains have become more logical and efficient. And we've essentially speeded up our GDP growth. Our customs infrastructure, we have ensured that now a lot of that has become faceless, paperless, and contactless. If you are in the business, you will know that a lot of truck drivers and employees now only carry around smartphones and QR codes to ensure passage across various barriers and entry points. You don't need the various paperwork or comply with unnecessary processes to ensure that you're you're compliant. Insolvency, I think one of the key points that you would have already discussed in this forum, is also something that we have not been shy from tackling. Uh, as per our records, more than 5,000 cases have been put into this particular system. We have reduced our insolvency time from 4 years to 1.5 years, which is a huge, huge change. Banks are a little more secure in lending when they know that they will be able to recover. In fact, recoveries have improved almost threefold, from 27 to 72 cents on the dollar. And this in itself has presented a huge opportunity for global investors. A lot of people are now looking at India when they're able to understand that valuations have become a little more closer to reality, and they are actually picking up. I think if you look at some of the acquisitions that have happened in the steel sector or in the power sector, a huge component of that is because of the insolvency code that has happened. Post-COVID, I think COVID has had a huge, made a huge disruption to our life. But post-COVID, we've been working on two major strands. One is demand growth and also repairing of supply chains. And I will focus more on repairing of supply chains today. Essentially, we've been focused on identifying our key sectors of the economy where supply chains have been really damaged and at the same time is critical for India's growth. And we have designed specific support and incentive packages, clearly attracting only those people who are interested in engaging and transacting deeply with the Indian economy. We also foresee that as these companies come and invest, and we've seen a number of announcements over the last 6-7 months, that as they progress, they will be able to seed a huge amount of ecosystem level investments where a number of supply chain, a number of MSMEs who are able to contribute to the supply chain will also start growing on the back of these investments. Sectors such as electronics, pharma, food processing, textiles, and medical devices are some of the sectors that we are receiving a lot of attention. Some of the other sectors that we will see are energy, chemicals, defense. These are the sectors we see that will come up very soon, shortly. At the same time, states have not been sitting idle. State governments have been competing immensely and intensely amongst each other and with global destinations. It's a very well-known fact now, So a Gujarat is not competing with a Madhya Pradesh or Telangana or Tamil Nadu. They are also competing at the same time with Malaysia, Vietnam, and China. So they have very, very quickly upped the game. They very, very quickly come up with incentive policies or support mechanisms for industries to come in to set up their businesses in the country. And it's very clear innovation around ensuring that the ROI goes up. Very clear innovation around ensuring more capex comes into the country. And there are some states who are putting out schemes that say that we will beat or meet any deal that you bring to us, or we will in fact penalize people who don't offer the same level of service that others do. So very, very aggressive, very, very intense competition going on at the state level. Companies are really it's a buyer's market for them. We have also seen very recently that the cabinet has set up an empowered group of secretaries that will ensure that there is high level attention on investment matters. And we are also leading and working on an initiative to ensure a true single window, so that an investor really has to come only to one place to get all information, and also to apply and register all aspects of his business at one particular location. It will really transform the way we do business and regulate business in the country. I think, just as a closing note, Sunit, you had asked me to speak a little bit about the financial services industry. I think we have grown a huge amount in the last few years. From the time when I was in the financial services sector, we were looking at Indian level champions or regional champions, and now we are focused on building global champions. A lot of that has to do with the technology and the speed at which we are picking it up. and we are still growing in the untapped market, but we haven't really grown into that market yet. There is a huge amount of potential in every sector of the economy of that sector, be it credit, be it insurance, be it pensions. And I think only recently have we seen a resurgence in investments. I think a lot of people have taken up trading and investments in COVID times. But even now, there is a huge amount of potential that India can offer to all of these sectors. And we are very clear, we're very focused. We want to ensure growth in the fintech area. Fintech, I think, is, and collectively, the government believes is the future of this sector. We have a lot of attention on this. In fact, I know there are very regular meetings and outcomes of ensuring that fintech sector grows and continues to impact and change the way the sector looks at doing business. No, but with this, I conclude my remarks. Thank you, ma'am. Thank you, Sunit.
Thank you.
I had, during the course of our 2 days of discussions, a couple of things came across, and I thought, besides the fact that you interface with prospective investors, since you also act as a policy conduit,
yes,
where in the official system, I thought I might just present 2 or 3 points. Number one is this whole concept of dispute resolution. There has been a perspective for long contracts or PPP contracts, or particularly in roads, power, and other infra areas, and even in EPC contracts. Whenever there are any long-standing contracts, there could be every possibility of some dispute.
Absolutely.
And today, for some reason, dispute resolution is taking time. And there has been a lot of debate on this. When Mr. Jaitley was around, he was trying to work on something on this and there was a legislative piece also that was being talked about.
Yes.
I think if that is one piece that is sort of fixed, it will reduce, your perception of doing business in India, ease of doing business. It probably bring down by 10 or 20 points,
Absolutely.
Because this whole issue that in India, dispute resolution takes a lot of time. And even if it happens, some department or somebody will appeal and go right up to Supreme Court. I mean, they won't accept an arbitration award, is something that we probably need to address. The second thing which came out just in the MSME sector also is that if you see some of the worst payment track record is actually various government departments. And there will be different union, then there are also states. And there could be a variety of reasons, but one of the reasons, and by the way, private sector, large corporates are equally responsible. And MSME sector, therefore, gets affected by this in a very, very bad way.
Yes, in a disproportionate way.
If there is, and in other parts of the world, there is this concept of Prompt Payment Act. That if there is a liability and I have given out a contract, and if there is an arbitration award, I am supposed to pay within X number of days, say 90 days or whatever is an appropriate period of time, or even give another 1 month grace. And if there is a dispute of not making the payment, people have to give an argued reason why they're not making the payment.
Yes.
So this discipline is a simple legislative discipline, but will ensure that the Indian working capital cycle problem that is there pervading in the entire economy will come into a lot of control. And I think this is another perspective that is there as a part of the fact that contracts are getting, shall we say, respected for what they are. I think that's the other perspective why your ease of doing business kind of thing is coming down. 2 other things which I would like to say is in Germany and in other different parts, industry information collation is actually part of the Chamber of Commerce responsibility.
Yes.
Each Chamber of Commerce in that area is given a certain area and said, you collect the following information and give. Here we have it with the MCA. Somehow or the other, there must be a lot of information, but the collation of that and maybe presenting it to foreign investors, because that's the hardest data that is available.
Correct.
And so if we can create a portal or something to ensure that information is easily available, this whole allegation that in India information is not easily available, true and reliable information not easily available, will get actually dispelled.
Okay.
And the last bit is actually on a debt index. There is this Morgan Stanley index, and we need to actually get into one of these global indices. And there is, I'm not getting into details, but government and RBI need to work together to actually ensure that we get into these indices, because I believe that if we do that, pure debt and debt kind of fund inflow would be about easily 10 to 20 billion dollars.
Absolutely.
Okay, and that's going to be another huge source. So with these 4 points, and I hope you can carry these points internally in your system, and those are the deliberations out of our 2 days of.
I can respond to a few if we have time, but otherwise.
I think let's keep it this way. I think
sure.
We can take it offline and we can discuss. And I'm sure if there are there's some action happened or happening, it's that much more better for the country. I think since you are Invest India has that role.
Yes.
And since you also have financial services background, I think it's interesting to see that you will be able to relate with these things far easily. Absolutely. So yeah, I think from our side, this is true. We would gift you a tree, plant a tree somewhere in your name. And
thank you so much.
Part of the IACC process. And over to you, Rajalakshmi.
Yeah. Thank you so much, Vivek.
Thank you, ma'am.
So glad you could accommodate some time and come for us.
Absolutely, ma'am. For you, it's always there.
I'm truly thankful to you, because throughout my 1 year of being president, Invest India has really helped me, at least gave me some insights of what is happening in various departments, and gave me courage to talk to our members. And I've shared a lot of information of whatever you have given. It's extremely useful to them. Can we have Trupti to give the tree to you? Trupti, are you bringing in? If it is not coming in, we are anyway sending it to you.
Yes, sorry, Vivek. We'll send it to you. There is some
that's
problem.
fine. That's fine. I know it's a late edition. I can completely understand.
Yeah. And can I request our Secretary General Kamal Vora to conclude the 2-day session, and thank you also. Kamal.
Oh, okay. Thanks, Raja. Good afternoon, all. And thus ends the second and final day of our conference on BFSI sector and how it can help India achieve $5 trillion economy by 2025. We have covered so many aspects in just 2 days. Experts have deliberated on status of stressed assets, bank, whether they are solution to India's stress assets, retail financing, wholesale banking, current challenges faced by the NBFCs, insurance, fintech, mutual fund, development in MSME sectors, and above all, there are 3 keynote speeches also. One from SBI chairman, one from Mr. Vivek Abraham, and one from Minister Anurag Thakur. So what more can anybody ask for? This is a historic moment, historic occasion for all of us in the Indo-American Chamber of Commerce. Just a moment. Yeah. I would like to extend our sincere gratitude to all the experts who took the time out of the busy schedule to participate and address all of us. I would like to compliment all my colleagues for hard work, commitment, and sacrifice to successfully complete the challenging programs we have committed ourselves to organizing. We do feel a sense of significant achievement and pride today. I would like to thank you, President Rao, for taking the leadership and bringing this to such a wonderful start of the annual convention. Finally, Mr. Sunit Maheshwari, We cannot thank you enough. You have done all the heavy lifting here, and the kind of speakers that you have identified, the events, the FC and Economic Times would be proud of. Thank you again, Mr. Maheshwari, and we will do it again. Thank you all for participating. And that's all from me.
Just want to add that I must thank you, Rajalakshmi ji, for being patient with, my whatever idiosyncrasies they may have been, and with Satya and Sagar, because they were bearing the brunt of, shall I say, my interface.
And sorry.
Can we see you, Satya?
I'm sorry, but yeah. No, sorry. I'm really sorry. There's one more thing, everybody else has got a tree. I think we have got a forest in your name. Trupti, can you show it to him, please?
And Satya, Trupti, Sagar, come online. At least let us all come together.
Yeah, all of you, please. Yes.
Come on to the camera, please. Can we see you?
I think I enjoyed doing this.
Satya, he's put in so much work. Every single connect of the speaker he has done. And Sagar is uploaded everything possible on everywhere. And Trupti is coordinating every single thing. Middle of the night, at 12 o'clock, 1 o'clock in the night, they were still messaging. I finally had to tell them, please sleep.
Yeah, I saw that interesting. Yeah. Before that, we was kind of interfacing till quite late in the evening many times.
So with everybody felt this is a very difficult task because too many speakers back to back, without any, interval. But then they took such a challenge. They've never done anything like this.
To be frank, I was a little apprehensive whether we could pull off.
Yeah.
In a virtual syndrome, there is an additional challenge, and then we could pull in so many things. But if I may mention, because it was virtual, we were able to get in a lot of speakers because they realized that they don't have to travel.
Exactly. Yes.
It saves them. So
but the vision to do so much is yours, and to take it up with some kind of some kind of courage is mine. And but actual work is all my team. They have put in all the work.
They work hard.
Big thanks goes to all of them. The trees for all of you, by the way. So, plus, of course, the forest for It's really a bountiful tree, Sunitji. It's really a bountiful tree.
Yeah, there it is.
Thank you so much. Thank you so much, Sunitji.
But
you really made our IACC proud. Thank you so much for all your hard work.
Pleasure. Thanks.
Pleasure. So we can conclude this.
So Vivek ji, I think we also say
bye, Vivek.
Bye and thanks for coming.
I'll still bother you, Vivek. You're not going anywhere, but I'll still keep
okay. Thank you so much. It's been great.
Bye.
Bye.
Thanks, Kamal. Thanks for the vote of thanks.